better placed than the rest of the world in the middle of a global tariff war. That is probably what you're going to be seeing in the markets today. Pull up the implied. You're looking like you'll open gap up nearly 300 points in the green, 400 points in the green right now. So you have to look at what's happening around the world, not press the panic button, and assess what the situation is like for India. And that is what we're going to try and help you do. Now, why am I saying India is better placed? For one, tariffs on India are lesser than China. Let's just start there. China has come back and said that they're going to impose 34% tariffs on the US. Trump says he will impose 50% tariffs on China. China now says we'll fight it to the end. What does that mean? That means manufacturing could move to India. There's a Wall Street Journal piece that has come out last evening saying that Apple is seriously considering shifting a large chunk of its manufacturing to India from China. Watch out for that space. Secondly, negotiations with the United States for a bilateral trade agreement. You'll hear this term, BTA, again and again next few days. Those are on right now, and that's the end game. Remember, all of these tariffs come into place on the 9th of April. Can we strike a deal before that? On the other hand, lower crude prices, favorable to India. You've already seen the Indian government move to bump up coffers ahead of that with excise duty increases, but lower crude prices good for the Indian economy. The tax relief announced in the budget for the middle class kicks in this quarter. It will boost consumption. That is a positive, and so far, no change yet to India's GDP outlook. So all in all, Alex, important to remember that relatively, we are not in a bad position.
And that seemed to have been reflected yesterday. Of course, yes, you saw selling across the board, Tamanna. But if we look at Asian markets and the way they behaved, something like a Hang Seng dropping, and I wrote this down, the most since, I think, 35 years? The second most in 35 years, certainly the most in this century. And you had everything from Hang Seng to Shanghai dropping like a falling rock, that is caught up with gravity. And so in that context, the kind of buying that you saw towards the end of the session and domestic institutions, of course, we'll talk about that in more detail because some interesting data coming through there as well, that in March they may not have deployed, but they seem to be deploying quite significantly now.
So meanwhile, just the setup of what has been happening overnight, and that's important. US stock futures is what I'm going to talk about first because the Dow futures are about 700 points up right now. So that kind of mood and change is important. Some volatility, I can see the S&P futures about 1.5% up. Meanwhile, in overnight trade, US markets have ended mixed after a roller coaster of a trading day. Highest trading volumes in 18 years were clocked in US equities. That's how volatile it was. The Dow has ended 349 points in the red after a swing of over 2,500 points through the session. I mean, it's gone from 1,700 points in the red to, ending at about 349 points in the red. Now, what has happened? A fake social media post circulated about 8:30 India time, that tariffs will be paused for 90 days, and that caused markets to rise before the White House came out and clarified that this is not the case. The US 10-year, meanwhile, has risen to 4.2 as expectations of a rate cut to boost a weak economy are growing. Oil prices have begun some recovery after their drubbing. Brent is at the $75 mark. You're seeing even gold prices cool off a bit as the dollar gets stronger. Let's look at Asian markets this morning, and here you are seeing a bit of a boost for Asian markets this morning. The Shanghai about 0.5% up. I want to pull up the Nikkei if we can, because that's really the story with the Nikkei at one point opened 7% up. So why is there now this green? That's because tariff negotiations are beginning. There is now a sense that before the 9th April date, there will be some negotiations. That's why you're seeing 430 points up on the Nifty. The European Union, for example, has proposed a 0-for-0 tariff with the United States. Japan has sent a team to the US to negotiate tariffs, says Trump. And reports suggest that the US threat to escalate tariffs on China is a mistake. On top of a mistake, China will never accept it. So there's some rhetoric coming only from China. Meanwhile, listen to what Trump is saying. Even while he's talking about China, he's saying that negotiations have begun around the world.
A pause in tariffs to allow for negotiations. Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way.
Okay, so take this on a minute-to-minute basis because, well, we don't think that Donald Trump sleeps very much, and as long as he's awake, there's a possibility that he will make a statement that will rock the international markets. For now, though, as we've stressed again and again, it looks like it's going to be gap up and positive trading for Indian equities. Let's get in touch with Richard Yetsenga, who's joining us this morning, Chief Economist at ANZ Group. And there's a lot to unpack with you today, Richard, because there's so much that has happened over the past couple of weeks. I'm just trying to understand, seemingly people are getting to the negotiating table, everyone except China at this stage, seemingly. So what does that mean? Does it mean that in the coming weeks there could be a semblance of normalcy that returns, or is that too far to predict?
I don't think we can say that with any confidence yet. Look, I don't even know that it's everyone but China. How many negotiators does the US have? Because they need to have a conga line to deal with the scale of interest, obviously, that other countries would have in trying to find a way through what's going on. So it seems like we're stuck with these tariffs for the meantime. And if there are deals, my guess would be they still leave the world a more difficult place than it was before the tariffs were announced. And I think that's probably the key point. This doesn't look like a crisis that we can get a policy response for, which just takes the world back to where it used to be. We get some monetary response or some fiscal response, and markets have come off, and then they start to go back up again. And of course, it's not just equities. This is credit, foreign exchange, commodities. Everything is very highly correlated. It seems it's much more deep-seated than that. Tariffs are pretty toxic things. Once you unleash them, it's very difficult to get them all back in the jar.
Like the Pandora's box, if you can call it that. Just a quick follow-up then, Richard, based on what we saw yesterday, you pointed out credit, and I want to refer to the bond yields in the US also spiking at the long end. And what are we looking at as a response for investors at this stage globally? Is it primarily risk off? Do you wait for the dust to settle?
Look, I think markets have been responding in a way that suggests it's very much risk off. Growth-sensitive assets have been weaker. Commodities, credit, equities, and differentiation obviously has been modest at best. And then assets that are perceived to be safe havens has done quite well. I mean, I know you spoke about the rise in long-end yields. I think that was partly related to the general move we saw in markets because bond yields in the US and other advanced economies generally are lower. Anti-risk currencies are a little bit stronger. Markets are pricing interest rate cuts. It doesn't strike me we're seeing any real signs of kind of allocation into risk assets. It still seems to be allocation out, which I think makes sense. We've had a very extended bear market since the dark days of 2020. It's been interrupted a few times, but obviously nothing on this scale. So this is the first interruption really in 5 years. It just seems like we've dragged a lot of, I don't want to use the term unkindly, but a lot of the lazy money into markets to chase returns. And so I think the path of least resistance still, given the tariff backdrop we've got, is for the market environment to stay quite difficult. I think, what's happened the last 24 hours is probably the eye of the cyclone rather than us seeing the back of it.
Richard, hi, good morning. Tamanna here. I'm just looking at what markets are doing right now as we speak, and the Dow futures in the green, You have Asia in the green. There is clearly some optimism here. Dow futures between 1.5% to 2% up. Nikkei is about 6.5% up. Is there a sense that before April 9th, there are many deals to cut? And I know you refer to a Congo line of negotiators that will be required. Let chuckles in the studio as well. But having said that, Trump is showing the propensity to cut deals. There could be a turnaround in the next 48 hours.
Look, I don't think that's new from Trump, obviously. I mean, he says he's the deal maker. He's written books about it. He's run TV shows on it. So I don't think we should be surprised by that. The question is, can other economies really deliver what Trump wants? For instance, he has a particular issue with value-added taxes. The way they're applied in almost every economy that has them, including Australia, is that if you export, you get rebates for value-added taxes. The US doesn't run a value-added tax. Trump says that's an unfair trade advantage. I don't think we're going to see 100 economies replace their value-added taxes or redo the way they're applied. So the path of least resistance to some degree is the deals. The other path of least resistance is Trump and his team start to see what this is doing to the economy, and the data will show that this is incredibly disruptive. So potentially there's room for some movement on both sides, but that's not a 1 or 2 day story. That will take us some time.
Let me talk about emerging markets then, Richard. I mean, we have this working theory here that India is better placed. And why should I say working theory? I mean, domestic institutional investors have poured in 12,000 crores yesterday at one of the worst days in the Indian markets since a long time. Your implied is looking up in the green. Would you say that India, in the emerging economy basket, is better placed vis-a-vis China, which now we don't even know where those tariffs are going to go? It's 34% and now 50% in front of it from the US.
I think that's a fair judgment to make. It does, and I've used the word seem a lot. I'm conscious of that, but it does seem like China has a particular challenge in front of it, convincing the US that there's something that it can deliver. It doesn't look like there's an easy path forwards for China to offset these tariffs or negotiate them away, whereas just the language around India seems much friendlier. India also a more closed economy, although it is still very open. The export to GDP ratio is above 20%. Let's not pretend India is an island. It certainly is not. Look, and the other thing I would say is, this is, if I use one measure for the US, the applied tariff rate on its imports, what's been announced effectively takes the US back 100 years in terms of globalization from a pure trade and tariff perspective. So India may be in the biggest lifeboat, but it's still in the middle of the ocean with the rest of us. I don't think we should lose sight of how damaging this will be to the global economy if these tariffs are sustained at the rates they've been announced.
So, Richard, just one last point, and I'm shifting focus back to the US economy. I was reading a note that said Goldman Sachs now predicting a 45% chance of a US recession, and I know that a lot of these projections might just go up in the air. But a separate note talking about the fact that the US equity markets are not yet pricing in that recession, because if you look at the S&P 500 PE, they're still in multiples of well over the long period average. And it's at 20 right now, despite a 17% fall from the peak. The lowest, of course, is 8 during 1982, and the average for the last 30 years has been 17. And so from that perspective, that exceptionalism of the US stock market seems to have gone out of the window. Where do global investors invest if we're talking about risk assets and a return to risk?
Well, yeah, there's a couple of interesting points there. In terms of US exceptionalism, I do agree that the policy set up in the US is eroding US exceptionalism. The US has had a very strong bull run relative to other economies, both from a growth perspective, a returns perspective, and an asset inflation perspective. And the policy package being delivered by the US, I think, is eroding that. The real challenge with the recession call is it's not clear what's driving the policy process. In a kind of normal crisis, and I use that not trying to be tongue-in-cheek, but let's think about the crises in my career: Asian crisis, technology bust, even the COVID pandemic. people in the system, their intent was not to create a problem, and if a problem arose, they worked hard to try and find responses to it. Whereas it's not clear that's what we're working with in the US. It seems to be it's tariffs, US industrialization, and whatever the cost of that is a cost worth bearing. Now, I don't think that is right. I think they will start to recognise the cost of this are much larger than they thought, but I can't tell you when that penny's going to hit the well. And that is why I think these recession calls with probabilities applied is what you're going to see much more of. If the tariffs are sustained at current rates, the global economy is going to have its most difficult period since the pandemic. We can be sure about that.
On that note, thanks so much, Richard, for joining in. I guess the focus then shifts to domestic.
Just one small point there, and of course we thank Richard.
Yeah.
But the point that Nilesh Shah of Envision Capital was making yesterday, that while there are parallels being drawn to the pandemic as well, the difference is that there was concerted global central banking action against the pandemic. This time around, it is anything but that, because we do not have a coordinated global stage fighting a unanimous enemy. It is completely to each their own, and therefore the recovery, while in the pandemic was V-shaped, despite the steep fall, a V-shaped recovery, this time around that may not be the case. So that is such a telling difference, even though the price drops may seem similar.
Are you saying the virus was easier to handle and predict?
For the markets, it was a swift fall down and a recovery.
No, but it's telling on all fronts that a virus was, united the world, but this global war will end up fragmenting the world.
Exactly.
Yeah.
And which is why the recovery may not be as swift.
Because
if at all, if this continues.
And to drive home the point of negotiations as well, you will notice that the smaller partners, the smaller countries will toe the line. The larger countries are possibly China.
I think EU coming and saying 0 for 0 is a huge negotiating tactic.
Yeah.
That's definitely not a small partner by any level of the day. And the way China works is what they say and what they do are usually two different things. There are back channel talks probably on right now. You'll see perhaps a different outcome.
Interesting.
This 34 to 50 is something for domestic audiences in both large nations.
And I hope that sense prevails. And that's I guess that's really the call. Based on what you saw overnight, just the mention, even though it was fake, the mention of the possibility that there could be a 90-day respite where things get spoken over turned the equity markets in the US positive. But let's talk about what happened in trade yesterday. And we were referring to the flows data, and this is very telling because we'll bring you data on this in just a bit, but mutual funds have deployed and how seemingly in trade yesterday 12,122 crore rupees on a net basis of buying by domestic institutions, more than making up for the selling by foreign institutions, which seems to have been across the board, across markets in trade yesterday. Now, it did see broad-based selling, the large street, but this was in line with the global risk-off sentiment. Advanced decline ratio was nearly 1:17, favoring the declines. And even in companies that are insulated from tariffs faced selling pressure yesterday. The volatility index, or the VIX, climbed as much as 65.7% to 22.8 yesterday. But you had strong mutual fund buying that pushed the market sharply off the lows. In fact, the Nifty 50 gained as much as 2% from the intraday low of 21,743. We, in fact, ended very close to 22,200. And at that point, at the lowest point, we were down 5% on the benchmark Nifty 50. So you heard technical analysts right at the start yesterday, before the start of trade, talking about 22,000 as a key level to close above, and they would take that. Well, that took place, and how. Broader markets also gained, and they gained even more from the session low. The benchmark Nifty 50 still ended, of course, with cuts of about 3.2%. Now, IT was not the worst impacted. Though it started off as one of the deep selling pockets, it recovered as much as 5.7% from the low point of the day to end with cuts of about 2.5%. You had banks that were also not spared from the selling, with private sector banks seeing the most of the selling, and that banking pack ended 3% lower. Remember, we're heading into a policy outcome for the Reserve Bank of India tomorrow, and that could be a sector that you should watch out for very closely. I'm sure Neeraj will point this out. But in the sectors, you had a lot of cuts across the board, red across the screen, but metals were the worst hit. Realty also getting hammered in trade yesterday, 5.7%. Defense down about 4.6%. Banks, as much as I mentioned, 3.2%. I just very quickly, Neeraj, want to mention this. I know that you spoke about this yesterday. You briefly mentioned the deployment by mutual funds in the equity markets in the month of March, and that number stood at 13,458. Already in the month of April, they have deployed, as of the 3rd of April, 5,428. And you add what they put in yesterday. It is probably, on a provisional basis, it is probably already more than they did in March. Now, this is the lowest figure, and this is important to note, since June of 2023. And this, by the way, this figure includes ETF flows as well. So if you think about it, if you add the fact that you had a significant amount of cash that mutual funds were holding on to in the actively managed schemes, and I asked my colleague to pull this up, the Feb cash was at 1.39 lakh crore versus 1.36 lakh crore in Jan for actively managed schemes, X of equity-linked savings schemes. And what this means is that there is a considerable amount of cash that still holds. I was speaking to a few industry players, and seemingly across the board, cash levels have gone up. You will see that data come through in the fact sheets that will be compiled in the next couple of days, and we will bring that data as well.
I'm wondering if there's a seasonal aspect to this. Usually in month end you would see greater inflows, and then, compared to that.
But no,
not for the equity market.
Yeah, not for the market. Also, I think there was a typo, because I don't think what Alex was trying to say that there is a weak demand for mutual funds.
No,
there is enough demand for mutual funds. The mutual funds deployment,
that's what I was saying,
capital into markets was weak. So we'll correct the typo.
The powder
as well.
is being kept.
Yeah, the powder is being kept.
So if anything, you look at the data, right? If you talk about March, February, the deployment was 47,550 crore rupees. The month before that, January, was 55,000 crore rupees. March was when equities actually rebounded. So some of the deployment that they did in February and January played out.
Rang lai.
Exactly, in March.
Yeah, but just wanted to make sure that we don't convey the wrong information. Alex was not trying to say that the demand for mutual funds is weak. It's just that mutual funds deployment into markets in the month of March was weak. April seemingly turning out okay, so let's hope that continues. Very quickly, the trade set up. So I think it's very easy to call, it's easier to call a relief bounce, but very difficult to call it a trend. I mean, nobody out, I think, can put that out as well. In fact, most global notes, I was reading the HSBC note this morning, and they are saying not just for India, but for various Asian economies, that domestic facing sectors should be at the forefront, reduce the exposure to globally linked sectors. Now, Tamanna will talk about this in detail, but you will see OMC is likely showing a bounce back from yesterday's late hour sell-off. So keep an eye out for oil marketing companies in particular, not the entire oil and gas space. And the only point is IT is down 30% now from the December peak, but most people are saying that sluggishness is still not ruled out because it is a globally linked sector and particularly linked to the US. So keep an eye out for that as well. Now, should we take it to the derivative cues to try and understand?
Just want to add some details as well before we get to the derivatives queue, because just look at a few more cues that you need to watch before the opening. Despite a 2% recovery from the day's low, the market is remaining under pressure. Weakening technical indicators and global concerns will be at the fore. Now, even if you are seeing a pop in the morning, you have to look at what the direction looks like. There was buying interest to the swing low yesterday, 21,743, and the market's direction depends on key support and resistance levels coming in. A decisive break below these levels could be a further downside movement. But look at the support coming in. There's a deeper support zone near 21,700, where the market found support multiple times yesterday. On the upside, resistance is observed in the 22,350 to 22,550 range. A clear breakout above this level may bring in buying momentum, and that's what you need to watch out for. Nifty and Bank Nifty are currently in a downtrend with key immediate support at 22,000 and 50,000 respectively. So which is why we need to add all of this information to give a clearer picture to our viewers. Puneet, on the derivative side as well, we're looking at a gap up, but the sustenance is key, isn't it?
Well, definitely. And we had that gap down yesterday, and multiple levels broken in the session yesterday, the highest intraday fall since March 23rd or 2020. But essentially on the Nifty, while we are seeing a gap up opening, it'll be important to see where we can sustain that. The next support level is somewhere around 22,400 as of now. And that's of course a steep jump from the 21,700 levels that we saw yesterday, which was a key support again, just to add some positive aspect to yesterday's trade. Now, of course, we've seen an increase in open interest, but that couldn't be subjective. That could be subjective essentially for both the Nifty as well as the Bank Nifty as well. But I just want to put out the Nifty open interest distribution, both for calls as well as puts, and it was a very interesting trend. We saw the maximum put option interest yesterday at 20,650. Now, this is the maximum put option interest that we've seen yesterday, and that might be a one-off if that happens, but it's essentially one there. We've seen a lot of put build up at the 22,000 level, of course, which was yesterday as we look at it. While on the call side, we are still at 25,400, but there won't be any new call options initiated at this level. 22,700 is the other level that you need to watch out for in terms of the calls aspect in that aspect. Now, open interest gainers and losers, while it is back-tested data, it is historical data to look at. If we can pull that up as well going forward. For stocks specifically, the open interest gainers and losers, what I'm talking about, we've seen short build up across stocks yesterday. It'll be important to see if some of them sustain. Siemens yesterday, of course, was because of the demerger aspect, but we've seen also long unwindings across the open interest losers as well yesterday. Of course, the auto space was definitely in focus. And finally, the delivery data. Now, in terms of delivery data, what you need to watch out for is that it was very low in terms of just 30 to almost like 40% of delivery data, and all stocks were lower, which essentially would mean that it was a higher intraday movement yesterday, and it could not signify that we are having a change in terms of perception of these stocks, at least in trade today. But definitely one of the key levels to watch out for, at least on the Nifty, will be the 22,400 mark.
What's going to be key over the next few hours and days is also geopolitical news coming in. So, for example, this has been put out right now by the White House press page, saying the Secretary of State Mark Rubio has spoken with the Indian External Affairs Minister S. Jaishankar. They've affirmed strength of the strategic partnership, discussed opportunities for collaboration, and this line is important. They also discussed U.S. reciprocal tariffs on India and how to make progress towards a fair and balanced trade relationship. India is at the negotiating table, has been on the negotiating table since the last several days. We've gotten there first, which is why you would hope that there would be a clearer outcome before others. Now, let's talk about stocks this morning, and let me start with what's on my watch list. I'm starting with OMCs, and this decision came yesterday around closing time as well, where there was an excise duty hike announced as well as a hike in cooking fuel prices, LPG. So here's what Morgan Stanley is saying on OMCs. They're saying India's cooking fuel price hike and gasoline diesel tax increases are bullish for fuel retailers. OMCs are among the best positioned globally to benefit in a well-supplied oil market. Taxes help maintain transport fuel prices stability while reducing overhang from under-recoveries on cooking gas. HPCL is their key overweight. Citi, meanwhile, says governments utilizes oil price fall to compensate OMCs for LPG. Remember, there were under-recoveries in the subsidies that are given to all of these companies, oil marketing companies on LPG cylinders. So they've used this fall very quickly and strategically to make up that balance. There's still awaiting clarity on if and to what extent companies will be able to account for this compensation. Risk to FY26 estimated earnings would arise if crude were to go back to $75 per barrel levels, which frankly right now most people are saying is unlikely because a global economic slowdown is a persistent story even before the Trump tariffs. But listen in just very quickly to what Hardeep Singh, the Union Minister for Petroleum, said yesterday.
Am I preparing for headwinds in case some global thing? Answer is no. Answer is no. It's as simple as that. We are the 2 rupees excise duty has been imposed by the finance ministry. It will not be passed on to the consumer. It will come into the general kitty and it will be utilized for reimbursing the LPG losses of the same company. So far as whether they have the headroom Whether we're compounding, I don't think the OMCs have any difficulty in absorbing that 2 rupees excise. We are the only country in the world where prices over a 3-year reference period on petrol and diesel have actually come down. We are the lowest priced country in the world for domestic cooking fuel.
Yeah, I mean, a lot of chatter right now that if global prices are falling, instead of increasing excise duties, can that be passed on to consumers at the pump? But, well, that's a different story. All right, Titan also on my list. Their updates, Q4 updates have come in. Gold jewelry growth is strong. The studded mix has seen some decline. The company has reported a 25% growth Q4 year on year. That's the breakup for Carrot Lane, TCL and others. The jewelry business has grown. But even though it is a thumbs up today because of the numbers, remember that the growth has come on the back of gold price growth. And at the lower end, sales have fallen. So that's something to watch out for, especially in the studded mix as far as Titan Tanishq is concerned. Watches and wearables is doing decent. They've recorded another strong quarter. Eye care has also grown 18% year on year, and e-commerce is fueling that. So that's important to remember. Emerging businesses are doing okay, and Carrot Lane has been steady, registered about a 22% year on year growth. Why is it a thumbs up today? Look at what some of your brokerage is also saying. Citi is maintaining a neutral with a target price of 3550. They like the Q4 update. They're saying the jewelry growth is strong. Macquarie, meanwhile, I found the Macquarie note actually more interesting. They've said they've maintained an outperform with a target price of 4,000 rupees for Titan. They're saying healthy jewelry sales growth, sales above estimates, and they expect 20% standalone EBITDA growth in Q4. It's encouraging and enhances confidence in their EPS estimates. Morgan Stanley is also fairly bullish. They've maintained an overweight target price 3876. They're saying the headline is strong, but internals are mixed as far as Titan is concerned. Very quickly, third stock on my radar, BEL. They've got an order worth 2,210 crores for electronic warfare from Indian Air Force. And so far, 2,803 crores in FY26 already. The government has also signed a 2,385 crore with them for warfare suites and helicopter kits. So BEL in focus maybe because of the order win play.
The first stock on my list, PN Gargil, I have to say that it's a thumbs down conditionally. It could well be a neutral because if you think about it, the reason that I'm giving it a thumbs down is this one number that stands out. On the top of their release that they sent to the exchanges for the quarterly update for the fourth quarter, they've said that consolidated revenue has increased 5.1% on year in the fourth quarter. But then they've gone on to stipulate how much each of their segments have done, and that looks quite positive. If you look at it, because look at what they're saying. They're saying retail segment, which accounts for over 80% of revenue, increased as much as 50%. E-commerce accounting for 5.7% of revenue has risen 244% or thereabouts. And on Gudi Padwa, which we spoke about briefly with regard to an automaker, they've seen 123.5 crore worth of sales, and that was 40% higher on a year-on-year basis. Even same-store sales growth, which is a key metric, considering that you want to account for the increase in the value on account of gold price increases, that has increased about 26% in the quarter gone by. So just that one figure is the fly in the ointment really for PN Gadgil, and I guess we'll have to wait for some clarity from the management as to why, despite all of that, you have a consolidated revenue increase of only 5% in the quarter. IndusInd Bank is a thumbs down. There's a lot, of course, that is playing with this company or this bank, but you have Morgan Stanley that has come in and said that they have maintained an equal rating, but they've cut their target price very dramatically by over 30%. In fact, close to 32%. It currently stands at 755 rupees, imply a very small upside from the current market price. What they're saying is that they're building in the weaker earnings over the next few years. And they're also saying that they factor the large treasury related impact into the FY25 EPS estimate. the book value per share forecast is fallen by 4% for this current financial year, as well as 5% for FY27. That's the next financial year. And they're also raising the cost of equity assumptions amid the increased uncertainty around the leadership and strategy for this particular bank. So expect there to be more pain for IndusInd Bank.
Okay, just a couple of stocks from mine. I thought Airtel stood out simply because yesterday when the markets opened, that was that one stock which was tinkering in the green and then kind of slipped. But Macquarie Note says that it's the best flight to safety large cap holding for anybody, and that their analysis seems to suggest that they have high visibility on India ROIC for that business. So an eye out for that. An eye out for FMCG stocks, fairly decent delivery based buying. Godrej Consumer, a case in point, 42.9% mark for delivery on a day when it was in the green, and there were very few stocks in the green yesterday, as we all know. So that was interesting. So keep an eye out for that. And I dare say, what was just very interesting was the late recovery in information technology yesterday, from being 8% down to about 3%. Today the market's being a bit more benign. Should be interesting to see if there is some activity out there.
I was thinking even banks, because they
ahead of the rate decision.
And you saw Kotak that was down over 4%. You saw HDFC Bank that got hit. ICICI Bank was down quite considerably. Nifty Bank as a whole down 3% ahead of a
Can I say this 10th holiday, even though we love market holidays in the middle week, the timing is so off to have markets shut on the 10th. You're going to have that rate policy. I don't know what is going to... 9th is when the tariffs kick in. So you'll see the impact 10th morning. And to have no opportunity to trade whatever is going to happen either way, it's going to make people jittery.
Also TCS results and commentary more importantly.
So that at least, 10th we can, 11th we can react to that. So
it's going to be an interesting end to the week.
You bet.
Don't forget to watch NDTV Profit on Friday, certainly. Not just Friday, of course, through the week, but particularly on Friday.
We're going to be covering TCS as well. Okay, on our watch list this morning, let's just recap that for you very quickly. Bharat Electronics, they've won 2,385 crore worth of orders from the Indian government. Titan has given a business update which was quite positive, with 25% year-on-year growth in Q4. Goldman Sachs has upgraded Axis Bank and PNB Housing. Watch out for those. Brigade has signed a JDA for a 10-acre residential plot. That's a joint development agreement. IGL and MGL also in focus after that LPG price hike by 50 rupees a cylinder.
Right, there's also Blue Star and Voltas. MK is initiated with a buy rating on those stocks, and in fact, Godrej Properties as well has exceeded FY25 booking guidance. And that is a thumbs up, and that's certainly something to watch out for. For a pack, by the way, that saw quite a bit of selling as well yesterday, the real estate pack. OMC is in focus. Excise duty hike has come through to the extent of 2 rupees per litre. Initially, expectations are that they will absorb that. Shobha has missed its FY25 sales guidance and is a thumbs down. P N Gadgil, the top line growth is a bit of a question mark at this stage. 5% or so is what they've reported.
Okay, before we get to our guests, can we just pull up the implied open and just show what is it that we are likely to do about 22 minutes from the pre-open rates? Well, a strong bounce back. Amardev Singh of Angel One to try and analyze, should one play this bounce on the technicals and the derivative side? Sunny Agarwal of SBI Caps on the fundamentals. Gentlemen, both of you, thanks for joining in. Amar, interesting morning today. Would you play the bounce after the gap up of 350 points, or would you wait for some levels to be breached?
Very good morning, and thank you for having me on the show. So I would say that maybe to a certain extent, I wouldn't say that the worst is over, but yes, definitely it can be a very good buying opportunity on any dip, because Nifty's held on to the 22,000 level quite well yesterday. It did breach the 4th March low, but again closed strong. And if you see across the board, most of the stocks, including FMCG and IT and many stocks, from the lows of the day, they have managed to close higher. So that clearly shows that there is some buying interest which has happened. And the tariff fears, to a certain extent, the retaliation by China and all that, that market seems to have now slowly digested. So I would say the lower levels, definitely it's a buying opportunity, but one needs to remember that it's more of a trading play rather than anything else. If you ask me the levels, I would say any pullback towards 22,000, 100, 200, that can be a good buying zone on the upside. 22,400, 600, that's a shorting zone or a booking profit zone. So it's more of a range play, but yes, it is quite possible that we are very close to a bottom, because most of the charts of major stocks definitely points towards that. If you look at Reliance also, the way Reliance rallied from the lows, but it's too early to say that. But yes, if this continues and the low that we witnessed yesterday, if that's held, then we could witness some choppy trading sessions ahead, but more of buying on dips and selling on at resistance level. That's the way to go forward. One shouldn't expect a one-way rally. That's for sure.
Okay. Not a one-way rally. Actually, just one quick point, Amar, and couple up with your stock ideas as well. Would you play a bounce in let's say banks? Would you make a position ahead of the monetary policy tomorrow? It's the strongest sector per se. There is some event tomorrow. Would you trade the bank Nifty at all? And then, of course, give us your stock ideas too.
Yeah, I would say banks definitely. If you look at Nifty compared to Bank Nifty is anytime stronger there. So yes, I would be on the buying side in Bank Nifty. If you ask me about the levels, currently it's around the 50,000 odd mark. So it has got very strong support coming around the 49,600, 700 zone. Upside resistance is somewhere around the 51,000 mark. So yes, it's a buying on dip opportunity in the banking space. One bank I definitely like to talk about that's not mentioned in my list is Kotak Mahindra Bank. This is one stock one can look at. Yeah, it's there. So Kotak Mahindra Bank on any pullback can be a buying opportunity. Stop loss somewhere around 1977 for an upside target of 2125, because there are expectations that there could be some positive outcome in the RBI monetary policy. And the second stock is from the FMCG space, because what we are seeing in the FMCG space is that despite the sharp correction, FMCG stocks have bounced back and on significant volume. So ITC is one stock one can look at buying around the current levels for an upside target of short-term target of 423 with a stop loss of 391.
Okay. All right. So ITC and Kotak Mahindra Bank, we were talking about the banking back, and Kotak down about 4.4% in trade yesterday. Sunny, good morning to you, and thanks so much for joining us this morning. I'm just wondering whether you saw any or you see any opportunities based on what you saw yesterday, because everything got painted with the same brush, everything got beaten down, even the stocks that are very domestic focused and that are insulated from that perspective from global tariffs got beaten down. So from that perspective, what would you go out and buy on the fundamentals on the valuation side?
Yeah, thanks Alex for having me on the show, and good morning everyone. Yeah, I think yes, it makes sense to focus on domestic consumption stories rather than companies which are relying on export as one of the key revenue verticals. So I think we are bullish on obviously BFSI as a sector. We all know that RBI has been pumping liquidity in the system, and there is a lot of support in terms of rate cut. And then again in tomorrow's policy, we are also expecting some further step by RBI to boost the liquidity or cut the rate. So I think within banks, we would like to remain focused on frontline banks like ICICI Bank, HDFC Bank, where we have seen a very strong deposit growth this quarter as per the provisional update. Bank of Baroda, again, we have seen a decent provisional update, where we have seen advances growth of close to 13%. And in addition to that, domestic consumption stories, especially where we have seen a very decent December quarter. So companies like Imami, where we are expecting the December quarter performance to continue during the March quarter. Another story which we like is hotels. So Indian Hotel is the one stock where we have seen a deep cut yesterday. And at the same time, Bharti Airtel again fits the domestic consumption bill. In addition to that, companies which are dependent on government spending, so we would like to go ahead with BEL. So we have seen a decent correction in BEL in this carnage. So BEL, we feel the fair value of the business is close to 340 rupees. So BEL can be added in a medium to long term portfolio. And cement, which has not been doing well since last 1.5 to 2 years, there are some signs that cost has come off, and at the same time, there is a likelihood of price increase. So, a few cement names like Ultratech, JK Lakshmi, and JK Cement.
Okay. All right. So those are the fundamental picks that you have. There are a few stocks that stand out today, though, and you mentioned a couple of them already, Sunny, so I'm not going to ask you about them. I want to ask you instead about the jewelry companies that posted their Q4 updates. Titan is one of them, and seemingly a positive update, and it is a thumbs up as well, seemingly at this juncture. The other is PN Gadgil. I'm not sure if you looked at the quarterly update, but it was a little confusing for me because you had growth that they've reported in quite a few of their segments, retail in particular. 80% of their revenue, they say 50% growth there, same store sales growth at 26%, but the consolidated revenue is only up about 5%. Do you know why that is?
Yeah, I think that may be due to a focus of the company on a retail sales and a less reliance on the wholesale sales. So I think PN Gadgil has alluded this earlier also, wherein they are going to focus more on a retail business rather than wholesale. So I think wholesale would have degrown during this quarter, and hence we are seeing a console top line growing by only 5%. So I believe that during this quarter, company should post a decent margin expansion when the company report their audited number. So I think yes, overall it seems a positive development as far as PN Gadgil is concerned. Coming to Titan, I think if you look at a base quarter, so March quarter last year was a kind of a muted quarter for Titan. So on a low base, yes, definitely Titan has posted a very good set of growth as far as top line is concerned. But again, I would like to track the margin number over here. So if you look at last 2 quarters, the margins were under pressure for Titan on a jewelry side. So margins are something which will be keenly watched by the street during the audited results.
You know, Sunny, I'm wondering how you're feeling about OMCs and the entire oil and gas pack after the announcements yesterday when it comes to excise duty, LPG prices going up, a whole gamut of things that has happened. Are you positive OMCs right now, or this morning at least, plus crude prices falling on the other hand?
So again, I mean, at one point of time, it was very clear cut that FY26 is a year where OMCs are likely to post a very good set of number. But post this recent development, it seems that again those estimates were on higher side. But overall, if I see take a overall picture, I still feel that on the marketing side, OMCs will be still making a very good profit. So average, if you look at the average profit per liter is close to 3 to 4 rupees. And post this cut in the crude oil prices, I believe the number has moved about the double digit, close to 10 to 11 rupees. So maybe 2 rupees will be shaved off from that. But still, again, on low base of FY25, FY26 looks to be a good year in terms of earning growth. So I think I would like to bet my money on OMCs, and within all OMCs, HPCL is a preferred bet for us.
HPCL a preferred bet on the fundamentals. Amar, I'm just coming to you on the IT pack. I'm just wondering, of course, caution is the best part of valor here, especially ahead of earnings. And I guess to a certain extent that TCS number is going to be, as it usually is, a bellwether for the sector. But the kind of response that you saw from the lower levels yesterday, Amar, I'm just wondering if there are any opportunities that you see getting in at these levels, because there was quite a considerable amount of buying when the index as a whole dropped close to 8%.
Yeah, I would say that markets definitely seem to have factored in the Trump tariff effect to a very great extent. So there would be some retaliation, but now it could be, I would see that it could be more of reconciliation rather than retaliation, because what countries have also understood very well that they will have to negotiate hard, and they'll also have to play fair wherever possible. So I think that works to the advantage of the US. And secondly, if you look at the IT stocks, I would say across the board, be the large cap, mid cap, small cap, the likes of TCS have corrected by almost close to, if you see, roughly around 30% or so from the highs. So that clearly shows that there could be buying interest. And also, if you go back and look at the charts of most of these large caps, including TCS, you see that somewhere they're very strongly supported around the 3,000 level, because earlier also in September of 22 and December of 22, TCS had made a low somewhere around 29. 53,000 levels, and from there we have witnessed a rally. So that's a strong support. And also, as you rightly said, that yesterday, despite the market significant correction, most of the IT stocks have closed in the green and very strong from the lows of the day, though. So I would say that yes, one should keep a close watch on the IT space, and rupees also to a certain extent now trading in a range between 85 and 86.50. So that also is more or less is there, but we need to be, yes, definitely slightly cautious. But I would say one should start looking at IT space for investing, no doubt, and large caps definitely.
Okay, yeah, just quickly, Amar, I want to close the loop on the question on OMCs that I asked Sunny as well. Are you buying anything today, or do you think anything worth buying?
Amongst the OMC, what we are seeing is that they are more or less range. It's more of a range play. So if you have to buy IOCs, one can look at. But again, it's a range between 120, 140. So that's a range one needs to look at, because only above 140 you can expect some rally. And that's what I've seen in most of the OMCs, be it the BPCL or HPCL. So it's more of a range play in most of these OMCs as of now.
Okay, just stay on with us, because you know what's interesting right now is the views on India's strategy, and there's a whole host of notes talking about what the India strategy should be. Harsh has put it all together, and I think the overwhelming message, Harsh, is that the growth path remains intact.
Absolutely, that seems to be the underlying and that seems to be the consensus as well. Let's first pull up what Macquarie is sensing with regard to this one. They're saying, of course, this is a tough pill to swallow. There's very little place to run or hide. They are therefore swapping 3 global facing names in their India portfolio with something which is relatively more insulated on the domestic front. I'm going to start off with a Bharti Airtel. These are reasons why they believe and why they are positive with regard to Bharti Airtel. ROIC visibility to go towards that 20%, currently at 10% by FY28. Ultratech Cement is the other one. Within the cement pack, they believe price hikes is the key trigger along with secular demand growth. And last off, they have GAIL, where they believe that a 10 to 30% hike in transmission tariffs by June could well be the trigger for a GAIL. Again, inward facing. What are they avoiding completely at this point? A Sun Pharma, where they believe volatility is high given the US exposure. They also believe that Tata Motors, there's increased uncertainty, and they're also saying Wipro is now out of their portfolio currently. So these are the deletions that have happened in their portfolio. Now, in terms of Motilal Oswal, if we're looking at, they believe that things are uncertain. There are many possibilities. Friendly actions on the policy front could help calm things down, is what they are saying. India relatively less affected than peers, and company earnings in Q4 have largely, or rather will largely stay the same. India's policymakers have taken steps to boost the economy in Q4. These steps and stronger basics give hope, is what they are saying. And over time, India looks good because of its own strength. That's what they are saying. What are they liking? They're overweight BFSI, IT, industrials, healthcare and telecom. They're underweight on oil and gas, cement, automobiles, real estate and metals. That's what they're not liking. Their model portfolio, they're liking HDFC Bank, Kotak Bank within financials, TCS, Tech Mahindra within IT, Titan, Trent, Indian Hotels, Page, HUL within consumer. They're liking L&T, ABB, Dixon Tech and Keynes Tech within the IT, within the tech space, and Dr. Agarwal's healthcare within the healthcare space. So that's kind of rounding it off. Last off, Morgan Stanley, they believe that they expect Indian equities to be closer to bear case than bull case in 2025. Domestic growth could be on the mend given policy shifts. They're also saying that India's trade deal, and this is very, very important, more likely than not, may take time but will happen, is what they are saying, more likely than not. They are expecting a favorable policy on the 9th of April And in terms of flows, they believe retail participation is structural and not opportunistic, and FPI equity positioning is at its weakest ever since 2000, making a good case that India may just be well placed and not as badly placed as peer markets.
And this is a case that a lot of people are making based on the expectation that there will be an improvement in several metrics heading into the new financial year, which has already begun. I'm curious, Sunny, what you make of the play on cement, because a lot of people seem to be talking about this. The price increases that have already taken place bode well for the space going forward, and Q4 might actually already see an improvement in earnings. So what is your view there, and what would you be buying?
Yes, sir, definitely, Alex. I think if you look at September quarter and December quarter, those were the two very muted quarter as far as the entire cement industry is concerned. So even on EBITDA per ton basis, I think the cement industry right now is grappling with a kind of 2-year low EBITDA per ton metric. So I feel post the recent price hike coupled with a decent 6 to 7% kind of volume growth for an industry, I think all the players are likely to report close to 100 to 200 rupees bump up in EBITDA per ton for fourth quarter. And the same momentum is likely to continue in FY26. On the top of that, the recent correction in the coal prices again augurs well in terms of cost saving for all the cement players. So I think again trading at a reasonable valuation was a kind of underperforming sector since last 4 to 6 quarter. So again, our topic here would be JK Lakshmi Cement, which is under our coverage. So JK Lakshmi is our topic. On a regional play, we like a Star Cement, which is a northeast based player where we have seen recently Ultratech buying a 10% strategic stake in that company, so Star Cement. And among the frontline play, Ultratech, where we have seen because of the its own organic as well as inorganic capacity expansion. So that will become a kind of close to 25 to 30% of the industry market share in terms of capacity to Ultratech. And Ambuja, again a similar story playing out in Ambuja, where we are seeing an organic as well as inorganic growth in terms of capacity.
All right, so that's the comprehensive view on the cement space and the fundamentals. Ahmad, I understand that you have to leave us this morning, but thanks so much for joining us and for giving us the perspective you did. We have a lot of stocks to talk about, and this is going to be an exciting session, particularly because there's going to be green on the screen, and we will tell you all about that after a very short break. Do stay tuned.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th,
right, back with India Market Open right here on NDTV Profit. In a minute from now, or less than a minute from now, we'll of course get in the first of the pre-open rates. And the reason why all of us are so happy to talk about the pre-open rates today is because we will have green on the screen. The implied open, 375 points strong. The question is, will this last? And I think that will be the key one. Now, here, okay, let's just, these rates don't mean anything because 908 is more important. But because these are such important times, let's just mark what the first tick on the pre-open is looking like as well. Actually it won't be 3% really. Very likely 1.5% or 2% at best. But still, this is good to see. Good to see the green on the screen. Now, Sunny, I have a question, and which is on IT. Yesterday, when that index was down 8% and a lot of the stocks were down 10%, there was buying seen. The stocks recovered from the lows. Assuming that they kind of open flattish to marginally higher today, with a 30% dip from the top, is it valuable enough on the valuation front, or would you believe that the multiples could still get crunched a little bit for IT, large cap or mid cap? And which stocks should one focus on?
Yeah, so I think, Neeraj bhai, I think on large cap, I think valuations have turned comfortable. So we were looking at trailing 12-month price to earning multiple. So Infosys trading at close to 19-20 times price to earning multiple. TCS is close to now 24 times price to earning multiple. So I think in terms of negativity, all the news is already discounted as far as large cap stocks are concerned. Now, the only concern is of growth. What will happen in terms of growth for FY26 and FY27? And we will get to hear from the management starting 10th of April, that is day after tomorrow. And maybe that will be a right time where we can think about what is the likely growth and right valuation multiple, whether it is for large cap or mid cap company. So we all know mid cap where penciling a growth of close to a mid-teen number for FY26 and 27. Now, looking at a global uncertain environment, the street will be keenly watching whether all these companies are likely to curtail their growth guidance for 26 and 27. So yes, on a frontline stock, I think the valuations have turned comfortable. On mid-cap side, I think still valuations are slightly expensive. So if you look at companies, the street favorite like Coforge or Persistent, they are still trading in a band of 40-45 times price to earning multiple. So in case there is some reduction in growth guidance for FY26, so we may see a further cut in the prices as far as mid-cap names are concerned. But I think large cap, most of the negativity is in price. So I think stocks should stabilize at a current in the current price band. Maybe growth is something that will be keenly tracked by the street, and then accordingly, in terms of upside, maybe I feel still it is slightly away, because ultimately what I feel that the growth for FY26 for large cap company will be in the band of 2%, kind of 1% kind of band. So for a kind of no growth kind of scenario, I think the stock will try consolidate in a certain price band. Maybe time-wise correction is the right word for a large cap IT company. For mid-cap IT company, one need to be cautious and track the growth guidance by all the mid-cap.
Look at what's moving in the first couple of minutes of the pre-open to get a sense, if we can, of where the direction is. Look at Samvardhana. So expect the most tariff vulnerable stocks, if I can put it that way, to show maybe some interesting moves this way. Look at a Samvardhana, look at a Siemens, look at a Titan this morning. I just want to pull up Titan as well, if we can quickly. KPIT Tech also looking good. So I'm looking at Auto, Angs, Sirma is also not half bad, Electra Green. I'm looking at Auto, Angs, look at a Borosil Renew on the other hand. So anything which is, say, US facing, export facing, was seeing a pain, you could see a bit of a bounce back there. Whether it will hold or not is frankly anyone's guess right now. But you are looking at a gap up. Gurmeet Chadda joining in on the conversation. He's managing partner and CIO Complete Circle. Gurmeet, great to speak with you, and good to speak with you on a day that looks like it will at least start well. And then I suppose that's the key question. Will it end well as well? Between now and no one can predict what happens. I mean, Trump is asleep now, so hopefully for the range of our market trading, we should be okay. But is this idea now settling in that among all the nations and what's happening right now, India is better placed and will get through relatively better?
Good morning, Taman. I think. See, the problem right now is that we are trying to process too much information, and so you can model in risk when it comes to valuation and prices, but when there is a lot of uncertainty and the quantum of financial impact or risk keeps changing. I think you see the kind of movement you see. So yesterday, for example, in 10-15 minutes, you saw a $6-7 trillion movement in US market cap. Just, it's just that the market is waiting for some respite. So that tells you the positioning is that it will do well once there is a bit of certainty. And I think at some point of time it will come. I agree with you to some extent. India is, I would not say decoupled, but I would say lesser impacted. And that's the reason, if you see last 3 days, the global markets have tanked about 15%, including Europe, US, you're down about 5%. But that's also for the fact that we've already had a 12-15% correction. So my sense is that it's each day at a time. I think there are 2-3 signals I'm looking at. One is the OIS markets. They are indicating that RBI might do a little more than 25 bips. If you see last 2-3 days, the OIS yields, 1 year and the 5 year, they've softened by 10 to 15 basis points. So we need to see if RBI can follow through more in terms of liquidity support or CRR cut or some more relief to export oriented sectors. And second is, our own earning season. I mean, all of this holds true if we can just manage to, do a bit of a single digit earning growth, a high single digit or early double digit at 17 times, I think will be good. So I think these are the two most important triggers. And rest others, I think we don't have much in our hand. It's just that we need to react. But I personally think this is now becoming more of a, I'm not a geopolitical expert, but this is more like, a US-China thing and others being a bit of, trying to play up the catching game.
Good morning, Alex here. I just want to clarify. So I take the point on the lower tenor paper and the yields that you've spotted, but I'm just trying to understand what you were saying. What is your possible expectation? Of course, we'll know soon enough. But beyond 25 basis points, you're saying in terms of quantum of cut, or do you say that the liquidity measures could be bolstered even further?
Could be both, actually, Alex. If you see the OIS rates, the 5 year one, it's 571 now. This was yesterday. Obviously, that's also changing very thick and fast. But probably tells you that maybe market is expecting a little more. And I'll not be surprised if we can upfront a little bit, and then wait for a few months. But I will not like to venture into that. But I think market is expecting that, and I think anything in terms of liquidity would only help in transmission. And RBI has demonstrated variety of tools, in terms of infusing. So liquidity was 3.5 lakh crore negative in December, and we ended March with 90,000 crore positive. Also, another positive trigger has been the capex. We actually ended up crossing 10 lakh crores, and there was this fear in market that the capex would undershoot by a big margin. That also has not happened. Just see the number of defense deals and orders which have come in, starting from Pinaka Rocket to 60,000 crores for HAL, then a couple of orders for Bharat Electronics. So I think the energy sector. So I'm pinning my hopes on RBI doing what it is doing and carrying on with it in terms of being proactive, and few pockets earnings catching up. I think that is what is in our control. Rest others we just react to. And as I said, the positioning of market is right now, it's just desperately waiting for some good news, or let me say it this way, lack of bad news.
All right. So let me follow through on the next question, which is the obvious one. And you say that the RBI therefore is the linchpin this week. Would you say therefore that banks is where that you need to position yourself? And yesterday itself you saw sharp selling or heavy selling in a few frontline private sector names as well. Where would you be placing your money?
So I think you should keep it simple in these times. Go with people where you will not wake up in the morning and find any accident. With financials, you have to go beyond valuations. We all saw what happened with IndusInd. So first thing you want right now, or last thing you want is any bad credit event or something which the market doesn't like. So stick with the good ones, which is the ICICI, HDFCs of the world. Maybe in mid cap you can look at, let's say, a federal bank. I also think NBFCs will do well, some of the quality ones, because the yields are falling, the cost of funds should eventually come off, and some of it are actually now demonstrating good growth as well. The quarterly updates have been pretty solid, including some of the PSUs ones like Bank of Baroda. HDFC saw one of the record deposit growth, so that's one safe pocket. I think gold-based NBFCs also may do well, report good set of numbers in the near term. Also, RBI is regulatory tightening. They were doing a lot of micromanagement last year because there was a stress in a lot of pockets, whether it was IPO, whether it was short-term personal loans. So I think that also seems to be now making way. And I also think these capital market plays within financials, to me, they look a touch oversold. Yes, there is, the volumes have come off. They had run up quite a bit. But, end of the day, we are still adding more clients. You're adding new clients to the market at a lesser pace. Yesterday, we saw DigiLocker integrating CDSL and NSDL. So I think this pace of adding a crore new customers a quarter will slow down to maybe 40-50 lakh new customers every quarter. But that to me is a very structural trend. So financial is one pocket I'll be very, very focused and positive on, and keep a balance between financials and non-financials.
Oh, that's a fair point. I just want to mark some specific names as well, because the pre-open rates have settled, and for a change today, we are having a good morning. 1.29% up for the Nifty 50 in line with the implied open, and a clutch of stocks from a trend to a tech company to multiple stocks which got hammered in trade yesterday are bouncing back, which is actually a pretty good sign. I wonder what Titan and PN Gadgil are doing. I wonder what Macrotech is doing as well, because that's the other one that came out with the update. Well, some green on the screen for that as well. Macrotech about 1.21% higher, and some bounce back boys include the real estate bucket, with Anantraj, Brigade Enterprises and the likes doing well. Keynes Tech, Sarmar amongst the EMS players that are doing well. Now, Gurmeet, my question would be, are you deploying client capital currently? If so, which buckets? If you're at liberty to say that, which pockets, which stocks are you putting in or nibbling in some capital currently?
So, Suresh, we are, fortunately for us, the flows have been decent in terms of, I think clients have matured over time, and, so the flows it may not be as fast and as pacey as they were last year, but, there's not much stress as far as outflows are concerned. So we, as I said, adding financials, I think we are overweight now in financials. I'm adding some energy names, especially once the power demand peaked in February. The peak power demand was almost 240 gigawatt. In terms of unit, I think it was above 132 billion units. So I think that space is looking good. At defense, we've actually used the dips to add likes of solar, BEL, HAL. We also added a little bit around 3,000 levels because there was genuine pickup. And I think this world order is changing. One sector which clearly now every country would be focusing on and would be inward looking is strengthening our military power. And that's how this economic order is getting reset. So that's something we added. And I'm actually positively surprised by the government capex number, which came in March. So I'll be looking at some of the EPC names as well. I think L&T saw a sharp dip yesterday, was almost 7-8% down. So you have to look at stocks which have low linkage on this tariff, but are collateral damage. I think you begin there. And once some bargains start emerging on stocks which have fallen too much, let's say auto, for instance.
That is the bargain. In fact, look at all the auto anchs this morning in the pre-open. Look at a Keynes Tech, look at a Sirma, look at a Samvardhana. That's where you seem to have some buzz. Srikanth, good morning. Very quickly, because we've got you just a minute and a half before the pre-open. What is the opening looking like to you? What is the index call?
Good morning, Tamanna. Good morning, everyone. I think, Nifty is very clearly rebounding after hitting the deep sell-off of Monday. So we could see the levels of maybe 22,500 where there is good amount of call writing. There I'm expecting again one more round of liquidation of long positions. But in case if we see the market is sustaining about the same, then only we could see the levels of 22,800. So in the near term, I am expecting market to remain in a range of 22,500 and 22,000 on the downside. And it is going to remain volatile because the VIX index, it's still at 66% higher. It is around what? It is around 30-35%. So I think we need to be careful if the markets are opening at higher levels.
Okay. Shrikant, we have 30 seconds. One top call for the morning based on pre-open rates.
There are like number of stocks, but I would like to go with GAIL, Gas Authority, which is currently trading around 167, 170. There I'm expecting stock to move towards 180, 185 in the near term. It's a strong candidate to buy for based on its relative performance, and we can keep stop loss around 165 for buying GAIL.
Fair call. Shrikant, thank you for that, and stay on. Sunny Agarwal, we'll come to you as well in moments from now. But the market about to start and a great turnaround from yesterday. We'll not have as much green as we had red yesterday, but it's good to see green on the screen this early in the week, really. Well, 1.5%. Banks slightly underplaying. I wonder if IT is bouncing back strongly. Yes, it is. 2.6% higher. Mid caps and small caps. 2.5%, small caps maybe slightly more, 3% higher, yes indeed, and 2% strong now for the Nifty. The really strong bounce back. We defended 22,000 yesterday and we are piling on from there. Let's bring up the heat map up on the screen and show you what's moving. Except Sun Pharma, everything in the green. BEL, something that I think Gurmeet and Sunny both spoke about, 5% higher. Tata Steel, Titan has fundamental news flow it as well, but Tata Steel is a case of a bounce back, being punished unnecessarily, I would add, and bouncing back. JSW Steel. So some of the metal names are also doing well. It's a classic bounce. I could single out individual names. Adani Port was down yesterday, is up about 3%. Tech Mahindra, Infi. So everything which had fallen yesterday largely is bouncing back. I'm sure a keen eye will be out on the oil marketing companies as well. But on the Nifty 50, this is the turn. And as we speak, it's an all green screen. Yesterday, I remember Mahima took a grab of the morning and put it on an Instagram story saying that red, it's all red. Today she has a chance to do the reverse because it's an all green screen on open.
Yeah, 50. That's the score here. I like the term you've coined, Neeraj. I'm going to go with that. The bounce back boys. Today is all about the bounce back boys or girls or whatever. I mean, no one's complaining as long as the screen remains green. I'm going to pull up the broader indices just for a second before we get to the overall sectoral indices. And this is really where the story is going to go. Some balm after a raw wound to portfolios. Not that this 2% up is going to make up for the kind of turbulence that we've seen anytime soon, but directionally it's looking good. Bank Nifty also showing strength over there. I want to pull up the sectoral indices because we need to see the VIX. We need to see what's happening with Nifty IT. Both of those become very, very important. In fact, we'll pull up the VIX individually as well. But consumer durables, they're doing fine. Defense at the forefront of it. Metals really is a story that you should watch out for. Beaten down and punished with fears of a global economic crisis. This is not as much as a US export-facing story as much as if there's a global recession will demand and commodities tend to fall. Will that happen? So what's happening with the Nifty metals is mirroring what's happening with the world right now. The Nifty IT as well. Were there oversold fears? Defense is an important story, and it's not just BEL. We'll pull up the components of the Nifty defense as well, and understanding here that the spends, government capex spends are going to be continuing. If you looked at a story which my colleague Shrimi Chaudhary did yesterday, where capex has already bumped up in the first quarter, and that was what is reflecting. Bharat Electronics, of course, on my watch list on the top of the charts there at 5%. I want to pull up the India VIX if I can just for a second, because that's important to see. This India VIX about 11% down. So this is where you see some of that fear cooling. Now, whether this will last, what happens, say, on the afternoon once Europe opens, is anybody's guess. But for now, this is a strong morning. Specific stocks, I want to pull up auto ancillaries just for a focus, because remember, with the auto tariffs coming into play, the impact of auto tariffs in focus, these were beaten down. So I'm seeing Sirma, Keynes Tech, Samvardhana, Amber End. Look at some of them doing okay this morning, not half bad, between 2 and 4% on those two stocks I talked about. Let's look at Samvardhana as well, and Sirma is doing well, about 4% up. Brigade has inked a fresh joint development agreement in Mysuru, was on our radar, about 2.5-3% up this morning. Titan, really, the positive quarterly updates is something that we were looking at, 5% up on a Titan. It's been a couple of good days for the Tata stocks, Trent and Titan. BEL we spoke about as well, about 5% up, driving the entire Nifty defense. Godrej Properties also, let's look at their Q4 numbers had come in, their updates had come in, Godrej about 5.5% up. So you have now a recognition and cognizance of business updates. When you don't have this firestorm around you, you can start looking at what individual companies are doing. At least for now, this has eased. For now, being the key word. But this morning, I think that realization hitting Alex, Neeraj, that Indian equity is relatively more resilient.
You said it, and in fact, I also want to point out some of the capital market plays, and let's pull up something like an Angel One. It's doing particularly well in trade today, and it's up as much as 5.5% or thereabouts. I'm just wondering whether there are any opportunities. Let's pull up BSE as well to see what it is doing this morning, and to see, there you go, so 4.5% here as well. Shrikant, I'll come to you on this one. Any opportunities, and I know that you've already spoken about, we've already spoken about a few pockets. I haven't given you the opportunity to speak about it, but good morning first of all. And would you buy into any of these capital market players?
Yeah, definitely. Like these stocks are doing really well, and whenever there is a correction in the market and recovery, we see a good amount of buying interest in stocks like Angel One, or even I can say CDSL, CAMS. These are the stocks to buy for. In that specifically, we like Angel, we like CDSL, and at current levels, if by looking at the entire formation, CDSL looks good to buy around 1185, 1190, with a target close to 1250, 1265 on the minimum side. And for Angel One, this was the stock which has fallen heavily when the fall was there in the market. But now it is again back to the levels of 2250, which is positive. The next level to watch out for would be 2500. So again, at this level, I think if there is a little bit positional sort of view, then we should look for adding these stocks.
Sunny, I remember you mentioning that you like the defense names and BEL in particular. That one is amongst the top gainers today. Independent of what happens today, tomorrow, day after, is there merit at these levels to buy into some of those defense names? Maybe a BEL, maybe some others. Gurmeet, is also constructive. But Sunny, what's your view?
Yeah, definitely. I think the kind of order flow on which these companies are sitting, and the order inflow which we have seen during the last few months, I think again we believe the fair value of BEL is close to 340 rupees. So keeping that target in mind and investment horizon of kind of 12 months, definitely BEL can be added. And similarly for HAL, the resolution on the supply of G engines again augur well for HAL. So again on HAL, I feel the fair value fundamentally is close to 5,500 rupees. And if somebody has got an investment horizon of 12 months, one can accumulate HAL in the long term.
Okay, just a quick word from Shrikant on the way the markets have opened. Shrikant, question is about Nifty sustenance right now, and where you see that resistance coming in with the opening that we've seen. 22,500 seems steady right now. How would you play the Nifty today and the Bank Nifty?
If we consider the gap up opening, then the market has crossed the level of 22,500, which is, I can say, positive. But at the same time, it's a fall or steep fall which we witnessed was like broad-based. And that's the reason I'm of the view that till the markets are not stabilizing, we should stay away from taking any specific position at these levels. So in case if we see the market is start sustaining below 22,500, then it can again quickly come back to the levels of maybe 22,250 or 300. So it is better to take some specific stock specific call in this market instead of taking any specific index based view at these levels. Yes, if we see the market is holding and closing above the levels of 22,500, then there could be the chances of hitting 22,800. But my personal view is that it is better to stay away from taking any specific view on index for the time being.
Any specific stocks that you have a view on, Shrikant, this morning?
Yeah, in that we like GAIL, which is already up by some 3-4%. We also like Indian Hotels, which is around 770, 765. If we consider this particular travel and tourism industry, and along with, let's say, the benefit of crude prices, I think Indian Hotels looks great buy at these levels, around 770. Again, we could see the levels of 850. We also like Indigo, which is around 51.30, 51.40. The relative performance is much better as compared to other stocks. And here also we are expecting stock to move towards 5400 sort of levels. So Indigo as well as Indian Hotels should be on the watch list.
Stop loss for both of them, Indigo and Indian Hotels?
For Indian Hotels, we can keep stop loss at 750, which is its psychological support level. And for Indigo, we can keep stop loss around 4900, which was its previous close.
All right, I'm catching a bit of a theme. If I remember correctly, the last time we spoke also, you were talking about travel tourism. And quite a few people are doing that, considering that markets are not really, have not been very kind. But Gurmeet, opportunities, and you were speaking about CapEx, government CapEx, the target having been breached for the last financial year. I'm just wondering whether you have a specific view on Larsen & Toubro. It's currently trading well below its 200-day moving average at 3,155, just about 100 odd rupees above its 52-week low, thereabouts, maybe a little bit more than that. But any opportunities here or in the wider capex play?
Yes, Alex. I mean, starting with travel tourism, we have Interglobe, Indian Hotels, and we added some more ITC hotels because we were holding ITC and we got ITC hotels, and price had come down to 160. Obviously, there's a bit of a pressure with the bad group making it clear that they want to exit. So near term, you could see supply headwinds, and that's why it's really struggling to really cross 200 odd levels in a meaningful way, because somewhere the market feels that supply pressure would come in. And a large pocket of consumption is actually, if you see Gen Z, it goes towards travel and tourism. And second is dining out and e-commerce. So I think you've got to be in these two pockets from a consumption basket in your portfolio. On larger capex plays, as I said, L&T, the order book is at a record level, upwards of now 6-7 lakh crores. I think their bigger exposure is to Middle East. Seems that they are also integral part of the way Saudi and entire Middle East is trying to rebuild. Secondly, I think their infra and mobility segment seems to be doing very well. And L&T is also doing a great transition from that traditional EPC player to a broader, digital engineering, data center, and clean energy play as well. So, I think there'll be some more opportunities in value unlocking, which I foresee in this group in the long term, and in a relatively safer pocket. In this market, you got to be in places where you think there is good visibility, both in terms of order book and earnings. The other one, which I said I like, is this entire power and transmission space. We've
two
added
ideas,
more.
Gurmeet. Well, before we thank you, leave us with two ideas, which are safer.
So I think one we've added and very bullish is recycling. We've added Bartek Wabak in the water space, and anyway, long summers ahead. Water is a problem. We already have Ganesha Ecosphere in plastic recycling. We're looking at more ideas, Tamanna, on if we can get some more play on the air purification game in terms of companies and making smog guns, etc. And as I said, power transmission. We are adding more names in transformers, rectifiers, insulators, wires. I think this space looks pretty insulated as far as the global crisis goes.
Okay, look for insulation is what is important. Thank you so much, Gurmeet. So thank you so much, Shrikant and Sunny, for joining us today. Looking forward to the next conversation. Vikas Khemani joining us, founder Carnelian Asset Management and Advisors. Vikas, what a great day to have you on, especially because I know that smile is going to come. We're getting you on a good morning where, that resilience and faith, what we're seeing is a testament of the Indian investor right now in the markets, isn't it?
I think, of course, Indian investor, and also more importantly, even Indian economy. We all know that, of course, there's a lot of chaos happening around the globe, led by the tariff war, lots of, uncertainty. We all know that. And at the same time, it's also a matter of fact that India is relatively insulated from what's going all over the world. And I think it's, in my opinion, testament to that fact. But yeah, I mean, you can't remain unscathed when there's a fire all over the place. I mean, you are bound to get some amount of heat, but when the dust settles down, when the fire settles down, obviously, one knows that, which countries or which economies will stand tall. And India is surely one of them.
So, okay, hi Vikas, good morning to you. And I think we were talking about this as a bit of a theme, right? Because in this chaos that is playing out globally, ultimately, everybody seems to be focusing inwards. And various economies are already starting to have measures announced to bolster the domestic economy. We're speaking on the cusp of the RBI monetary policy outcome where in all probability we're going to see another rate cut or measures at least to bolster growth. How much of a factor is that going to play, in your opinion, in further adding to what the government has already announced on the fiscal side?
We must understand right now what's going on at a global stage is very unprecedented. One does not know what will happen when you wake up in the morning, what kind of announcements will come, what kind of, and whenever these kind of announcements come with a far-reaching implications for the global economy, it is natural that investors will get worried and tentative, and especially the short-term investors tend to act and react. And that's what creates volatility. In that volatility, any short-term measures boosting growth for economy can be ignored. I mean, RBI did a major policy pivot, in last 2 months, and markets kind of ignored that. Already RBI, gave a growth stance, accommodative stance with a rate cut in the previous policy also. So I think that has been ignored. So that can be ignored. I think RBI has a lot more room to sort of accommodate Indian economy, boost Indian growth, which I am sure they will follow. But don't assume that that will be kind of cheered by the market in the short term. But having said that, whatever is happening globally, India is one market. See, our exposure to the US so US exports is very, very less. We're less than 1%, less than 2% of the total GDP. And our tariffs are lowest as compared to, most of our competition, and whether it's China, Vietnam, or any other place. So, if US, let's say that part escalates, India tends to benefit net. India does not tend to lose. And it is also impossible that US starts manufacturing everything overnight or even if they start manufacturing, the cost of US labor and cost of Indian labor or anywhere else can't be compared. So, manufacturing, high-end manufacturing to some extent might move back, but that's not changing game overnight, for India at least. It might have negative implications for China. So in whatever chaos is going on, if you dispassionately, objectively observe, I think India stands very, very, net beneficiary of all this chaos. Of course, in shorter term, it also creates market volatility like anything else. But if you just cut the clutter, I think India is far, far better placed. And as we navigate through this volatility, India will come quite solid out.
Because the good morning, of course, and always good to talk to you. The question might be that, could it be that while Indian companies and the economy might be a net beneficiary, because of, let's say, the higher trade war rhetoric, plus maybe some currency moves, if they were to happen from China's side or otherwise on the devaluation side, that multiples could stay compressed? I mean, we might be trading at circa 18, 19 times. Maybe the earnings still stay stable, but the multiples go down. So, and therefore the markets correct a bit more. Could that happen?
It's already happening, Neeraj. I think if you see, it's already happened to some extent. In a shorter term, that's what happens, right? Uncertainty reduces the multiples. Uncertainty increases the risk premium, and thereby, sort of reducing the multiples. It's a very natural formula, which is what we have seen. And like I was saying, let's say whether it is 6 months, 12 months, whatever the time frame is, as the uncertainty settles down and more and more people realize that India has done very well, India is standing very well in this whole thing, that same multiples might come back and will come back. And I want to, here one very, very important point I think people should not miss is our ability of our leadership to navigate through these kind of crises very well. I mean, we did very well in Ukraine war crisis, where we managed Indian inflation superbly well by, importing Russian oil. And same thing, I do believe that our leadership will have a fairly mature approach in terms of managing through this crisis. And we are not seeing any loose statement coming from India's side. We are having very mature sort of approach. And I do believe that India will have a bilateral trade agreement with the US very soon, in terms of there will be some give or take away, but it will be win-win outcome. And hence, I feel it will be a lot less disruptive as compared to any other place in the world as far as India is concerned or India and US trade is concerned. So net, I feel that as the volatility or chaos or confusion settles down, which could be 1 month, 2 months, 3 months, I don't know, or nobody knows for that matter, but it will surely settle down. And once that settles down, I'm sure India will come out very, very strong and solid.
Vikas, what is the strategy that people who are watching us right now should adopt? Focus on domestic consumer-facing companies, or where demand is not too impacted by global headwinds? What would you suggest? What are the sectors you're liking?
About it today, our banking sector is one of the best in the world in terms of asset quality, capitalization. How does our banking sector's lives change because of ongoing US war or whatever, tariff war, right? That's very solid. And most of our banking sector is lending domestically. It has no exposure, almost zilch exposure abroad, right? Now, if those same stocks you are getting 10, 15, 20% cheaper than what you were getting a few months ago, isn't it a great opportunity? So that's the point I'm saying. So because of elsewhere, you are getting same company, same business, same growth profile at a lower price, and these are the kind of opportunities which comes once in a while. So I would say stay focused on some of these companies which are very good domestic, entire banking pack. We like. We think that pharma will continue to do well. Whatever correction is happening in the pharma, US cannot afford to have aggressive tariff in pharma. Even if they have, I think it will have to be passed on, because the margins which pharma companies make are zilch. We had recently US regulator came here, FDA regulator came here to woo Indian companies when they were facing medicine shortage post-COVID, because Indian companies stopped investing for US business. So there's no way, in my opinion, pharma companies will get impacted. CDMO, again, a great opportunity, does not get impacted. Many domestic consumption-based stories, how would they get impacted with the ongoing this thing? On the top of it, we're talking about interest rates coming down, inflation coming down, with the oil prices, being where it is, or commodity softening. So all those things, I'm saying, think with a peaceful mind. They are all, once the dust settles down, when the noise settles down, they are all positive, pointing towards one direction, which is positive.
Got it. Well, this is music to the ears, and viewers, while we thank Vikas Khemani today, I urge you all to hear the podcast that we did with him, wherein he's spoken at length about some of these things, and they hold true right now because it's not a very old one. But Vikas, take a moment to thank you for joining in today. We expected it to be a very dramatically different day than what it is right now, but great to have your opinion this morning.
Thank you, Neil. It's always good to chat with you.
Yep. Well, that's an important market voice, Vikas Khemani, and making that distinction between business and otherwise. In fact, and that's what we try to do with corporates right now as well. End of March, we were trying to ask them how was the quarter gone by. Now we try and ask corporates about what is it that their worldview is with regards to these tariffs. And then, of course, how has business been for them? And that will be the conversation with Mr. Vinod Agarwal, MD and CEO of Volvo Eicher Commercial Vehicles. He joins in right now. Primarily to talk about, of course, how the month went by as well. But Mr. Agarwal, this is Neeraj here. Good morning. Can't not ask you, at the top of the mind, view on what do these tariffs and reciprocal tariffs and the reciprocal tariffs on reciprocal tariffs do for growth and businesses, particularly in the Indian landscape?
I think we are still assessing the impact of these tariffs. To my mind, on top of it, as far as the automobiles are concerned or the vehicles are concerned, there are very, very negligible exports of passenger cars or trucks or any such things to US. So therefore, this imposition of 25% on the automobiles as such will not have much impact as far as the finished products are concerned. However, the components on which also the 25% duty has been imposed as per the order of March 26th, I think. I think that is going to have some impact on the component exports, because we are exporting around, I think, 6 or 7 billion US dollars of component exports to US as a country. Now there, of course, there will be some realignments. Because this impact is not only on us, this impact is also on imports from China, imports from Canada, imports from Mexico, imports from all other countries. And Indian components, I think, account for very negligible portion of overall imports into US of the components. So since it is going to be relative and it is going to be impacting every other country as well, so there will be, I think, renegotiations of prices, or there will be some impact maybe due to the bilateral trade agreement that is currently going on. Discussions are going on. So let's see how it pans out in next 1 or 2 months. So I think at this point of time, we have to keep our cool and we don't have to panic.
Okay. The question, therefore, then I would have, Mr. Agarwal, that while it may be too early to call the direct impact, do you foresee any economic slowdown impacting sales again for companies like yours?
We are largely dependent on domestic, first of all.
Yeah,
I think
exactly.
that is the call we have to take, that will our economy be impacted? Will our economic growth will get impacted because of this? I think there my own assessment is, of course, it will have some impact, but it will not have very large impact because we are also largely dependent on our large domestic consumption. So long as it doesn't lead to massive, other impact of, suppose there is some recession worldwide, and if that has some impact on India, of course, to that extent, everyone will be impacted. But at this point of time, I think that India should have much lesser impact relatively.
Agarwal, very good morning. Tamanna here, and so glad to have you with us on the show today. Let me just come to the March sales numbers, which is why we also wanted to have this conversation and what that has looked like. Good for the bus segment, flat, completely, I wouldn't say negative, but flat for the trucks. Can you break it down for us?
I think overall commercial vehicle industry has done as per our earlier assessments. We have been assessing it over the year. So overall, March was a good month for the commercial vehicle industry, where we had overall growth, including the buses. We had a growth of around, I think, 4.5% for the month. When the month 3.5 ton and above industry, it was around 61,000 as against 57,000 last year. Total industry 3.5 ton and above. Now within that, of course, there has been much better growth as far as buses are concerned, and heavy duty trucks also there was some growth as compared to March of last year, and light and medium duty trucks there was sort of flat or little bit drop. So overall, I would say the industry performed as per expectations. If you look at for the full year, April to March, commercial vehicle industry 3.5 ton and above, there has been a growth of 0.3%. So you can say it is a marginal growth. So it's flat as compared to the previous year. However, if you break down this growth, it is largely dependent on growth of 16% in buses. So buses market has grown significantly. It is now 95,000, 3.5 ton and above. 95,000 against 82,000 last year. As far as the heavy duty trucks are concerned, there has been a drop of around 3 to 4% for the full year. The market is down to around 246 to 47,000 as against 256,000 last year. And light and medium duty trucks, again, the market has dropped by around 3%. It is down to around 104,000, 105,000 as against 111,000 last year. But we should not forget that there is also migration happening towards higher tonnage trucks. So therefore, when you convert into the payloads, then the drop in numbers may not be true, because then the actual payload that we are getting from these numbers, this may be a little bit higher than the last year's payload.
No, Mr. Agarwal, just want to come to the bus segment, because we talked about the robust growth there. How much of this is coming from electric vehicles? And can you give us your outlook on electric vehicles? State tenders are expected to come up next, and what is the extent of focus there for VECV?
Out of 95,000 market, I think last year electric buses would have been just around 5,000-6,000. So electric buses are still very less. And of course, in the future, we are expecting that more electric buses will come in. More tenders are expected to open up. And hopefully, we will get more demand from electric buses. As of now, the numbers are very less.
Okay. Do you see the bus segment sustaining in FY26? Just a little forward looking, and of course, we'll wait to hear the whole FY25 numbers, etc., which will come. But do you see bus sustaining and pushing growth versus other categories?
I hope so, because we are seeing still more and more growth coming from state transport undertakings, because state transport undertakings had not replaced their fleet for last so many years. And last year, for the first time, we have seen good action in the state transport undertakings, and which of course is going to become more and more aggressive as we go forward, because their fleet is aging and they need more replacements. And on the other hand, the school segment and the staffing segment, there we are seeing consistent growth, because we are seeing more and more schools in category B, category C towns, where more and more schools are getting into the transportation of children with better means of transport rather than through three-wheelers or other means of transport. They are using now the proper buses, safe buses. So therefore, the demand from school segment is very high. On the other hand, the staffing segment is also strong, because more and more companies have started working from office. So work from home is coming down. So therefore, there again, the demand is going up. And intercity coaches demand is also more, because there is more intercity travel. Infrastructure is better. So therefore, the travel by road by intercity coaches is also becoming more and more comfortable, and people are preferring that. So therefore, we see demand coming from all segments of buses, schools, staffing, intercity, or state transport undertakings. So therefore, my expectation is that this bus segment will continue to remain strong.
Okay. Mr. Agarwal, we hope that the issues, current or future, around tariffs tide away sooner. But as you said, a lot of it is domestic centric. So hopefully the impact is much lesser. Thank you so much, sir, for speaking to us today.
Thank you. Thank you.
That's Volvo Eicher Commercial Vehicles on a variety of issues, including tariffs, their sales, bus segment demand, and more. Now, the focus, we changed tracks and moved to cement. A lot of people are talking about how there is a need to focus on the domestic economy facing companies. There's also talk of how South-based cement companies have hiked prices by 50 rupees per bag in the last couple of days. So much to talk about with Girija Shankar Ray, lead analyst cement of Institutional Equities Research at Yes Securities. Girija, good having you. Thanks so much for joining in. Can we start off by talking about the micro first, and which is the talk around how southern companies have hiked prices. Now, my belief is that if this has happened, it has happened because cost had also gone up, and this will mitigate the negative impact as opposed to it being a factor of demand picking up. Have you heard anything to this effect, and what would your analysis be?
First of all, good morning. Yeah, you rightly said there was a price hike of around 45 to 50 rupees per bag yesterday itself. This price hike, nothing to be surprised, because from past 4 months, there was no price hike in southern region, especially in, AP, Telangana, and even in fact, Kerala and Karnataka as well. But yes, last month we had a news that in Tamil Nadu they are going to increase the royalty on limestone. So just to mitigate this, increase incremental cost in limestones. So this is a kind of a do or die situation for them. So that is the reason so they have taken a price hike. So I believe this price hike will, there is a marginal, kind of a rollback on this price in going forward. Again, we have to watch out for a week of time. See, let's see how these things are going to pan out. But I believe there will be a rollback, marginal rollback. But yes, price will sustain. As I mentioned, from past 4 months, there was no price hike. So apart from south regions also, if you see other regions like, eastern regions, so there is a price hike of around 10 to 15 rupees. And even in fact, in your northern regions also, there is, 2-3 rupees price hike. Central also there is a 10 to 15 rupees price hike. In fact, in Western regions, 7 to 8 rupees price hike. So basically, this quarter run is a volume-driven, price-driven quarter, as the industry sees from past, historically, if you see. So obviously, there is a price hike across the regions. Let's see for a week period of time how this price is going to sustain in the market.
I heard you say, Girija, good morning, Tamanna here. You are expecting a rollback. Can you elaborate on that? What rollback are you expecting?
Why I'm saying rollback, if it is, see, 45 to 50 rupees of price hike in southern region, I can understand. But rollback, why I'm saying, because market unacceptableness for this price, because the demand is little slow, and from even fourth quarter also, everybody knows this is a volume driven quarter. But on top of that, what as per our channel checks suggest, the volume could have much better, which is not. So again, we haven't seen any kind of volume during January, February because of Mahakumbh Mela, and Holi was there, the festive seasons was there. So those are the reasons where we saw a volume decline. Volume subdued, I can say. It is not completely negative, but it is little bit sluggish in fourth quarter of this FY25. So first quarter again, FY26, I believe little bit of volume pickup will come, but it will not be in very extent level so that this price is going to sustain in the market. But yes, marginal rollback will be there.
And so in how do you look at the other markets? Now we're talking about price hikes in South. You're saying there could be marginal rollbacks there. In other markets as well, do you expect a nominal price hike to come in? What's the trend that you're seeing there?
See, if I talk about eastern regions, from past 4 months, there is a price hike. This fourth quarter, completely there was a price hike in eastern regions, and the price hike is sustaining in the eastern market just because they did some kind of supply cut just to sustain the market price in the market. So obviously, the price hike what they have taken 10 to 15 rupees. This is also going to sustain because, as I mentioned, for the first quarter FY26, every year first quarter is a price driven quarter. So this price is going to sustain eastern market, in fact in central market also. And a little bit of price hike marginal, as I mentioned, 7 to 8 rupees per bag price hike in western regions. So this is also we see some kind of sustainability is there.
And in terms of now picks, let's come to the specifics, Girija. Which companies do you think are best placed as far as the space is concerned? What's your pecking order?
This time, this fourth quarter, I do not see much any significant result driven or a result to be delivered by the company. But yes, regional players, like Sri Cement, and Dalmia Bharat, Birla Cup, specifically Sri Cement and Dalmia Bharat is going to give a good number this time. Again, this quarter will be either the strategy they will be following, like third quarter how they have followed, volume over price or price over volume. So whichever, like eastern and central regions players will be delivering better numbers. So I can see somewhere around 1100 to 1200 EBITDA per ton for Ultratech, and 1300 kind of level we can expect EBITDA per ton for Sri Cement.
Okay. Girija, one last question. On the southern side, is there merit in looking at any of the companies, because there are different forces at play? Demand is largely soft, but for maybe in Andhra Pradesh or select pockets. Is there any southern-based company that you like?
As I mentioned, Dalmia is also played southern regions. There
But that's pan-India, right? I mean, you're choosing pan-India players. You're not choosing a regional player per se.
A regional player, I can say, southern regions, capacity utilization is somewhere around 50 to 60%. In fact, India Cements and India Cements, that is also 55% of capacity utilization. So I believe Ramco may do well in southern pocket.
Got it. Okay. Okay, Girija, we will leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. That's the view on cement, by the way, a pocket that a lot of people have said recently is worth buying into, and hence this conversation became important. By the way, as we speak, volatility is down about 11.7%, and most of the indices are kind of holding on to their gains. Maybe not really 1.85% for the Nifty 50, so a bit of a cool off from the highs, but still about 1.25%, small caps about 1.5%. So again, not quite the 3% gains that we had, but still some green on the screen, which is very, very welcome. We need to slip into a break. On the other side of the break, we will get into a conversation with Sameer Arora, founder and fund manager at Helios Capital. Stay tuned.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day. Welcome back. Markets are holding steady. Now that's important. We're into about 45 minutes since markets opened, and though we knew that there would be a gap up opening, are they holding up? Not quite at the 22,500 level. So there has been a slide from highs. Nifty still about 1% up. I want to pull up the India VIX as well. India VIX is down about 10-11%. So that's not half bad. It is Nifty IT which is leading the recovery, and that's important to see. Nifty IT continues to lead the recovery as well. You have key indices which are doing okay, and broader indices are also holding up, though below their opening levels. So profits have come off, but markets seem to be holding up. Titan definitely is. Let's pull up the Titan stock. The FMCG giant in focus on the back of fourth quarter business updates. Mahima is joining us for more details. Mahima, now Titan is important to dissect a little bit, because on the face of it, it looks great, sales look great, but a lot of those numbers are pushed up as well by gold prices, isn't it?
Absolutely. So Titan is shining, but on the back of gold prices. And in terms of the overall revenue growth for Titan, the company's reported around 25% growth. But this is on the back of increasing gold prices. In terms of the plain gold jewelry, the growth was around 27% itself, and gold coins saw significant growth of around 65%. Elevated gold prices have also kind of resulted in sluggish consumer demand at lower price points, and this has led to single-digit buyer growth where lower price points are concerned, but overall higher price bands have sustained in terms of the overall growth, and the buyer growth there was in double digits, and this was also in terms of ticket size as well. Studded jewelry mix, however, has recorded a low double-digit value growth. Solitaire segment has shown some green shoots. The segment has seen a turnaround and registered both buyer as well as value growth. Like-for-like sales stood at around 15% for this particular quarter, and they've expanded into international markets as well. New markets like Sharjah in UAE and Atlanta and Seattle in USA. Overall, they added 16 new net stores, which were 4 for Tanishq and 12 for Mia. In terms of watches and wearables, they recorded a strong 20% growth this quarter. Analog watches saw 18% growth, so a lot of growth came in from there, and they added around 41 new stores this quarter. For eye care, the growth was around 18%, and this was both by revenue as well as from new buyer growth as well. E-commerce saw significant growth in this segment, and they added 2 new stores in the UAE region and closed down 11 stores in India. Emerging business, fragrances grew by around 26%. Fashion accessories clocked 2% growth, but Taneira sales were dropped by around 4%. Lastly, CaratLane registered a 22% growth, and this was driven by a good and healthy studded mix. Buyer growth was in mid-single digits. Like-for-like growth stood at 11% for CaratLane, and around 17 net stores were added in India for CaratLane this year. In terms of what brokerages are penciling in, Citi has maintained neutral with a target price of 3550. They've said that margin trajectory will be something to watch out for this quarter once the results come in. Macquarie has maintained outperform with a target price of 4,000. They are expecting 20% standalone EBITDA growth in Q4, and healthy growth in Q4 is encouraging and enhances the confidence in their EPS estimates. And Morgan Stanley has also maintained overweight with a target price of 3876. Overall, they're saying that headline is strong, but internals are mixed as of now. So this is the overall view as to how Q4 has overall panned out for Titan.
All right, thank you so much for that, Mahima. Q4 has panned out okay, stock is up. Market not quite holding on to gains this morning, but what is the outlook? And how should you see the kind of turbulence that we are in? Very special guest coming up next. Samir Arora, founder and fund manager, Helios Capital, joining us this morning. Samir, very good morning to you. You know, these are interesting times where, and I say this, we're in times where everyone becomes part economist, part geopolitical expert, and of course, market expert, so everyone is. Trying to understand what Mr. Trump is doing and saying. What is your take? Is he maybe holding out for negotiations? Will we see some calm before April 9th?
No. So the good thing about Trump is, and this whole his cabinet or whatever, is that they all directly speak to the public. There is no need to read reports by Goldman Sachs and Morgan Stanley's, because you can directly hear what President Trump is saying, what Peter Navarro is saying, what that Besant is saying, what Ludwig is saying. And all of them I have heard for out of interest, but I didn't realize it will be profitable for me. But for the last 4 or 5 months, I have literally heard every line that these guys said in every press conference that Trump did. And if you see, President Trump has been saying these things for the last 25 years. There was an article in Wall Street Journal which also had these videos, which are also available separately on Twitter and all, that in 1987, he was talking about how Japan and I forget, Korea are taking advantage of the fact that they sell their auto into US, and when you try to sell it back, it's very difficult and all that. He believes in it. There's nothing that is going to happen till 9th, and every line that these commentators have said was so obviously wrong. Just let me give you one example. So when this Federal Reserve, had its press conference, they said that we are treating tariffs as transient. And then somebody asked them, what do you mean by transient? So he said that the tariffs will remain for 1 month. So even at that point, which is like maybe 20 days ago, for somebody to think that this was all a gimmick and then to be surprised. Percentages obviously nobody could get right, but to be surprised that there'll be tariff across the board, that there's an auto tariff coming, all that they have said 5, 10, 20, 30 times. And yesterday only, that means I heard it in the morning, there's this big interview of Peter Navarro with one of your global channels, which is your competitor in India also. And you just listen to it and you know that unless he's being thrown out tonight, he's saying that countries offering zero tariff is not enough. That is just a starting point.
No, so the long and short of it, Samir, is then what is going to happen? Are we heading into? Are we heading into a Bill Ackman, kind of picture of a nuclear economic winter?
See, that depends on what you mean. We are used to high volatility, and because we do India and the US, these hedge funds in US, people, somebody wrote to me saying, oh, these guys are blowing up. I said they are blowing up because they consider 5% down as blowing up. So then they are blowing up. So the point is that the uncertainty is very high, but please let us not take that Donald Trump till today is just trying to bargain. He is serious about it. Yesterday, he was sitting with Netanyahu, and they asked him, oh, Israel is your friend, but you have put the 17% tariff on them. At that time only started, Israel has taken advantage of us. We are sending, I think, $4 billion a year or something and more. And so what I mean is, in front of the president, who's a president of Israel, or prime minister, whatever, he's saying separately that he's my friend and he's a great partner. And then in 1 minute he says, but they are taking advantage. Same thing he says for India and for Mr. Modi, that he's my friend, but we have to charge. So he's serious. Now the question is, it was okay till now, but when China responded, that is where the uncertainty has gone to a high level, because you can't do deals. You tell me, we get excited, and I'll tell you about India later, but we get excited that because the electronics tariff for India as of today will be 27% or 23%, let's say, or whatever. And for you, China, something else. So therefore, Apple will suddenly move to India. Because for now, temporarily, without knowing the final negotiation, without knowing whether Trump will remain or the policies will remain after 4 years, they will suddenly move things to India in 1 minute. I'm saying this is high uncertainty. Do not do things which are related to US. And also separately pray every day that US does not fall a lot, that China also does not fall a lot, because if they all fall a lot, we may fall little, but we will then fall. So please, let's not every time look only at relative beneficiary. You want the world to somehow muddle along. Little lower is great, but much lower reminds me of bad days when every market gets connected.
Yeah, that's true. Samir, good morning, and very well put, by the way. Thank you for doing that. And maybe the simplest way to understand what Trump is saying is to ask you, because if you're hearing everything that he says, I don't know if too many people were doing that, to be honest. But therefore,
I actually enjoyed. I enjoyed because he's so hilarious, so humorous, so funny, and also there are some points which you can. So please, everybody should listen to all these press conferences that he does, because half of them are quite funny otherwise.
Okay, well, maybe I'll start doing that too if sleep permits.
On YouTube, next morning, so you don't have to be up in the night doing it.
Yeah, well, but maybe early morning, a repeat. But nevertheless, Samir, the question therefore is that did this incoming downtick in world markets come as a surprise to you, part one, or were you kind of prepared for it? And do you reckon there is more to go? Because as you said, there is uncertainty. China and EU too has responded that they are going to be pretty serious about this. And if those two blocks react and retaliate, then uncertainty does stay high. So does it impact risk assets further?
Yes. So the thing is, I got one part right, that in Feb only I sold off my US stocks. So we have a global fund which was 99% invested on Jan end. And everybody was bullish on all these same old stocks. But there was so much talk and so serious talk. And that's what I'm saying. If you hear it a few times, at least you believe it. I believed it, and it turned out to be right, that there'll be too much uncertainty. For India, what we thought was, and still think a little bit, that, India is a relative beneficiary. There is not even 1% doubt on it. Okay. And it's a relative beneficiary, because the scale of our imports, exports is so little that really nobody, no economy will be affected by that. Just look at the numbers for a minute, that our deficit is about 40 odd billion dollars. That's how they got to 40 divided by 90 something. They got to that 45 divided by that, they got that 52% number or something. And then they, or whatever, sorry, 46, and then they made it, whatever, 23, 26, whatever they made. In that also, what is counted as our exports, I don't know exactly how much, but maybe 5, 7, 10 billion would be just the mobile phone exports to US from Apple. But literally that we are not exporting 10 billion. We must be importing 8.5 billion from China, adding 1.5 billion value and sending 10 billion to US. So the US guys say, hey, you sent us 10 billion of your exports. All these things in a normal discussion, I'm sure they will understand. But the point is that the difference, to bring it down to a 10% rate, which will remain forever according to me, even if Trump is not there, you have to bring it down by 25, 30 billion dollars. That you can easily do by, maybe 10 billion of oil. I think it's not easy to say, oh, we can import 25 billion dollars of oil and it is done. Because I think US is no longer accepting these simple sort of superficial changes to bring down these numbers. That's why this Peter Navarro's thing is important to understand that even a zero tariff is not enough. They want real change across industries and non-tariff barrier, blah, blah, blah. But so India is a relative beneficiary. For India to be an absolute beneficiary in the sense that the market goes up, that it cannot go up so easily if the rest of the world is going to be down 20% or 25%. If the world is going to be down 10%, then we are okay. But as of now, I think that US will be down more, because you can't really do everything by completely sidelining China and trying to do a deal around them. It's not so straightforward.
I mean, could it well happen that, sorry, if you were trying to finish your point, please do.
No, I'm saying that might be the end goal, that slowly you can do it, but you can't see the stock market, not stock market, real economy. If you change everything about the system, it can be done and maybe it is required and justified, but it can't happen without shaking some returns at least.
Yeah, most certainly. Okay. Now, Samir, so therefore, if that were to happen, could it well happen that the past was that US sneezes and the world catches cold? Could this time around be the case that the US markets may not do well, but other markets don't only relatively do better in that they fall less, but over a period of time they may actually gain even if the US were to stay subdued?
No, so the US has to fall, suppose it falls 20%, which will be quite bad. 20, it's already fallen, another say 10, 15, whatever, X% more. After that, you can move on. But please understand, you can't do like this. So US is some $29 trillion GDP, which means it's basically buying 29 billion, spending 29 billion, whatever. And the second market, we exclude China because they don't engage with the world in terms of anybody really selling to them much, might be 5 billion, trillion, not billion, trillion. So the third guy might be 6 trillion. How can you ignore the biggest customer in the world? Walmart, when they would give orders to Indian companies in the past, we would say, sorry, not interested in an order if you've got it from Walmart, because I'm sure they are not letting you make money, kind of thing, that they are very low margin. You have to listen to every whim and fancy of the big customers in the world. We have to worry about these big endowments, even if they, I think, are intellectually very inferior, but they are big endowments. So I say, hello, please let me explain to you. Everybody has to go to the biggest customer. The biggest customer in the world is the United States. So everybody has to listen and say, if I export to you, I have to pay a tariff, or should I make it in US and then serve it there? So that you can't just ignore that and move on in life as economy. Stock market, after some time of it falling, then life can move on. But as I'm saying, this is uncertainty time, because US has to find its feet, even if it finds its feet 10% lower than this.
So let's bring it down, Samir, to what people can take away as a clear point from this conversation and what they should do. Because right now there's concern, there's a bit of panic. Domestic Indian investors are showing resilience, they're showing faith, because
Yes,
versions of this have been seen, and you're probably seeing that as well in terms of the flows and the calls I'm sure you're getting. Is that faith warranted?
So as I'm saying, if you say very short term, we are taking that money and not knowing exactly what to do, but I'm saying in the middle of the maximum uncertainty, everybody says the maximum uncertainty means is the best buying opportunity, but we have to also think that if this uncertainty becomes a little less, does it mean that the market will go up 10% and therefore you will regret having not bought it today? That I don't think is happening so easily. Therefore, I would say for a normal person, an SIP type thing is okay or better, or an STP, which might be chunkier pounds, simply because the pace at which these markets globally fall and the pace at which these negotiations and then Europe coming back and China coming back are happening one way or the other, this thing will end in maybe, I don't know, 20, 30, 40 days or even less actually. But during this period, they can fall a lot, as we saw in various previous episodes when things go bad. So all I'm saying is just chill, relax. You have a long, super long weekend coming, the next long weekend coming. After that, worry. But what the takeaway from my side is, everything that happens in the world is not of benefit to us. Every line, every word is of benefit. No, something may not be beneficial to us or may be neutral.
No, fair enough. I mean, we look at China getting tariffed and we say, okay, I mean, there was a Wall Street Journal piece. There was a Wall Street Journal piece saying Apple will move its, some of its
How in 1 minute it can move? How in 1 minute it can move without being 100% sure that these relative tariffs will remain, that Trump's policies will remain in US. If separately we keep saying that give 90 more days, imagine if Trump gave 90 more days. Does it mean that that is better for the market or worse for the market?
Yeah, uncertainty.
Might be worse for the market. That means even this thing is not clear that what does he want. At least somebody should be clear. And right now, that is the uncertainty. So 15, 20 days, I've been saying for the last 10, 15 days, just chill.
Difficult for people to chill if they're seeing wipeouts on their portfolios.
No. They are not doing wipeout. They are actually looking right now for a beneficiary. I'm saying wait 10, 15 days, then we'll see who's a beneficiary and who's not.
No, fair enough. So, do you think the beneficiary could be companies that are domestic focused? I mean, we've been speaking all day. Everyone's talking about banks. One of our previous speakers made the point that what's changing for Indian banks, no matter what Trump would do.
I didn't want to say it. Otherwise, you'll say what has changed for me, because I've been saying it forever. That we are talking about the delta, the marginal thing. Otherwise, our same old HDFC Bank and ICICI Bank. And by the way, my food delivery company, which when it came into the index, people said, "Oh my God, this high P's company is coming into the index." So it came into the index at the end of March. And this month it is outperforming by 10% the index. It is supporting the index. It is helping the index. But the point is, these are the old things, old stories. They don't get affected by US tariffs. But we have not come here to discuss the big overall thing, but what is happening now and the analysis of that, rather than saying, "Oh, buy HDFC Bank because it's a great bank." That is sort of there, always been, and hopefully will be.
No, I'm not looking for you to say buy HDFC Bank. I mean,
financial.
People are trying to understand, what to do, because there's faith is there, all right, Indian economy, resilient, but it can't be blind faith and blanket faith. It has to be focused on, what is going to work. I mean, just getting your sense about what would be the most vulnerable spaces then.
So for me, the thing is that we have felt for a few months that IT is very bad. And now even IT, somebody might say, "Oh my God, if next week Infosys says no guidance." By the way, that was our basis on which we sold everything in Feb, that they will not be able to give guidance simply because April 2nd will be tariffs. So how anybody will know till April 2nd what is happening? Therefore, the companies or the customers will not be able to properly guide, not Infosys, but all these tech companies, to then further guide us. And now in the past, we could have said that when somebody sort of throws in the towel and says no guidance, no visibility, that is the bottom. Who knows? But we are not willing to buy like that unless something was trading at 12, 13, 14p. If you're trading at 20p, 21p, at least you should know what guidance you have, since that is the tradition in this sector to give proper guidance. So what I'm saying is we feel it is vulnerable. Now somebody can say it has already fallen X% and therefore it is discounted, but things like that. So the simple one for everybody is financials, because they did not do well for 2-3 years and their growth is not so much connected, and you have liquidity injection and interest rate cut and everything. Hopefully tomorrow 25 basis cut. But in IT, which is the big large cap part of the market, and the third one is consumer, in which you have seen how consumer discretionary, how badly it is doing, with big companies falling 18% in a day. And on the other hand, these staple type companies which grow 2%, and if they grow 3%, we are supposed to celebrate. Therefore, it is financials plus everything else other than these two themes.
Samir, most global notes that I've read the last couple of days are talking about looking domestic facing sectors. I mean, not just for India, across. And plus there is this 12,000 rupees in the hands of the consumer, correct, RBI doing, etc. Does that theme come into vogue? Staples, discretionary, etc.?
No. It comes only into food delivery, according to me. I'm not joking. Let me explain. So the staple, I don't know, when I get into something, I feel everything is around that. Let me explain. So the consumer staple is not only the catering to, say, whatever 10% or whatever percent people are paying income tax, including families. So therefore, it can't be enough. On the other hand, the consumer discretionary things, which could be because you can take EMI and therefore effectively have this saving be multiplied by 4-5. In terms of the normal consumer discretionary, we have seen, for example, look at it. We are supposed to have the hottest summer this year, right? And look at what happened to Voltas. The stock is down some 25% because there is so much competition in all these consumer discretionary sectors, because of, we look only at listed companies, but there are so many unlisted MNC subsidiaries working in India, from this Fujitsu to whatever, to Hire, to this and that. Everybody's there. And then every Indian distribution type thing like Flipkart or whatever's Tata's, whatever, all of them want Chroma, all of them want to make their own ACs, their own whatever, because they're all getting assembled by the same guys in India. So the competition from the companies that you don't see because they are not listed is equally intense. So we don't like this. We like travel, we like hotels, we like airline, we like Zomato, if that is also all consumer, but we just don't like these old things. Staples growing at 2% and with this maybe growing at 3%, we don't like.
Yeah, well, I think that's a fascinating example. Some of the white labeled or the back end manufacturers doing their own jig as well. Yeah, all of them. Okay, great. Samir,
Samsung, LG, all of them are there.
Yeah, agree completely. So unlisted and some of the smaller ones which are doing their own brand. But this is so pertinent. Okay, Samir Arora, make it a point to listen to what Donald Trump says for the next 5 months. We'll tally notes as well.
By the way, one more. So I have just got that book. So Peter Navarro wrote a book called Death by China.
Okay.
I also just heard about it yesterday only, so I've not even got it. But I just checked on the net. There's even a Netflix documentary which is also available on YouTube, and there's a book also.
Samir, Samir, the claim is that the person quoted in Peter Navarro's book is a fictitious person.
Yeah, his own name. His own name. I read all that. I also just read all this, but now I'm going to read the book. So you can also read the book or at least see the documentary. But I just for the public, so the economist that he quotes is, I think, a variant of his own name. Yeah. But I haven't read the book, so I don't know. But I'm just saying, this is where you have to get. There's no point in reading broker reports on this, because all these things are public now. Of course, they may change. They may change in the end, who knows. But just to get into this is fascinating. And for the first time, reading is directly helping them, save money or make money in the market.
I think Trump watching is what you should do over the next few days. Samir Arora
No,
is
no,
saying
not days.
chill.
Even otherwise, it's entertaining.
Yeah, that's
Maybe
true.
you get boring after some time, but right now it's quite entertaining also.
Yeah, that's the evening show that everyone wants to see. And yes, there is a quote from him. He was on the Oprah Winfrey show in the 80s talking about how he thinks tariffs are wrong. Samir, always a pleasure speaking to you.
Thank you.
Thanks. All right, Samir Arora there tells it how it is, and that's why these conversations are always so interesting. But what is India's stance on tariffs? Commerce Minister Piyush Goyal spoke about the relations between Prime Minister Modi and President Trump. He also talked about how countries such as EU and the UK are very good friends as well with the US. Listen in.
Formula-based tariff, and based on that formula, friend or foe, everybody fit into that formula and had a tariff imposed on them. So it's nothing to do with the fact that we are friends. Clearly, Prime Minister Modi and President Trump are very good friends, as are the administrations of the US and India, and as are the business persons and people of the two countries. So I think let's not conflate issues. There's nothing to do with, for that matter, UK is a very good friend, US is EU is very good friends all over. But I think this is just a formula-based tariff.
So, are you in conversations? Are you hoping that perhaps you'll get an exemption or perhaps a delay in the implementation?
Well, I think what we discuss in the boardroom is not discussed in a public forum.
And a no to BYD for now, by the way. So that's the other thing. Okay, just very quickly, mark the textile names, because I think those have flared up in trade this morning, amongst others. So Google does exports 2.5%, but the others are doing very well as well. There is IndoCount, which has done very well. So keep that in mind. There is also strength, I believe, in Himmat Singha, which is up about 3.5-4%. So some strong moves into select textile names today. Are some of the others doing this too? Well, let's talk about oil and gas, because the government yesterday hiked excise duty on petrol and diesel. But Petroleum Minister Hardeep Singh Puri has clarified that the hikes will not be passed on to consumer. More importantly, the cost of the LPG cylinder was increased by 50 rupees. And the government, I think Somit, who joins in right now to talk about this, has also said that the monies that the government gets from this excise duty will be used to compensate the OMCs for the LPG under recoveries.
Well, yes, all in all, it's a positive announcement that has come in from the government side for the oil marketing companies. Yes, the excise duty hike will impact the gross marketing margins that the oil marketing companies earn on selling every liter of petrol and diesel. But do remember that the sudden drop that we have seen in crude oil prices, that alone would have hiked the marketing margins by around 2.5 rupees per liter. So the future earnings would get limited, but the current supernormal marketing margins that the oil marketing companies are earning, which is anywhere between 11 to 12 rupees per liter, that would continue for the oil marketing companies. Moreover, the oil minister also said that whatever earnings that the government will get from the excise duty hike will be passed on to the oil marketing companies for the LPG subsidy losses that they incurred in FY25. So they incurred a loss of close to 41,300 crore rupees, and with this excise duty hike, government might get around 33,000 crore rupees, which would be passed on to the oil marketing companies, while the remaining amount will come in from the LPG price hike that the government has done of around 50 rupees per cylinder. Now, apart from this LPG price hike that the government has done, there's also a possibility that LPG prices in the international market would come down, given the fact that crude prices have come off sharply. So both these factors, that is the LPG price hike and lower international LPG prices, will compensate for the remaining amount of LPG losses that the oil marketing companies had seen in the financial year FY25. So all in all, a positive announcement coming in for the oil marketing companies. Apart from that, they have also said that currently they are having a crude inventory of around 45 days, and that is valued at close to $75 per barrel. So some inventory losses could be seen in the first quarter of FY26 for the oil marketing companies.
Okay, thank you for that, Samit. What an interesting morning it has been. Markets maybe not quite holding up. There is a fall from the day's high, and fairly steep one. We'll pull up the Nifty very quickly under the 22,500 mark, but holding up above 22,400. As we wrap India Market Open, Neeraj, I want to talk to you about a story that is blowing my mind. And we're going to pull up this cover of Time magazine that has it. There is a company in Texas which is called Colossal Biosciences. What it does is, it's into genetic engineering. And they claim that they have found, or I don't know what birthed, I don't know what the right term is. They have created 3 direwolf pups, which is a species that has been extinct for over 12,000 years. Now, this is the claim. It's been widely reported. I hope this is not fake news because it seems too good to be true, but that's mind-blowing.
It is. It is. It is. Are we actually looking at all of the extinct species maybe coming back, and therefore the worry around what could happen to the currently endangered species being a thing of the past?
Yeah, I mean, so much can happen here. Should man play God to this extinct?
Is it playing God though?
I mean, you're bringing back a species which was extinct 12,000 years ago. But yeah, we're the one who made them extinct. So yeah, so much to unpack. So much to unpack. But yeah,
nice one. Fascinating.
This is a fascinating story we saw this morning. Leaving you with that little nugget as we wrap up India Market Open. We hope you enjoyed the show. But there's so much more on offer for you on NDTV Profit. Ask Profit up next. That's the show, the right place to get answers to your queries.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me, as always, is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. Green on the screen, thankfully, after that manic Monday, Black Monday, whatever you want to call it, and it's a sigh of relief, really, for the Indian equity markets and the investor as well. In this extreme chaos that you've been witnessing globally, there have been a few very telling reminders that the India growth story exists and continues to do so. And the focus, I think, over the course of the last couple of days and over the course of the coming weeks will largely be on domestic economy, domestic plays. Of course, tomorrow is monetary policy outcome from the Reserve Bank of India. There's widely expected to be a rate cut. And so all of that is something that you need to understand from the perspective of what the context is right now. Of course, on the global stage, you could see a lot more chaos unfolding in the coming hours and days as tariff negotiations continue to take place. But at least on the benchmark level, you have a little bit of a cool off from the high point of the day, but we're holding at levels of 22,380, very close to the 22,400 mark. We were actually closer to 22,500 not too long back. The broader market's also looking sanguine off the day's high, certainly, but we are gaining about 1.3% or thereabouts for the mid-cap index, 1.6% or so for the small-cap index. And let's very quickly take a look at the market breadth as well. Yesterday, you had a very stark market breadth in favor of the declines. Today, on the other end of the spectrum, you have a lot more advances as well, and a lot of stocks that were beaten down in trade yesterday are actually gaining. IT, for one, made a sharp rebound through the course of the session yesterday and is up about 0.8%, of course losing a little bit of ground. Now, we are joined today by Swati Hodkar as well as Asta Jain. Thank you so much to the both of you. And yesterday, our reporter went out and asked a few people what they'd like to know, and we got a couple of interesting responses. So I want to play that out if we can right at the onset, and then we'll move to some of the questions that you're sending us on the numbers that you see on your screen as well. But play that out. Let's see what people have to say.
Recently, 4 months we have seen an inversion in the bond yield curve. Whenever this has happened, most of the time recession aata hi hai. So is this a start of recession or this is just a correction? This is my first question. And second question is, what metrics should an investor use in a falling market? In a bear market, क्या indicators हमें use करने चाहिए? Fundamental indicators, जिससे we are able to screen those companies जो next bull run में हमें अच्छा पैसा बना के देंगी.
मैं बाजार में जो है कि 40 साल से हूँ और मैं ये समझना चाहता हूँ कि आज गिरते हुए बाजार में किसमें इन्वेस्ट किया जाए कि हमारे लिए और जो नए लोग हैं उनके लिए हित और अच्छे हो.
So pertinent questions, and I think that reflects the mood of a lot of people investing in India. The question is not should you sell, and that's, I think, a very telling thing to talk about this morning. The question is, what are the fundamental indicators that you would look at when you're looking at long-term growth stories here in India, possibly stocks that have corrected and are at attractive valuations right now, and what stocks would you go out and buy? So Swati, as well as Asta, I think the questions are pretty clear. Asta, I'll come to you first. First, from the perspective of fundamental indicators, and it's a great time to be asking this question because already you're seeing business updates come through. Thursday, you're going to see the start of the earnings season with TCS. What are the key indicators that you're going to be monitoring?
Hi, good morning to all of you. So if I look after the key indicators, first of all, business updates is already coming now, which what I'm looking after is that the results. Results are the key for any stock selection. If the results are not good, whether the company is in a very good industry or a sector, but if results are not good, then definitely at least that stock will not going to perform. So we have to see the financial performance, in which most important is the bottom line growth. Bottom line growth should be very strong, and one should keep this in mind that this bottom line growth should not come with the help of a high other income or extraordinary items or exceptional item. So we have to exclude all those items and then see that whether company is able to generate good profits or not. So first of all, if I would like to go with something, then definitely the results. Secondly, as I've told you, bottom line is most important. Then, of course, companies' commentary, especially management commentary, holds importance. What management is speaking, what outlook they are giving. Because I can cite one simple example that Siemens has come out with their earnings outlook, and the stock has tanked 10%. It was a matter of about 2-3 months back. So just on the basis of management's bleak outlook, the stock tanked a lot. So we have to see this thing also, that what is the management thinking about the future prospects, whether it is on the macro level or at the company's level. So we have to take this thing into account also, because sometimes results are very good, but if the commentary is not positive, then definitely that stock will not perform strongly. So we have to see both the things in the commentary. If guidance is given, then that holds the most importance, what kind of guidance management is giving, because ultimately it gives the future visibility. So I think financial performance along with the management commentary are the basic indicators. And now other things which we need to see is definitely the management pedigree, promoters background is very, very important for any stock. Then balance sheet is leveraged or not, debt status of the balance sheet, promoters pledging are there or not. So these are some of the important, and margin, because if margins are good, sometimes what happens, bottom line growth is not that high, but if the margin growth is high, then definitely street like that also. Ultimately margin reflects whether the company is able to generate profit from the sales or not. So margin also holds a key importance. So these are some of the basic indicators we need to look. And definitely overall the macro outlook, we need to continuously keep an eye on what the global news is coming about that sector also, because sometimes that negative news about the sector can also play a spoil sport.
Right.
So we have to see all these factors. Yes.
While we've been speaking, we've seen a little bit of a further cool off in the benchmark. So I think good time for me to come to you. Some selling pressure coming through, and we were hoping that the gains from early on in the session would hold on. And of course, quite a lot can change in the remainder of the session as well. But any opportunities, and what would you go to buy right now? Because we saw across the board cracks yesterday, some of those beaten down stocks, of course, coming back. What would you venture out and buy today?
First of all, good morning, Alex, and all of you. Definitely, yeah. As of now, we are witnessing some sort of a cool off. Today's morning sessions at the start point of time, it really was good. But as of now, we are facing that, and Nifty is facing a very strong resistance of 22,500. So as long as it sustains below that level, my view will remain a cautious. Because yesterday we have seen that the Nifty has touched the feet of 21,700, which was the low which has been we have seen in the May 2024. From there onwards, we have seen a very strong rally, or say the uptrend in the past history. Now, technical analysis, what it says, the assumption of the TA is basically history repeats itself. Now, we believe that 21,000 is acting as a crucial support levels up to, it will form within the range of, Nifty will trade within the range of 21,700 or 22,500, in between that. A breakout on either side will decide the clear trend of the market. VIX volatility index is definitely really a point of concern. Yesterday, we have seen a 66% shoot up, and we have seen a cluster resistance at around 23-24 levels. If the India VIX cool off from the here onwards, and if it's break 19-18 levels, then we are likely to witness a uptick rally. But this market is likely to remain volatile for the coming few weeks as such. Rather than concentrating on the Nifty or the Bank Nifty, I will suggest try to be focused on the stock specific trading. If you ask me about the stock specific, Godrej consumer product really looks very good at the current levels. Even we have initiated a buy call for our clients as well. Why so? Because on the weekly chart, it has formed the inverse head and shoulder. Whatever fall we have seen into the market, this particular counter has hold its strength intact. It's well placed above the important moving averages. If you look towards the short-term moving averages also, it's trading about 20 DMA in the formations of the high tops, high bottoms. I believe it has a very strong potential to reach up to 1250. Currently, the counter is trading at 1185. So by keeping a strict stop loss of a 1150, one can definitely go for long positions. It's a consumer durable sectors. Another interesting counter looks good on the technical front is a Marico. This particular stock, even though in this kind of a market, it's holding its 200-day moving average. So Alex, this particular formation looks very strong. Volumes are slowly and steadily increasing along with the price momentum. Currently, the counter is trading at 665, 668 levels. By keeping a strict stop loss 650. One can go for a long positions for a target of 710. I will not suggest to buy the full-fledged quantity at the current market, but definitely 20-30% can be invested into these two counters.
Right. While the Nifty 50 is, down by about 250 odd points from its day's highs, let's also mark out some stocks which have fallen significantly from its day's highs. There's Tata Steel, which has fallen around 5.7% from its day's high. Trent has fallen about 4.9%. Hindalco about 4.3%. Titan is down by about 3.8% from its day's high. Tech Mahindra also down by about 3.6%. BEL down by about 3.28%. From the entire universe of the 500 stocks of BSE, there's Delivery, which is down by about 9% from its day's high. Siemens, of course, going through the entire demerger phase, is also down by about 8% from its day's high. Stark, Jacob, Sarda Energy, JM Financials are some counters which are down by about 7% from their day's high. So some important stocks to watch out for, which have kind of contributed to that drop in trade today.
I also want to pull up the patchwork of the Nifty 50 if we can, because we started off in the session with 50 out of 50 gaining. I just want to see how many of those stocks. Let's pull up the patchwork if we can, the heat map of the Nifty 50. Okay, so we're still seeing green on the screen, but you see a few telling names that have lost ground. HDFC Bank, for one, is trading flat at this point. Reliance Industries trading flat. Trend down 0.5% or so, but the heavyweights, Reliance Industries, HDFC Bank, Reliance, if I remember correctly, was up about 1.6% or thereabouts, or 1.5% earlier on in the session, and that losing ground is one of the key reasons perhaps that you can see a little bit of a cool off for the benchmark Nifty 50, which again reinforces the point that Swati was making, which is don't look at the index level right now, look at individual stocks. To that end, let's go to the next question.
Right. So our first question for the day is from Dinesh, who's from Gurgaon, and he's asking a question on the metal space. He's holding around 330 shares, bought at 345 a piece for Vedanta, and he wants to know whether he should enter at the current levels or not for the particular counter. Asa, I'll come to you on this one since he's a long-term investor. What's the view like for Vedanta, and should he make fresh additions right now at the current levels?
So, in fact, Vedanta has came out with the business updates also, in which we have seen the rise in the production. Still, those numbers were not able to cheer up the market because it is mainly dragged by the weakness in the metal sector. So right now, my idea here is not to enter at this point of time, because right now the more turmoil is created by the global news rather than the company's own fundamentals. It's better to wait for some more time before making entry into this counter. So my idea here is to enter at the lower level of around 330 to 335 rather than entering at this point of the time, because although fundamentally the business updates are good, but sectoral headwinds are still there for this counter.
All right, so that's the view with regards to Vedanta. A gentle reminder for viewers who are just tuning in, you can call us on the number that's flashing on your screens on the upper band right now. You can use that number to call us and ask all your stock related queries. All right, our next caller, Ashish from Hyderabad, is calling in. Ashish, a very good morning to you. How can we help you?
Yeah, good morning. So I have a query on the HPL Electric.
Okay.
So is it right time to enter, or we need to wait for further correction?
All right. Okay. Got your query, Ashish. I'll take this up with Swati. Swati, are the charts attractive enough for something like an HPL Electric to make an entry right now?
Maybe not at the current levels, because the particular counter is under the selling pressure and it's facing a very strong resistance of previous high, which comes to nearby 440. If you're getting any dips towards to 350, 320 within that band, definitely one can go for long positions, but not at the current levels. So wait for some more dips towards to 330 to 350 levels. Then you can take a review once again on this particular counter.
All right, that's the view on HPL Electric. Stock is up 2%. Bhupati is writing in from Visakhapatnam and asking about Wockhardt, which was under pressure. If I remember correctly, it dropped 10% recently. Yesterday, I'm not sure what the mark was, but it's up about 1.8% or so. Long-term perspective is being sought. Should you wait for some time? And suggestions for a buy level. This would be a contrarian call based on the kind of word that we've seen on pharmaceuticals, Asta, and the question marks, the clouds on whether or not there's going to be an implication for US sales. I know that the company and the management has very clearly stated that there's nothing that's going to happen that's going to affect their sales, because it's not so easy to shift supply chains, particularly in pharmaceuticals. It takes years. So would you hold on to this if you bought, or would you buy at these levels?
So if I talk about the counters fundamental seems to be okay. In fact, they have came out with the news recently, maybe on the 1st April, that they have done certain, research on certain products, and that has been successfully done. So the products are really getting good traction in the US market. But the main problem is regarding this tariff issue. So right now, it's better to wait on the sidelines and then just putting the money in. My idea here is to wait for some more time, let the dust settle down, and let's see what is there for the pharma sector by Mr. Trump, and then make entry into this counter. Because anyways, if some bad news comes about the sector, the stock can be available at the attractive valuations later on as well. So right now, rather than putting money into it, my idea here is to wait for some more time.
Okay, all right, wait for some more time. I believe we've got our next caller. Manohar is calling us from Bengaluru. Good morning, Manohar. How can we help you today?
Good morning, sir. Good morning, everybody. I wanted to invest in ABB India or Cummins India for a long time.
Okay.
Which is better? And is the sector good to invest right now?
Okay. Why these two? Have you shortlisted from a wider group, and on what basis did you shortlist?
Because of the power sector, they are related to the power sector.
Okay, interesting. Okay. So, Aslaf, from that perspective on the fundamentals, ABB trading higher by about 1.2%, 2007-40 or thereabouts. I think a lot has been said about the order book, where it stands. Execution is going to be key, and also power sector. A lot of people are talking about how domestic focused companies should be favored. ABB would be one of them, wouldn't they?
Right. So in fact, I'm liking more Cummins at this point of a time, although ABB has got a very strong order book. But I think some problem is there with the execution part, and we have seen that delay also. So that is the major concern about the company. So maybe in the management commentary, I would like to see how this thing gets tackled on. But Cummins India is looking very strong to me. Why? First of all, their results were super exciting, which they have posted in the Q3 FY25 numbers. The results were good. In fact, revenue expansion was very strong. And in fact, whatever levers are there, they are well placed for their margin expansion as well. So at this point of a time, if I have to choose between these two, I will like to go with Cummins. And our idea here is to enter into this counter at the lower level of around 27.20 to 27.30 with a price target of initial 28.30 to 28.40.
All right, so that's the view where ABB and Cummins are concerned. Our next counter that we're talking about is RVNL. K. Ravi Kumar from Hyderabad is holding 37 odd shares that he bought 4 months back at 496 a piece. He wants to know whether he should hold or average out or add some more at the current levels, or he should book the loss. He's sitting on a loss of around 5,700 odd rupees. What should he do more? His time period to hold is around 1 year. Swati, what are the charts indicating for RVNL?
2024 was not much good year. We have seen a correction mid of 2024 from May. The stock has corrected from almost 650 to now 300 odd levels. I believe that a more downfall can be seen. No wonder the counter is already trading in the oversold zone. But looking towards the setups, yes, I believe that 300 will be the very crucial support level for this particular counter. And up to that level, we are likely to witness some more selling pressure into this stock. So any dips towards to 300 levels can be a very good opportunity to take a buy call, because risk reward ratio will be a favorable, and your buying rate will also come down very heavily on the downside. Upside, majorly positive rally can be witnessed only above breakout of 400 rupees. If it's break that level, 400 levels on the closing basis, then uptick rally can be witnessed up to 470 to 480. So my view, just wait for some more time. If you're getting any dips to 300 levels, then you can add on, not at the current market price.
Okay, so that's the view with regards to RVNL. Next caller, Shweta is calling in from Hyderabad. Shweta, very good morning to you. How can we help you?
Hi Mahima, very, very good morning to you. And
I can feel the joy in your voice today since the markets are up, Shweta.
Yeah.
Yes, go ahead with your query.
But we can't know whether it is
Yes, that's true.
It's going to last or not.
Yeah, go ahead with your
My
query,
question
Shweta.
is regarding, CG Power. I have 115 shares at a price of 612.
Okay.
I would like to know whether I can add it at these levels. Add more.
Okay, and I believe this is from a longer term perspective, right?
Yeah, it is a long-term view, but if it is possible, I would like to know the technical view also, if it is okay with you.
Okay, I'll take both views quickly. Asta, I'll come to you first. What's the view like for something like a CG Power? She's already holding 115 shares, bought at 612 a piece. Should she add more?
I think at the lower level, one can add more. Now, the reason behind it, their results were good. And in fact, business outlook is looking very strong since this company manufactures electrical equipment like transformers, etc. So they're getting very good order pipeline for that. In fact, company is exploring the opportunities for the exports also. And they are looking for gaining the market share in the power segment. So I think all this counter is well placed to show more upside from here. The only thing is due to the volatility of market, rather than adding at this point of a time, maybe adding at a lower level of around 520 to 525 can be a better choice. But here the price target can be set at around 600 to 620 levels in the medium to long term.
Swati, do you also reckon with what Astha said, 520 are the levels where you will also take an entry, or do you think the current levels are attractive enough?
The current levels are not attractive to take a long positions. I definitely agree with the Asta. Any dips towards to 500, 510 levels, that will be a very attractive level too, because those are the levels which has been tested in 2024. I believe that the counter is likely to retest those levels, and then we can see some rebound in this particular counter. So wait for some more time. If you're getting any dips towards to 510, 500 in between that levels, you can definitely add on the long positions. For a upside, for a year and so, I'm looking for a target of 670 to 700 levels on the high side.
Coming back to you for a quick one on RVNL, K. Ravi Kumar is asking this question. Hyderabad is where he's tuning in from. Okay, it's already done. Let's go to the next one then. We got CDSL, and quite a few of these capital market plays were interesting earlier today. They were buzzing in trade. Let's see. Okay, so it's still up about 2.3%. Shailaja from Hyderabad is asking, didn't we just take Shailaja's question? No, this is Shweta's question from Hyderabad. All right. Sorry, Shweta. All right. CDSL, can it be accumulated at this current price for a period of 1 year? What would you say, Swati, on the charts?
Alex, I'm positive on this particular counter. If you look towards the retracement theory from 2023, we have seen a very strong rally from 700 to up to 2000 level. If we calculate the retracement, the counter has already retraced 61.8%, which is the golden ratio which we consider in the technical analysis, and it has forming a very strong support in the range of 1080 to 1100. I believe at least 20-30% can be accumulated at the current market price. Breakout level comes at 1250. If it's break that level, then the positive momentum likely to be carried forward towards to 1500. So those who don't want to miss the rally, they can buy at least 20-30% at the current market price.
Okay, so that's the view with regards to where CDSL is concerned. But with that, it's time to slip into a short break. But we'll be right back answering all your queries on the other side. So stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of there.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Welcome back. You're watching Ask Profit. It's time to start the queries again, and we've got a caller from Bengaluru this time, and we've got Basavaraj calling us. Good morning, Basavaraj. How can we help you today?
Good morning. Good morning.
Please go ahead.
I got 100 shares, purchase 100 shares of Nestle.
Okay.
2340. I am under loss.
Okay.
Is the right time to accumulate more?
2340. Okay. The price is currently 2,242. Okay. What is the time frame that you have in mind, Basavaraj?
Long term, sir. Long term. Okay. I can keep it for another 2 to 3 years.
Okay. Asta, on the fundamentals, what's the view on Nestle?
So the company is on the capacity expansion. If I talk about the Maggi, etc., I mean the coffee and the chocolate part. So first of all, that is a positive point for this company. And in fact, we believe that going ahead, definitely the kind of improvement we are seeing in the rural demand, that will also help the company in boosting good numbers. So we are positive on this counter, recommending a hold on this counter with a price target of 2450 to 2500, but in the medium to long term.
All right, so that's the view where Nestle is concerned. In fact, even the presser takeaways were interesting to watch out for because their outlook was strong enough. But we'll have to wait and watch out for as to how Q4 updates pan out for Nestle and see how the stock reacts to that. All right, the next question is from Vaishnav, who's from Bengaluru again. He's holding 399 REC shares purchased at 91 a piece, and he's sitting on a significant profits of 1.2 lakh rupees right now. He wants to know whether he should hold or buy more at the current levels. So Ati, I'll come to you. What are the charts indicating for something like an REC? Should he enter more, book some profits right now? What should be the next strategy?
If we look towards the long-term charts, definitely view is positive, and he has already bought at a very downside levels, and it is in good profits. I believe that the long positions can be hold, and I'm looking for a target of 440 to 460 levels in a near terms. So you can hold your long positions by keeping a profit stop loss of a 350 on a downside and hold your long positions.
All right, that's a view on REC, and the next one is BEL, and it's an interesting one to talk about. By the way, this is a question from Santosh Maripalli, who's asking about this. Can it be consolidated today? There is a fundamental update for this company. Of course, there is another order win that it has managed to bag from the defense space. Asa, on the fundamentals, would you buy into this right now?
Yes, I think, but not at this point of a time, because yesterday also we have seen some sort of a lower ticks in the stock prices. So maybe today we have seen it rising. But I think, and my idea is just on the basis of this news, we have seen it rising, but the stock can tend to move little lower again. So those are the attractive level. Maybe at around 260 or 250 odd level, this stock is a good entry opportunity.
All right, so that's the view where BEL is concerned. The next question is from Satish, who's writing in all the way from Texas. He's bought Spandana Spooty 1,000 shares at 313 a piece. He's saying that during NBFC collapse 6 months back, it was from a shorter term perspective. He wants to now know whether he should continue to hold, add or exit. I'll come to you, Astha, again for this one because he's continued to hold the counter even though he bought it from a shorter-term perspective. What should he do next? Should he continue to hold the counter or should he exit?
So when I have heard the management commentary, they were quite positive that they will be seeing some sort of a sign of recovery in the January 25 months or coming months. So I think that can be seen as a positive. Otherwise, I think stress in the asset quality was visible in their last quarterly numbers. So we really need to see how the company will be able to overcome that. So my idea here is to pull this counter, let the results come in, let's see what the management is now thinking about, and then make any sort of adjustment in this counter. Right now, just stay invested.
Stay invested is a view on Spandana Spurti, and this is a question, as we mentioned, it's coming all the way from Texas. Really appreciate that you're taking the time. Though I must say that a lot of the chaos that is unfolding is emerging from where you're at. Maybe you can give us some perspective on what the view is on the ground. All right, Rakesh from Hyderabad is asking a question. Is it good time to get into Enviro Infra Engineers and UCO Bank? So two very diverse companies, and he's not really specified a time frame. So Asta, I'm going to come back to you if you've got a view on Enviro and certainly on UCO Bank. If not UCO Bank, then which bank would you pick ahead of the monetary policy tomorrow?
See, Enviro Infra, when the IPO came, we were the merchant bankers as a HIM Securities. So I think I cannot comment on that part due to the compliance issues. But yes, talking about another counter, that is UCO Bank. UCO Bank is looking good to us, but I think they are much better public bank, rather than UCO Bank, in which Bank of India holds good importance as of this point of the time. So rather than UCO Bank, I think Bank of India is a good choice. In fact, SBI is also looking good to us apart from BOB. So these three counters are looking very good to us rather than UCO Bank.
So that's the holistic view as to what banking structure looks like right now for Astha. Astha, one more question. I'll stick with you because it's a recent listing, MobiKwik. Sharad from Bengaluru is holding 100 shares, bought at 313 a piece, and right now he's sitting on a loss. Let's pull up and see how MobiKwik has done since its listing, and he wants to know whether he should hold or buy the dip. What's the view like, Astha, and should he continue to hold?
So at the time of the listing, the major positive about this company was that it is into the profit. It was into the profit, as we have seen with the other counterparts. So that was a major positive. But I think afterwards the results came and the valuation seems to be a little stretched, and we have seen the stock falling below the level of issue price. So right now, I think just wait for some more time, let the results come in, and then make any sort of changes in the stock. Right now, idea here is to hold the stock till the results are in.
Hold the stock till the results are in is the view coming in from Astha on MobiKwik. All right, next caller, Subramani is calling in from Visakhapatnam. A very good morning to you, Subramani. How can we help you?
Yeah, good morning. So I am tracking this Ashoka Bilcon.
Okay.
So it is right time to buy some shares, or I need to wait for further more correction?
Okay, so when you say you're tracking the stock, are you seeing the fundamentals of the company or are you reading the charts for the company?
Fundamentals actually.
Fundamentals. Okay, as I'll take this up with you, Ashoka Bilcon, what's the counter looking like?
The counter, when they posted the numbers, were not looking very strong, because what we have seen in the numbers that they were subdued numbers which this company has posted, and in fact there was the delay in their execution, and in fact their order awarding was also like it was a delay in that part also. So after that, we have not seen a very good momentum in the stock prices. Right now, company is working on reducing its debt as well. So I think all we need to do is just wait for some more time. Don't make a fresh entry into this counter, because we really need to see how the company will be performing in its upcoming numbers. So idea here is to wait for some more time rather than making fresh entry at this point of time.
All right, so that's the view on Ashoka Bilcon. The next question we're taking is on Hind Copper, and Shabir has got this question on Hind Copper. Is this the right time to enter into the counter? And he's just typing and messaging whether or not this is a short-term or long-term. Shabir, type quicker. I need to ask the question. So without knowing what your time frame is, I'm going to take the question across to Swati on the chart. Swati, is this the right moment to get into Hind Copper?
Alex, not at all. This particular stock is showing a very strong correction phase, and I believe that is likely to be continued in the near term as well. Downside, it has a very good support at around 160 to 150 levels. If it comes to that level, then you can think about buying because the risk reward ratio will be favorable, but not at the current market price.
All right, so that's the view with regards to Hind Copper. The next question is from Siddharth, who's writing in from Kolkata, and he wants to know the right price and time to add Infosys or TCS from a longer term perspective, or even a mix of both. Asta, I'll come to you on this one. What's the view like? We've seen a significant correction in IT in the past few days. Today, the Nifty IT is comparatively doing better, but do you think that, considering the outlook that has been painted for FY26, it's the right time to enter these counters?
No, I don't think so, because I would really like to see first of all the results, and the key here is a management commentary. We really would like to hear what the management is thinking about this global ongoing happenings. So right now, just wait for some more time, because these stocks are not so much attractive at this point of a time that one can make a direct entry into. So the idea here is not to make a entry either in Infosys or TCS at this point of a time, and results are not now just round the corner. So let's wait for the results and then make any sort of entry into this count.
48 hours to be precise. It's going to be an interesting break to the trading week. Remember, we're going to be on a holiday on Thursday, but our colleagues are going to be working. Of course, the research team is going to get you insights on
TCS.
Yeah, is it going to be you?
No, that's going to be Puneet. But yes, TCS is set to post its results on 10th of April. And despite of that being a holiday, we'll bring all the coverage that you require on 10th.
And tune in bright and early on Friday morning, because who knows, you could have updates, of course, on TCS, but also from overseas that you need to bear in mind. And the effect of the monetary policy outcome also could be playing out not just tomorrow, but also on Friday. But let's take the next question. It's an interesting one. Tata Motors, it's a stock that has been under tremendous pressure because of the auto tariffs that were announced by US President Donald Trump, 25%. That is seen to have an effect on Jaguar Land Rover, which, as you know, has a large presence in the US, about a third of its volumes coming through from North America as a whole. And the company announcing not too long back, over the weekend, in fact, that it is pausing exports to the US in light of this latest development. It's trading at 592. It's down about 11% in the last 5 trading sessions or thereabouts. We've got Anup, who's bought at levels of 676 on the 18th of March. He's got a long-term view that he's seeking. What should he do now? Asta, this is a stock over the last 4 or 5 years that has seen huge gyrations. It has dropped to double digit. It's gone all the way up to 800 plus levels. What would you do with this?
So company in its commentary, when the results came, they were very much positive about the US business, and they were started seeing some sort of green shoots in the EU, that is a European business as well. But now the things have completely changed. But my idea here is to wait for some more time before making any sort of selling into this counter, although we all know this is mostly affected by the kind of news flow that is going on. But still, I would like to wait, because in their commentary, they have maintained their EBIT guidance. And in fact, I just want to see how their European business pan out to be. In fact, they have certain plans to launch new products in the Indian business as well as. So looking after all this, I think rather than selling at this point of a time, hold it patiently.
All right, so that's the view with regards to where Tata Motors is concerned. Our next caller, Raghu, is calling in from Karnataka. Raghu, a very good morning to you. I believe you want to ask about Alok Industries.
Yes, good morning. Yeah, I hold Alok Industry 2000 quantity. Buying price is probably. So I hold this stock from almost 6 to 7 months. So I want to know if it's good to average now, or exit in loss, or hold.
Okay, and what's the time horizon like for you to keep holding the counter?
Maybe 1 year plus.
Okay, got your query, Raghu. I'll take this up with Swati. Swati is sitting on a loss of 27,000 rupees right now. Should he continue to hold, average out, or should he book the losses right now?
Overall, as of now, the trend is looking weak, but I will not suggest to book the losses because we have seen a correction in the last 1 year. If the stock find out some good support at around 13 levels, definitely we likely to witness some sort of a reversal in the near term, which might take a counter towards to 2024 levels on the upsides. Wait for an average period, because I believe that we might witness some sort of a selling pressure, which will drag a counter towards to 13 to 12 level. So at that level, you can definitely average out. So your buying price will come down. And if you're getting any rise towards to 20 to 25 levels, you can book your profits.
All right, I'm just clarifying while I'm on the chat, right? We've got Rajesh who's writing in from Dubai, and he says that he's been accumulating HDFC Bank, and now cumulatively over the course of 30 years, he's accumulated, wait for it, 56,000 shares. At the current value at 1,762, the accumulated value of that is about, I've got my calculator out, 9.9 crore rupees. I've told him on chat that he doesn't really need guidance because he's accumulated a significant amount of wealth purely by dint of adding to his positions, and this is over a period of 30 years. Remember that. But Asta, over the course of the next 12 to 18 months, he's asking for what your outlook on the stock is and based on the fundamentals, right? So this is an individual who's already holding 10 crore worth of HDFC Bank. He's seeking advice. I've said that he doesn't need it, but what advice would you give?
Yes, you are right, Alex, and congratulations first of all. I mean, so now talking about this counter, first of all, their results, business updates have come in which credit growth was very good, deposit growth was good, and in fact, what I have seen is that their deposit growth have outpaced the industry peers. So it was very, very strong. So I think, and this bank has a potential to move upside from here on the basis of kind of business outlook the bank is giving, because their asset quality is among one of the best asset quality, and NIMs are also at a very good level. 2,000 to 2,100 is the price target which I would like to attribute to this counter at this moment of the time. Remain invested in this counter.
All right, remain invested in HDFC Bank is the view coming in from Asta, even if you're holding 56,000 shares. Interesting. Interesting. I mean, I'm just very curious as to what percentage of his portfolio is HDFC Bank. I've asked him that question.
You did? Okay.
Let's see what his answer is. All right, moving from one bank to another bank, Satish from Bengaluru is calling in. And Satish, a very good morning to you. I believe you want to know what's the right time to buy IDFC First Bank. Is that correct?
Yeah. Good morning. You have got a wonderful, fabulous program.
Thank you so much,
constantly
Satish.
Watch it. I'm a retired banker, State Bank of India.
Interesting.
Retired chief manager, and now I'm investing in IDFC.
Okay.
Could you please tell me, because of yesterday's downfall, is it the right time to invest in the IDFC?
Okay. Okay, Satish, and you're a long-term investor, right?
Not so. I'm little short term, but long term I want.
Okay, you want the view. All right, I'll take this up with Asta, and Satish, thank you so much for those kind words. You made our day. Asta, I'll take this up with you. IDFC First Bank, what's the view like?
So view is positive because their business update was good. They have posted a very strong growth in their loans and advances as well as deposits. But if I compare it to the big banks like HDFC, then definitely the traction is more there. But still in IDFC First Bank, I would like to recommend hold at this point of the time. So yes, one can remain invested in this counter. Let's wait for the results to come in, because we have to really see MFI stress was there in their book. So I really need to see how that book is going out to be in the coming quarters. Wait for the results in this counter.
70%, Rajesh, 70% of your portfolio is HDFC Bank. Okay, so ordinarily the advice would be to reduce concentration risk, but then man, you've got a 10 crore holding in HDFC Bank. What do you say to that, right? But we've got Santosh from Chennai who's holding Sundrop, or rather he's thinking of investing in Sundrop brands. I'm not sure. I'm not sure what this company is engaged in. It's in edible oils and food products. From what I can say, it's Agrotech Foods. It's a 2,900 crore market capitalization company. And Asa, I'm not sure if you track the company. If so, what's the view?
No, Alex, I don't track this company.
Okay, Swati, I don't know if there's too much volume either. So, do you have any specific view on this?
If we're looking towards only the chart setups, definitely volumes are not really doing very well. The price momentum as of now, it's currently trading at 763, and the momentum as of now on a weak side. So not to initiate a long position because we are getting very zigzag rally in this particular counters. So stay away from this particular stock for a long-term investment.
Okay, stay invested. Is that right? Is that reading correct, Swati? For agrotech foods?
Stay away from.
Stay away. Okay, all right. Stay away from something like an agrotech foods. Interesting. It's in edible oils basically, and it has benefited a lot, in fact, from the rising palm oil prices as well. So it's a company.
I must state that our viewer has been reading and he's pointing to a management change. I must confess that we haven't looked at it, and so don't only base your investment decision based on what we're looking at on the charts, or in fact what the fundamental analyst Asta has said, because she doesn't have coverage. So if you've done your own research, then please go ahead and follow the research that you've followed.
Absolutely. All right, the next counter that we're talking about is Dreamfolks. Akshay is asking this question. He wants to know whether this is the right time to buy Dreamfolks from a longer term perspective. Asta, very interesting business. Do you think, I mean, it's the only business right now in the listed space. It's a monopoly stock. Do you think it's the right time to enter something like a Dreamfolks?
Dreamfolks is looking good to us, and definitely if I see their results also, then results seems to be on the decent side, and the kind of industry tailwind this company is having, I think yes, one can make entry into this counter. The only caveat is that right now the markets are very much volatile, so maybe it can move downwards in line with the market movement. So those can be the level like 200 or 195 where one can make a fresh entry. So this is what I believe. Enter into this counter, but at the lower end.
All right, so enter into the counter, but wait and watch out for as to how things pan out. All right, we have our next caller lined up. Kamran is calling in from Singapore. Kamran, a very good morning to you. How can we help you?
Wow.
Yeah, hi. Good morning. First of all, I would like to say that your show is really nice and it really helps people.
Thank you so much, Kamran. Thank you so much for watching us all the way from Singapore.
Thank you. So I have one question.
Right.
I normally try to keep at least two stocks in each category. I have Apollo Hospitals for healthcare.
Okay.
And I was looking into Fortis Health.
Okay.
So I wanted to know valuation and growth up to 5 years. Is it a good time to invest in Fortis Health or any other stock in this category?
Okay, I believe you're looking at this from a longer term horizon.
Yes, I am.
Got it. Got your question, Kamran. I'll take this up with Asta. Asta, he's adopted an interesting strategy. He's picking up two counters from each sector, and he's saying he wants to know whether it's the right time to enter something like a Fortis right now.
So Fortis has recently go up with some acquisition strategy of Shriram Super Specialty Hospital, if I'm not wrong. So in fact, they have acquired that hospital and they have got a very good presence in the Punjab. Their 800 bed facilities are there, and then they have 4 facilities there. So in the healthcare space now, Fortis is also emerging as a good option. So yes, one can make entry into this counter. This is what even I believe. But the only caveat which I'm saying for all the stock is that market conditions are volatile. So that is the major thing to look upon, whether to enter at this point of a time or wait for some more time to get the stability into the market. So we need to really see that. That is the only thing. Otherwise, fundamentals are good for this counter. Go ahead with this.
Okay, fundamentals are good. So that's a view on the hospital space. And thanks once more, Kamran, for calling us from Singapore. Really appreciate that you've taken the time, and thanks so much for your kind words. We've got Siemens that we're talking about, and Ajita from Aurangabad, Maharashtra is asking about this after the demerger, and yesterday it was down 40% because of that. The stock is just about flat right now. What are the prospects? Because if I remember correctly, there was a note that came out today that talked about a 17% upside. I cannot remember who the brokerage was, but Asa, on the fundamentals, would you buy into this right now?
Yes, one can have a look at this counter, but the only thing is that, as I have discussed earlier also, the management commentary which came in few months back, they were not sounding to be very much optimistic. Although this demerger has really created the fundamentals on a very stronger side, But since the management was not that optimistic, so I really need to see the results first. Maybe I'm sounding a little bit conservative, but I really don't want to enter into this counter without seeing the result and the management outlook for the coming quarters. So on that basis only, I'm recommending to wait for some more time before making entry.
Okay, so that's the view with regards to where Siemens is concerned. Next caller. We've seen a drop in the line there, but next WhatsApp queries from Akshat, who's writing in from Greater Noida. He's holding 10,000 shares of GMR Power at an average price of 90 rupees, and he wants a 5-year view on this one. Asta, I'll have to stick with you again for this one. What's the view like for something like a GMR Power? He's sitting on a significant profits of around 2.18 lakh rupees.
Right. So if I talk about this counter, 5-year horizon is really a long one, and definitely this counter is looking good from that perspective. But here I would like to suggest book some of the quantity, maybe not more than 25%, but at least book 1/4 of the quantity which you are having into this counter, because here if the quantity is 10,000 shares, then definitely I believe that somewhere at around 2,000 or 2,500 shares one can book profit in, because he's really sitting on very good profit. But long-term perspective is looking very good for this counter, and we believe that this counter is poised to show more upside from here. Initial target can be set at around 130 to 140 odd levels.
130 to 140 is what you watch out for on GMR Power. Nidhi's got a question for us, and she's writing in from, I don't know where, but she's asking about NMDC. 700 shares is what she's got at a price of 67 rupees per share. She's wondering whether to add more the current price for a period of 3 months. What are the levels that you would watch, and where would you put the stop loss, Swati?
See, as of now, the view is a bit cautious. Downside, it has a cluster support nearby 57 rupees. If you want to keep a stop loss, 57 will act as your stop loss. Upside momentum can be seen only if the stock manages to give the breakout of 70, which is acting as a crucial resistance levels. Any move above that level will extend the rally on the higher side towards to 80 to 84 levels. So as of now, the view is cautious. Try to put the stop loss as 57 and carry your long positions.
Okay, it's time now, ladies, for the rapid fire segment, and you know what this means. We throw as many questions at you as possible over the course of 2 minutes. And let me start by taking a question from Mr. Venkatramanan on Trent. It's a stock that has been under pressure. He's bought at levels of 6,500. Can it be accumulated at the current market price today? And he can wait for 2 years. Asta?
Accumulate, but not at this point of time. Maybe at the lower level of around 4,500 can be done. So yes, for 2 years, hold this counter and accumulate at the lower levels.
Okay, Sankara wants to know whether to invest in Larsen & Toubro right now. He's already holding. He wants to hold 100 odd shares of Larsen & Toubro. Swati, what are the charts indicating?
Yeah, as of now, the peak is positive for longer term duration, but if you're getting any dips towards to 2,800, 2,850, that will attract attractive levels. So buy on every dips towards to 2,850, but not at the current market price.
Okay, all right. The next one is on DLF. 50 shares is what Akhil has at 780 rupees. Can it be added at the current level for the medium term? What's the view, Asta?
Added at the lower level, not the current level, maybe at around 600 to 580 odd.
Okay, Viber from Mumbai is writing he's holding 12 shares of Hyundai purchased at 1868 a piece. Should he hold or exit? Asta, what's the view like?
Hold is the strategy at least.
Okay, viewer asking for penny stocks. No penny stocks are recommended on this program. Suzlon is the name of the counter we're talking about. Kunal wants to know 500 shares. He's not given us his time frame or his buy price. But would you hold for the long term? Asta?
Yes, we would like to hold this counter for the long term. Price target can be set at around 50 to 60 odd levels.
Okay, so Naveen from Kadapa is writing in. He's bought water-based 90 shares at an average price of 72, and this was after the budget announcement. He wants to know whether he should book the current losses or should he continue to hold. Swati, on the charts?
I will suggest to book the losses on every rise towards to 85 odd levels on higher side, but not to carry the long positions for a longer term duration.
Kadapa in Andhra Pradesh. Wow, fantastic. Angel from Mumbai is asking about Hindalco at a price of 676.29. Would you hold or would you add more at the current level? What's the view on the charts, Swati?
My view is cautious, but not to book the losses at the current market price. If you want to buy or add on, wait for some more time. I believe that the stock will find out a support nearby 500 to 480 levels. That will be a good attractive price to take the average out position. So at the current levels, just hold your long positions.
Okay, on that note, that brings us to the end of the rapid fire round. Asa, Swati, thank you so much to the both of you. It's because of you that our viewers are benefiting, and appreciate the time that you have spent with us. And viewers, well, you've absolutely made our day, and our producers sitting in production control room as well are smiling. Their teeth are very clearly visible because so much love has poured from you today, and hopefully this program continues to help you out over the course of your investing and trading journeys. Do stay tuned, lots more coming up, starting with Know Your Company up next. Do stay tuned.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome to Know Your Company. It's a show, of course, which gives investors hopefully powerful and actionable insights into the fundamentals of a single listed company daily. Today we're going to track HPCL, and with me is Mihika Barve, and of course she tracks oil and gas quite closely and therefore will help me break this one down. In terms of what the company does, you've seen petrol pumps of HPCL across the country. And we have those dotted even in the remotest of areas like Spiti, etc. as well. We find HPCL pumps, and therefore it's the third largest Indian refining company in total sales, but also one of the largest distributors of oil. In terms of refining though, it owns 2 refineries in Mumbai as well as in Vizag, and it has around a 22,000 plus strong nationwide retail outlet network. It distributes its oil across this retail network and thereafter retails it to the end customer. You'll find these dotted across the country, of course, from Leh all the way to Kanyakumari. You'll see that across the board. So HPCL very, very clear on what it does. It does oil and gas distribution. Now, in terms of what it is, let's dive deeper. It's an integrated company involved in the entire value chain. So it acquires oil, refines it, thereafter distributes it. So the acquisition of oil, if oil prices were to go up, therefore the profitability starts to get impacted. Currently, oil prices have sunk and therefore positive, and that's why the company is in focus, and hence we're doing a KYC on it. Now, in terms of markets and sells diverse range of petroleum products, not just your petrol and diesel. It also has a growing presence in oil and gas exploration as well as in the renewable space. It's ancillary to what it does, and therefore oil and gas distribution will oil and gas exploration will likely allow it some more leeway with regard to profitability, some more certainty with regard to profitability, because currently its profits depend on crude oil prices and refining margins, which Mihika will explain in better detail. So Mihika.
You always have GRMs, the term GRMs thrown at you by the companies. It's in their financial results as well as analysts. This stands for gross refining margins. The refining margins is basically the value that a certain petroleum product has which is produced from 1 barrel of crude minus the actual crude oil cost. So this is when you have lower crude prices, it actually benefits the refining margins, and then this has a follow through effect to the marketing margins. Now these are not revealed by the company, but you do have analysts who closely track the company naming them. The revenue from selling your products, which is mainly your petrol and diesel, which is widely tracked, minus the refinery production costs. And now, like we all know, you have petrol and diesel prices that are currently fixed right now. So lower the prices of crude, it kind of follows through. Now, in terms of the kind of risk that the company may be facing right now is, like I said, petrol and diesel prices are currently fixed at the pump. So the volatility in crude prices is what has an impact on their refining margins and thereby their marketing margins. And this could be hurt if crude prices rise. And it's also key to note that the government just yesterday has hiked the excise duty, which is a duty that the central government charges on a company like HPCL, and this excise duty is actually calculated and included in your petrol pump price. However,
this is for refiners.
Yeah, this is for refiners.
Just trying to
clarify marketing company
that
as well, right? So
Correct.
This actually has an impact on your petrol price.
Correct.
It has an impact on your marketing margins, but we as consumers will not have a price increase. It will actually be undertaken by HPCL. The second thing that's very key to understand is LPG losses. Now currently HPCL and the other OMCs have to sell their LPG cylinders at a subsidized rate, which is lower than the cost of making these LPG cylinders and what's inside them. And till now, in 9 months FY25, HPCL specifically has seen losses of 7,600 crores. However, yesterday the oil minister said that the same excise duty I currently talked about will be used for the compensation of such losses, and it's not new. OMCs have gotten compensation for their LPG losses back in FY23 as well, but it did not come through in FY25. It was expected in the budget, but the company does need this in order to insulate itself from the heavy LPG losses that it's currently facing and could face going in the future. But Harsh, it's time for the KYC ratings. Why don't you give the viewers of what we're going to analyze?
Absolutely. Let's do that. Let's quickly look at what we'll analyze on this one. We'll have the income statement, the balance sheet, the cash flow, return ratios as well that we'll analyze. We'll also look at shareholding, street cred and street coverage. But outside of that, we'll also have a look at the valuation picture. So we'll look at all of these when we're analyzing this one, HPCL, Mika, start off with the income
Let's start off with the income statement. It's a little trickier because it has seen volatility. Now, I want to go with just the revenue, EBITDA, and net profit numbers. EBITDA margins, while it's something you usually look at for a company, for something like an HPCL, that's not what you look at. So, revenue, in terms of the 9 months FY25, you've seen a growth 2.3% uptick. This is higher volumes and even a certain hike in petrol and diesel prices like you've seen during the financial year. However, EBITDA is what's taken the hit. You've seen volatility in the gross refining margins as well as marketing margins because your oil prices have been volatile this year. That's why on a 9-month FY25 basis, EBITDA is down 46% and even their net profit is down 66%.
How much of this is impacted by LPG as well? Because you suggested around 7,600 crores of losses.
Is losses. So it's kind of offset whatever profit it would have actually met. This is kept in a separate buffer.
But this would have been much better off.
Much better off if LPG compensation had come.
So likely if that LPG compensation were to come, Mika, this number will change.
Yeah, and it's widely expected to come because it's gotten that in the past. But from a 3-year basis, and it's key to know that FY23 was one of the years that all the OMCs faced heavy losses despite that kind of, downtick in revenues then. You've seen over FY21 to 24 revenues growing at a 36% CAGR, EBITDA at 24% and net profit at 17%. And that's why we've given a neutral rating on this one, but it's key to know their integrated margins. Now, integrated margins are your refining as well as your marketing margins blended. Now, in Q3 FY24, 7.4 rupees per litre, Q4 you've seen 8.8, and you've always seen a kind of a volatility. Q3 FY25, it stood at 12.5, which is in the super normal range. Q4, you saw some correction. Prices have always been volatile for oil, 10.1, but it's actually Q1 of FY26 that the companies are again witnessing supernormal margins. So in terms of, while they do stand very high and, higher than what we've seen even a year ago, because of the volatility of, earnings throughout any quarter, we've given Hindustan Petroleum's income statement a neutral rating. But Harsh, what does the balance sheet?
Sorry, Q1 FY26, you were suggesting that it will get better.
Yeah.
But also want to point out this excise hit that they will take. Will that knock off the possibly better margin they would have made in Q1?
It does have some impact that because they're going to absorb that ₹2 cost, so that increases.
Correct.
And furthermore, it all depends if prices sustain. Because if prices continue to trend lower, then you have inventory losses. Because in Q3, Q4, you've seen them buying oil at a much higher price because at that point that was a cheaper rate. But now we are hitting 4-year lows left and right.
So what I'm trying to say therefore is, should you keep higher hopes from Q1 FY26?
For now, the ₹2 excise duty does have an impact, but they're still so maybe a 13 rupee margin, they're going to an 11 margin, which is still an uptick sequential.
Sure. Point taken. Okay, let's go across to the balance sheet. Let's quickly look at how the balance sheet is stacking up. When you're looking at equity, largely flat. When you're looking at it from a 3-year perspective, that increase just seems to be an increase from a perspective of bonus shares, stock split, etc. So therefore, no real change per se from an equity standpoint. Let's look at reserves and surplus as well. And there you go, fairly steady in that sense, even where reserves is concerned. When you're looking at debt though, and this is where it starts to really become important. The debt picture, the borrowing number has increased by 1.5x. And is this the correct way or the best way to look at it? I'm not so sure. So the way we rather look at this number is EBITDA to borrowing. Whether my EBITDA growth is matching the borrowing growth. And we've seen a 50% roughly EBITDA growth from FY22 to FY24. The borrowing number also has gone up in the same kind of clip, and therefore we've given this a neutral. This is the real key number to look at, Mihika.
And it's key to know that why borrowings have gone up, because they had a capex. They're building a Barmer refinery, which has over around 53,000 crores of capex spending that has been put in. So that's something you need to realize. But that's why you've seen that borrowing number seen an uptick, but you need to see how EBITDA and borrowing have grown, like you said.
And borrowings also because of subsidies, right, Mihika, to a certain extent. When you have those large subsidies which are pending, you'll park some of that within the short-term borrowings on the liability side. Those assets will get parked, and that's the other piece. But let's look at cash flows, and cash flows, we'll just look at the 3-year CAGR, and the most important metric here is the cash from operations which are coming through. Everything else will likely not be the most important, and therefore when you're looking at cash flow from operations, and we'll focus in on only this one number, it's around a 11% CAGR growth that we've seen from March of 2021 to March of 2024. So that number looking okayish on a 3-year CAGR basis, not bad. Of course, there's been some capex, some fundraising due to various activities, and therefore your net cash flow is negative currently. But this is the key number that we'll want to focus in on, the cash flow from operations, which has grown fairly okay for a PSU in a price regulated environment where your prices are fixed. And therefore profits are largely going to be capped.
And we've not seen
a bad
since
number.
2022, we've not seen prices change every day. And
Correct.
even your operating cash flows, net on net, they stand higher than what they're investing as well.
Correct, absolutely. Let's therefore look at return ratios.
Yeah, let's look at your return ratios. Now there is volatility even there, and we've seemed to establish that. FY22, let's see, your return on common equity stood at 18%. It took a dip in FY23. Like I said, there were losses experienced by the entire space, but we did see supernormal growth in FY24 because there was a high recovery in terms of your losses at 41%. Return on assets, they stood at 5% in FY22, dipped to -4% in FY23, 9% in FY24. And then return on capital employed, you had 13% in FY22, FY23 does not come into consideration in this space because of the losses, FY24 28%. So there's been a lot of volatility, and it's also key to, you also have to take into consideration what the picture will look at as the FY25 numbers come in place. So you've given a neutral rating in terms of return ratios, while they are healthy return ratio metrics when they are positive, but because of the volatility over the years, it's a neutral rating on this one.
And will this always be volatile, Mika? That's really the key question.
Yeah, but that depends on if they are in a capex cycle, how are crude prices playing. There's so many moving factors, as well as demand when you have renewable energy coming in, but demand doesn't seem to be as huge. They're seeing volume uptake. But I think we should go to the shareholding. Well,
one piece here, Mika. So on return ratios, why are we ignoring the FY23 number? And I'm covering this only because we've not flashed it anywhere as part of our graphics, but the FY23 number has a loss. So there's a 9,000 crore loss on a standalone basis which SPCL has made in FY23, which is why you will have a negative return ratio, or therefore return ratio ROC not applicable. But otherwise you'll see these fluctuating return ratios because there'll be bouts of profitability followed by losses. So this is par for course for a company like this. If you're looking to invest in a company like this, this is something you should expect and anticipate in any case.
That's right.
But yes.
Yeah. Shareholding, well, first it's a government-owned company. You have Government of India holding majority share, 54.9%. That's not changed over the course of March 22 to December 2024. DII interest at March 22 was high, 34%. This has fallen as of December 2024, but only because your foreign institutional investors have taken interest, and you've seen a 10.11% to a 14.44% shareholding change. And you've also seen some retail participation coming in to 8.84%. So from a shareholding pattern, you have strong Government of India as the promoter. It's a PSU company. You have the backing, and they do sweep in when in times of needs. You have domestic as well as foreign interest, and even a retail aspect to it. So it's a thumbs up on the shareholding. Harsh, but how does the share performance, stack up?
So just quick correction here. The March 2022 number of retail is around 10%. So that's one change we'll need to make. So please keep that in mind as well when you're looking at these numbers. Apologies. Yes. Street
cred.
Street cred. Yes. Let's look at how the stock has moved actually. And in terms of the way it's moved, we've had a very muted sort of performance on the counter. 1 month, of course, we've had very good move given the way in which crude has moved. And a lot of the movement in the stock price will depend on crude. Mika, please correct me if I'm wrong. But 11% in the last month. The year-to-date number, though, is more muted, a negative 12% number. The 1-year returns are 17% odd. and the 5-year returns are around 162%. So it's been a 2.5 bagger in that sense in the last 5 years. Now, in that sense, it's a neutral, because when you're looking at the way in which the stock price moves, it largely moves in line with crude, and it's been a fairly flattish kind of move, at least on the year-to-date period, rather negative 12% year-to-date and just about 17% on the last 12 months. So given the volatility, we'll give this a neutral on that count. Mika, street coverage.
Very widely tracked. You have over 30 analysts tracking the stock. You have 64% of the analysts that actually track the counter have a buy call. So 22 analysts recommend a buy, 5 recommend a hold, and only 7 recommend a sell rating on this counter. In terms of the return potential, you do have a 14% return potential for HPCL. So it's a thumbs up on this one. It's widely tracked. You do have the street more bullish on the counter. And lastly, Harsh, I'll give it to you for valuations.
Okay, let's have a look at those. Let's quickly pull those up if we can. When you're looking at the price to earnings ratio, the current price to earnings is around 8 times. We won't look at this 1 year forward because it's more difficult to gauge, and therefore let's look at it on a current price to earnings basis, around 7.5 odd times. Its peers, BPCL, IOCL, slightly more expensive, nothing material per se, but maybe 10 to 20% more expensive. But when you're looking at 5-year averages, the 5-year average valuation is at least 20% lower for an HPCL to what it is currently. And it has always traded at a discount to a BPCL and IOCL. And therefore, we're going to give this a neutral, because you're largely in line in that sense with both 5-year averages as well as with history.
And Harsh, I want to point out that we've seen, OMCs have always known for single-digit valuations. We've seen periods in FY23-24 that the stocks were trading at 3 to 4 times. And a reason why HPCL has always gotten, discount in terms of valuations is because it is the biggest beneficiary when oil prices go lower, because it markets more products than it refines. So that's one of the key aspects I want to highlight. But a neutral picture.
I'm not sure. Do we have the shareholding pattern? If we can pull that up one more time, very, very quickly. Okay, I believe, there we go. Perfect. So, Mika, quick check with regard to shareholding. 55% government ownership, that remains quite solid. The DII is held around 15%, now hold 22% nearly. FI holding has gone down, as is always the case when DIIs increase their holding. And the retail participation has gone down slightly. So, largely, this is why we are giving this a thumbs up, because there's fairly steady government holding. No divestment expected either. And therefore, you're going to see a steady state on the shareholding front, and hence a thumbs up. Let's quickly wind all of this up. Let's look at all of our metrics and give this a final rating. Income statement, balance sheet, cash flow positive, return ratio is neutral. And we look at shareholding, which is positive, street cred, shareholding, which is a neutral, street cred, which is a thumbs up, street coverage neutral, and valuation picture a thumbs up. And therefore, we're arriving at around 5.5 on 8 on our KYC ratings on this one. But, we spoke with Yogesh Patil, who's the Director Research and tracks oil and gas at Daulat Capital, with regard to HPCL, his views, and how he views this from an investment perspective. Listen in to that conversation.
First of all, the crude prices are near to $63-64 per barrel. And the HPCL would be the biggest beneficiary out of that, mainly because of, firstly, the gross marketing margins of HPCL, looking into the petrol and diesel side, is in the range of rupees 17 per liter. Okay. But yesterday there was one development that the oil minister has announced that rupees 2 per liter increase in the excise duty of petrol and diesel. And that will be collected to fund the subsidies which the HPCL or the OMCs have incurred in the FY25. That same collection would be utilized to repay the under recoveries incurred by the OMCs or HPCL in FY25, and that amount was 41,000 crore, closer to that. However, the timing of that reimbursement to OMCs is unknown or HPCL is unknown. And the OMCs, as per our understanding, they are still waiting for the official notification from the oil ministry. The only point that they will start accounting once they will receive the official notification. Secondly, there is one more development yesterday. Domestic LPG cylinder prices increased by 50 rupees per liter, and that is a positive for the HPCL. Under recoveries will decline rupees 3.5 per kg, or closer to 10,000 crore less under recoveries for FY26 period for the OMCs, and HPCL will be the beneficiary out of that. So they have also mentioned that the MOPNG will revise the LPG prices every fortnight or month based upon the international LPG prices. So all in all, these are the two positive development for the HPCL. Looking into the falling crude oil prices, HPCL will be the beneficiary, biggest beneficiary among the OMCs, because the HPCL is having a higher marketing to refining ratio. What I mean to say, the marketing volumes of the oil products are much higher compared to the refining throughput of the HPCL.
Yogesh, but the latest excise duty hike, it's not going to be passed on to the consumers. So it's going to be absorbed by the OMC. So does this kind of offset any benefit it would get from the lower crude prices?
Yeah. So in the last 3 to 4 trading sessions, what we have seen the crude decline from $75 to $64 per barrel. That indirectly implies that the gross marketing margins or the integrated margins of the OMCs or HPCL has improved by 5 rupees per liter. In general, what we calculate, $1 per barrel decline in oil prices implies a 50 to 60 paisa per liter improvement into the integrated margins of the HPCL or OMCs. That's one benefit. Secondly, as you mentioned rightly, that whenever there is an excise duty increase, and as of now, that has been absorbed by the OMCs. But sitting today, considering the today's crude prices, the HPCL and the OMCs are earning a super normal gross marketing margins on the sale of petrol and diesel. So still there is enough cushion for the HPCL for the better earnings prospectus of the company.
Got it. And now we know that, this excise duty revenue accretion for the government will be going for LPG, compensation. So what's the kind of compensation that HPCL needs for FY25? And could this be the same cycle that we see, for years coming by? They see losses for the first 9 months, it's reported, and then they just keep on getting compensation.
So good question. So your question was quite straightforward. The 2 rupees per liter kind of excise duty increase will collect approximately 35,000 crore in FY26. Now coming back to the HPCL portion or the share, in FY25, as per our calculations, the HPCL has incurred the closer to 11,000 crore kind of under recoveries on the sale of domestic LPG. What we believe, out of this 35,000 collection in FY26, the HPCL will receive closer to 9,500 crore. And that would be a net cash inflow to the HPCL. Net cash inflow will lead to the increase in equity value of HPCL. And what we expect, that would be in the range of 30 rupees per share for the HPCL.
Got it. So amid all of this, how do you expect HPCL to perform in Q4 and FY26? What kind of integrated margins are you building in?
FY24, FY25 or quarter 4, FY25 is already over. We have released our preview report also. In that we have mentioned the OMCs and the HPCL will post the weaker set of number, mainly because of 3 reasons. First of all, during the Q4 FY25, Singapore benchmark GRM was a weaker, $3 per barrel compared to the long-term average of $6 per barrel. That's one reason. Secondly, gross marketing margins were lower compared to the quarter 3rd FY25, which were lower around 3.5 rupees per liter. And thirdly, looking into the inventory losses, there will be a slight inventory losses on the crude and the product side, which will again hurt or impact at the EBITDA level. Lastly, touching to the subsidy, exactly looking into the last year FY24 compared to the Q4 FY25, in FY24 we haven't seen any kind of LPG under recoveries, so that will also impact in a Q4 FY25, considering HPCL will have a closer to 3,000 crore kind of LPG under recoveries during the Q4 FY25. So the numbers for the Q4 FY25, HPCL would be a weaker on Q1Q and YY side. But what we expect in Q1 FY26 and Q2 FY26, sitting today, gross marketing margins are super normal level, even despite an increase in excise duty 2 rupees per liter, that are in the range of 15 rupees per liter. That will definitely boost up the Q1 FY25 earnings. Secondly, GRM is on a recovery mode. Yesterday's closing Singapore benchmark GRM was a $4 per barrel. And yeah, there will be some gains because this excise duty has increased. That will also lead some gains on the oil products. Definitely, it would be a positive result as compared to the Q4 FY25.
Got it.
Okay, quickly to recap the rating, let's look at all the parameters one last time. That's how they stack up: income statement, balance sheet, cash flow, return ratios. Let's look at shareholding, street cred neutral, street coverage, and valuation picture. So that's how it really stacks up. 5.5 on 8 on our KYC ratings. But with that, completely out of time on this edition of KYC. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं।
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में।
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome to Markets at 12. This is Anushi Vakharia. Now currently, if you are looking at what the global phenomenon is and how the Indian markets are, the one topic that we have been discussing about is the Trump tariffs. In fact, what we have seen in the Wall Street is 3 straight days of decline in terms of where the markets are headed. The markets, US markets, have been on a roller coaster ride. In fact, yesterday we saw the 3 indices clocking in their lowest returns in the 1-year period that we are looking at. There was some recovery that we saw in the later part of the day, but overall there was some negative connotation that we have been seeing in the US markets. However, in the domestic side, the markets have seen some bouts of recovery today in trade, with the Nifty 50, if we are looking at that, seeing around gains of 1.2% in trade. Nifty 50 constituents up in the last half an hour or so. We have seen some stable trading over here. So around Nifty 50 clocking in gains of 1.2%. In terms of where the other benchmark indices are headed, Nifty Bank seeing around gains of 0.9%. So that's where the benchmark indices are headed. In fact, if we look at where these point contribution is for the Nifty 50, Infosys, SBI and Axis Bank are in focus, being the higher top contributors on the point side over here, whereas something like a Trent, Hero MotoCorp and SBI Life are under pressure. We did see Trent seeing around a 10% of cut yesterday after it came out with its Q4 business update. So that's where the Nifty 50 constituents are headed for the day. In fact, if you look at the advanced decline ratio and see how the overall market breadth is, we are looking the declines in the ratio of around 1,775. This is in contrast with around 321 of declines that we are looking at. So markets favorably in green today, some strong recovery that we are seeing on the back of some positivity on how the negotiations are going to be. Would there be more measures being taken place? So that's as far as where the benchmark indices are confirmed. We are looking at 1,965 gains and around 336 of declines that we are seeing. But let's also see how the broader markets are faring. In fact, if you look at the Nifty Mid Cap 150 are seeing gains of around 1.6%, while Nifty Small Cap seeing gains of around 1.72%. So broader markets clearly outperforming the benchmark indices, which was not something that we have been talking about in the last 2-3 sessions itself. Let's see how the top contributors are, which are the top contributors in the Nifty mid-cap space. So if we are looking at some of the key contributors here, we have names like Lloyds Metal, Coromandel and BSE in focus seeing gains of around 4 to 5% each. While on the other side, Delivery is seeing cuts of around 7%. Do note that Delivery was one of those stocks in yesterday's market. It was in the green. This was after it announced acquisition of around 1,000 crore of the next Ecom Express. So that's why it was in focus, seeing some correction in trade today. Astral, Vodafone, other counters seeing cuts of around 1.8 to 1.9%. But let's also pull out the small cap 250 index, see how that one is doing, which are the top contributors here. So in terms of where these small cap 250 gainers are concerned, we have something like a Castrol, PNC, Infra, 361 in focus, which are seeing cuts of around 2%. But on the green side, on the we have something like 5-Star Business Finance, Vijay Diagnostic and Chola Holdings seeing gains of around 7 to 9% each. So it's a fairly good place right now in the market where the markets are concerned. We are seeing Nifty 50 doing about 1.2% up in the trade. So that's as far as where the benchmark indices are confirmed. But let's also pull out the sectoral indices heat map, see how the sectors are faring in trade today. And one such sector which is in focus is the real estate sector. This one sector is seeing gains of around more than 1% each, 1.77%. And this is in focus on the back of a couple of business updates which have come out. So firstly, starting off with something like a Sobha Limited, if you are seeing, they came out with a strong Q4 performance. In fact, if you look at the total pre-sales number, we are looking at 1,836 crores or 22% of a growth here, wherein Sobha's share, if we have to consider that stood at about 1,370 crore, registering about a 7.5% of an uptick. Average price realization, however, saw about a 5% growth in the quarter. But it's the FY25 numbers which are in focus. If you look at the FY25 pre-sales, they were down about 5.5% for the year on the back of some launch delays which took place over the course of the year. In fact, the company in its Q3 con call had specified about the pre-sales, revised pre-sales guidance matching up to the FY24 levels. But this was after the company said that it wouldn't be able to achieve the 8,500 crore mark that it had initially guided for and had revised it to the FY24 number. However, the company was unable to achieve that number as well. Sobha missed the revised guidance of 6,644 crore number in terms of where the pre-sales were for FY25. But new launches, if we are talking about, that included the likes of Sobha Madison Heights along with Sobha Hamptons. So overall saleable area of 3.67 million square feet that we are looking at. Other than that, they also launched Chartered Birdsong, which is a plotted development project as well. Again, moving on to something like a Godrej Properties. However, Godrej Properties, a strong business update is what we are seeing. It beat its FY25 pre-sales guidance of 27,000 crore by recording a 31% of a jump in its pre-sales for the year, which stood at 29,444 crore. So more than 9% of a jump than it initially guided for is something that we are looking at. Business development, if we see that stood at 26,450 crore, do note that the company had already beat its annual business development guidance in the third quarter itself. In terms of where the new launches are concerned, they launched key projects like Godrej Riverine in Noida, along with Godrej Astra in Gurugram, which clocked in a booking value of around 1,000 crore, along with the Godrej Madison Avenue in Hyderabad, also seeing around 1,000 crore plus of booking value, which is there. Q4 pre-sales, if you have to take that into picture, that stood at 10,163 crores, so 7% of an increase that we are looking at. So Godrej Properties, a strong business update is what we are seeing. That's why the stock is in focus. In fact, Axis also came out with a note on the same, wherein they're seeing a 90% of an upside on the stock. So this is the overall flavor that we are looking for the real estate space. But also, let's shift our focus to the pharma sector. The space is in focus after Goldman Sachs has initiated a buy on both Suven Pharma and Piramal Pharma. Varsha joins us with more details on this.
Thank you for that. So let me start with Suven Pharma, wherein 28% upside potential is what Goldman Sachs is expecting. Now let's see what they are saying. They're saying the brokerage said that it expects a strong rebound and structural growth in the current financial year. The same will be driven by continued traction in its 3 to 5 drugs, plus new potential approval of the new drugs in the next few years. Also, the Goldman Sachs is also bullish when it comes to successful integration of Cohance, Sapala and NJ Bio. So these three companies were recently acquired by Suven Pharma. So Goldman is actually betting the growth for Suven Pharma on the back of these three entities. They are also expecting turnaround in AgChem macros. Now that is agrochemical macro environment. If you see, they are expecting the combined entities EBITDA to grow at a compounded annual growth rate of over 20% over the medium term. While let's shift our focus to Piramal Pharma and let's see what GS is saying about that. So they're saying that the company, that is Piramal Pharma, is well placed within its coverage to deliver top quartile profit growth driven by high operating and financial leverage, and it estimates Piramal a profit before tax margin to jump from 3% to more than 16% in 2028. Also, they have listed few reasons for its projection. One is the CDMO business is estimated to post a strong sustainable growth post FY26, and the CHG capacity that is expected to ramp up from the current fiscal. Lastly, the company's India consumer healthcare business will also turn around, is what Goldman Sachs is betting on. So these are two companies where Goldman Sachs has initiated coverage.
Okay, Suven Pharma and Piramal Pharma in focus on the back of Goldman Sachs notes. Thank you, Varsha, for those details. Both the stocks seeing gains of around 2.5 to 3% each. But another stock which is in focus is something like a Bharat Electronics, and this is after the company has received a 2,200 worth of an order, and this is for electronic warfares from Indian Air Force. So if we are taking the cumulative order till date for FY26 in picture, that stands at about 2,803 crores so far. Now do note, in terms of where the FY25 was for the company, they recorded about a 16% of a growth in their revenues, which stood at 23,000 crore, which was in line with what the expectations were. However, it was the growth number which was a disappointment across the street. They had seen orders worth about 18,715 crore in the FY25 fiscal year. This was against the guidance of 25,000 crore. So they missed about 26% of their guidance owing to certain delays in some of the key orders, 3 key orders which were expected from the Defence Ministry itself. If you have to take the order book into consideration, that stood at about 71,650 crore as of March 24. There were a couple of expectations now for FY26. So in more than this 2,803 crore of current inflows that we are looking at, a couple of other order inflows which should be in focus is something like a QR SAM order worth about 25,000 to 30,000 crore, which the company expects by this year end, that is FY26. And along with that, some of these next generation Corvette related orders to the size of 14,000 to 15,000 crore is also something which is likely to be in focus. Along with that, as mentioned, that in FY25 we saw a couple of delays in terms of where the orders are. So there should be management commentary in the fourth quarter update should be important to watch out for whether these order slippages that were there in the fourth quarter would be something that we should be watching out for the first quarter FY26 period itself. So BL in focus, currently the stock is up around 2% in trade today. But let's move to brokerages. Morgan Stanley has come out with a note on IndusInd Bank significantly cutting its target price while maintaining an equal weight rating. Let's bring in my colleague Harsh with more details on the same.
Well, yes, so they've cut their target price, of course, and by quite a margin. Let me spell it out: 1105 to 755. So that's a large cut. They're building in weaker earnings at least over the next year or so. They are factoring in large treasury-related impact into the FY25 EPS. Now, mind you, the pre-tax treasury impact is likely to be 2100 odd crore as per company estimates. Yet the final number is awaited, and of course the RBI has directed the company to put that out ASAP. The book value per share, therefore, in terms of forecast, falls roughly 4% for FY26 and another 5% for FY27. That's the expectation that headwind will continue. They've raised the cost of equity assumptions amid the increased uncertainty around both leadership as well as strategy, and on the back of that, there's this large cut in terms of target price.
Okay, so that's where we are seeing for the IndusInd Bank a huge cut over here. Currently, the stock about 0.5% up in trade. But another sector in focus is the financials. Axis Bank and PNB Housing are buzzing, and this is as Goldman Sachs have upgraded both the stocks to but and even hiked the target price. Harsh joins in again with more from this report.
Yeah, it's a big one. This one is a big one, pointedly because Axis Bank upgrade to a buy from a neutral. Target price hike from 1162 to 1288. That's a significant hike as well. They are saying that the mean reversion story is already going to start to play out. Profitability, growth, both will improve. They're seeing better visibility with regard to PPOP, which is operating profit, to return on assets, which is a measure of profitability. That should get better and better going forward. They are expecting both Axis Bank's valuation differential versus peer banks as well as profitability to aid the target price going forward. They've basically reduced the discount that currently sits between Axis and peers, which is roughly 35%. They believe that the differential should be lower at around 23%. Now, in terms of the other big upgrade, Goldman Sachs on PNB Housing upgraded to a buy from a sell. They've hiked the target price from 934 to 1184. They believe that improved confidence in earnings outlook, better profitability, which will likely remain resilient and only get better from here, and lending spreads are expected to expand as well. Improved visibility on the growth profile as well as asset quality trending better than peers should aid valuations, which are set to re-rate according to Goldman Sachs. So bullish on both of these counters.
Okay, so bullish on both the counters, PNB Housing and Axis Bank is what we are saying. Thank you, Harsh, for all those key details. But another stock which is in focus is FMCG giant Titan, and this is on the back of its fourth quarter business update that we are seeing. Mahima joins it with more details on what the developments are for Titan.
Right, so Titan is shining today, and this is on the back of its strong Q4 update, and this is of course on the back of how gold prices have risen so far. The jewelry growth is strong, but studded mix has slightly declined. The company has reported a 25% growth in their overall revenues. Jewelry business saw 24% growth. The growth is of course on the back of increase in gold prices. Plain jewelry saw a growth of around 27%, and gold coins saw a growth of around 65%. Elevated gold prices have led to a sluggish demand for consumer at lower price points and a single-digit bar growth. But on the higher end, the higher price bands have sustained the overall demand and have also led to a double-digit growth in ticket sizes as well. Studded jewelry mix has registered a low double-digit value growth. Solitaire segment has seen green shoots where they saw a turnaround and registered both buyer as well as value growth. In terms of like-for-like sales growth, that stands at around 15%. Tanishq has also expanded internationally. They've added new markets like Sharjah in UAE, in Atlanta and Seattle in USA, and they've added 16 new stores, of which 4 are Tanishq stores and 12 are Mia stores. In terms of watch and wearables, they've recorded a strong growth of around 20% odd. Analog watches clocked a growth of 18%, and they added 41 stores this quarter. Eye care saw growth of around 18%, both in terms of revenue as well as buyers. E-commerce saw significant growth in this particular segment and added 2 new stores in UAE region. They closed around 11 net stores in India. Emerging business, fragrance saw growth of 26%, fashion accessories saw a growth of around 2%, but overall Taneira sales declined by around 4%. Lastly, CaratLane saw a revenue growth of 22% driven by healthy studded portfolio, and buyer growth was in mid-single digits. The like-for-like growth for CaratLane was around 11% this period, and around 17 domestic stores were added this quarter. Now, in terms of what brokerages are penciling in for Titan in terms of its Q4 update, Citi has maintained neutral with a target price of 3550. They're saying that something to watch out for will be the margin trajectory once the results are announced. Macquarie has maintained outperform with the target price of 4000. They're saying they expect 20% standalone EBITDA growth in Q4, and healthy growth in Q4 is encouraging and enhances their confidence in their EPS estimates. Lastly, Morgan Stanley has also maintained overweight with a target price of 3876, and they're saying that the headline is strong, but there are internal, that is the different segments are giving mixed signals. So this is the overall view as to how Q4 has panned out for the jewelry giant, that is Titan.
Overall, an optimistic print is what we are looking for, something like a Titan clearly shining in trade today. But another jeweler in focus on the back of its fourth quarter update is something like a P.N. Gadgil Jewelers. Mahima, what can you tell us about this counter?
Right, so mixed views here. The revenue growth has been in mid-single digits, that is of 5%, that is on the consolidated level. But overall studded mix has improved for the counter. The stock is up on the back of that. The e-commerce segment has seen a significant growth this quarter of around 244%. Franchisee operated has seen a growth of 37%. Retail segment has seen a growth of 50%. Festive season sales has risen by around 40%. This is on the back of Gudi Padwa, and because P.N. Gadgil is focused on the west side of India. The studded ratio improved to around 7.4%, and this is up 31% almost. Same-store sales growth stood at around 26%. They've added 5 new stores this quarter, with 4 of which are company-owned and 1 is franchisee-owned. And the management has also given the outlook of FY26. They expect a strong growth in FY26, which will be fueled by robust demand, and they are set to launch around 20 to 25 stores overall in FY26. So this is the overall view as to how Q4 has panned out for P.N. Gadgil.
Okay, thank you, Mahima, for those updates in the consumption space that we are seeing on the back of the Q4 numbers. But another stock which is in focus is Bajaj Finance, and this is after CLSA has maintained an outperform rating on the stock with a target price of 11,000. Harsh joins us with more details from this report.
It's a very interesting one. They call form temporary but class permanent. That's what they've titled the report as. They've said they've correlated a Bajaj Finance to a Sachin Tendulkar. They've spoken about how Sachin scored 100 centuries across a career span of around 24 years. And they also emphasized the point that the 100th 100 actually came with a lag of 1 year, where a lot of people had actually written Sachin off by then. And therefore, they're saying that this was just a blip year for a Bajaj Finance. And the fact that they've been able to execute so well over the many years, makes it stand out. In fact, they put out some numbers for the last 15 years, FY 2010 to FY 2024. They're saying Bajaj Finance has delivered an AUM CAGR of 34%, pristine asset quality, ROE of 20% plus in 10 of the 15 years, therefore correlating it to a Bajaj Finance clearly. FY25 was a year when it was relatively in bad form. Growth slowed down to 26%, ROE moderated to 19%. For the 9-month FY25, driven largely by higher credit cost. Asset quality headwinds now receding. They're expecting Bajaj Finance to regain its class in FY26. Investor focus will shift, therefore, to NIMs and asset quality, which should get better, and therefore the focus will shift towards growth now. So very positive, 11,000 being the target price.
Okay, focus shifting towards growth now is something that can be expected for Bajaj Finance. Thank you, Harsh, for those details. Starting today, LPG prices will increase by 50 rupees per cylinder, affecting both the general consumers and the beneficiaries of the Ujjwala scheme. For general users, if you see the price of a 14.2 kg cylinder will rise from 800 rupees to 850 rupees. For Ujjwala scheme beneficiaries, the price will go up from 500 rupees to 553 rupees. Meanwhile, the government also announced a hike in excise duty on petrol and diesel. However, Petrol Minister Hardeep Singh Puri has clarified that the excise duty hike is a part of a broader review process and will be reassessed in the coming weeks. The increase comes amid efforts to offset oil marketing companies' losses, is what we are seeing. But let's go across to Soumit to understand how these price and excise duty hike will impact some of these oil marketing companies out there. Soumit, over to you.
Well, yes, all in all, it's a positive announcement that has come in from the government side for the oil marketing companies. Yes, the excise duty hike will impact the gross marketing margins that the oil marketing companies earn on selling every liter of petrol and diesel. But do remember that the sudden drop that we have seen in crude oil prices, that alone would have hiked the marketing margins by around 2.5 rupees per liter. So the future earnings would get limited, but the current supernormal marketing margins that the oil marketing companies are earning, which is anywhere between 11 to 12 rupees per liter, that would continue for the oil marketing companies. Moreover, the oil minister also said that whatever earnings that the government will get from the excise duty hike will be passed on to the oil marketing companies for the LPG subsidy losses that they incurred in FY25. So they incurred a loss of close to 41,300 crore rupees, and with this excise duty hike, government might get around 33,000 crore rupees, which would be passed on to the oil marketing companies, while the remaining amount will come in from the LPG price hike that the government has done of around 50 rupees per cylinder. Now, apart from this LPG price hike that the government has done, there's also possibility that LPG prices in the international market would come down, given the fact that crude prices have come off sharply. So both these factors, that is the LPG price hike and lower international LPG prices, will compensate for the remaining amount of LPG losses that the oil marketing companies had seen in the financial year FY25. So all in all, a positive announcement coming in for the oil marketing companies. Apart from that, they have also said that currently they are having a crude inventory of around 45 days, and that is valued at close to $75 per barrel. So some inventory losses could be seen in the first quarter of FY26 for the oil marketing companies.
Okay, thank you so much for all those key details. IOCL, BPCL, HPCL all currently up in trade is something that we are looking at. But let's just focus. India well positioned in terms of tariffs. This is what Vikas Khemani, the founder of Carnelian Asset Management and Advisors, had to say. Listen into the conversation on if Nifty will sustain the recovery or not.
Of course, Indian investors, and also more importantly, even Indian economy. We all know that, of course, there's a lot of chaos happening around the globe, led by the tariff war, lots of, uncertainty. We all know that. And at the same time, it's also a matter of fact that India is relatively insulated from what's going all over the world. And I think it's, in my opinion, testament to that fact. But yeah, you can't remain unscathed when there's a fire all over the place. You are bound to get some amount of heat. But when the dust settles down, when the fire settles down, obviously, one knows that, which countries or which economies will stand tall. And India is surely one of them.
So, okay. Hi, Vikas. I think we were talking about this as a bit of a theme, right? Because in this chaos that is playing out globally, ultimately, everybody seems to be focusing inwards. And various economies are already starting to have measures announced to bolster the domestic economy. We're speaking on the cusp of the RBI monetary policy outcome, where in all probability we're going to see another rate cut or measures at least to bolster growth. How much of a factor is that going to play, in your opinion, in further adding to what the government has already announced on the fiscal side?
We must understand right now what's going on at a global stage is very unprecedented. One does not know what will happen when you wake up in the morning, what kind of announcements will come, what kind of, and whenever these kind of announcements come with a far-reaching implications for the global economy, it is natural that investors will get worried and tentative, and especially the short-term investors tend to act and react. And that's what creates volatility. In that volatility, any short-term measures boosting growth for economy can be ignored. RBI did a major policy pivot, in last 2 months, and markets kind of ignored that. Already RBI, gave a growth stance, a commodity stance with a rate cut in the previous policy also. So,
Well, that was Vikas Kamani, the founder of Carnelian Asset Management, and his outlook on how the markets are going to be. But that's all the time that we had on this show. Stay tuned to NDTV Profit. Lots more lined up on the other side.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking
Terrific Tuesday on the Loud Street. Nifty trades above 22,500. Sensex gains as well in trade. Mid and small caps shine.
All sectors trade in the green. Sectors with exposure to Trump tariffs also trade higher, with Nifty IT at the top and Pharma not far behind.
Oil marketing companies are on fire after government hikes excise duty on fuel. The duty collected will offset losses made on LPG by the companies.
Titan gains over 4% on after reporting strong growth in gold jewelry business.
And brokerages are bullish on India's growth story. They say tariffs will have minimal impact on India. Morgan Stanley and Macquarie are positive on the domestic consumption theme. Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I am Hiral Datia and with me is Varsha. Firstly, we should be wishing Varsha a happy birthday as well. That's her birthday today.
Thank
but
you.
Let's quickly take a look at what markets are doing at this hour. An interesting day of trade with the kind of recovery that we're seeing in terms of where markets are concerned. Overall, if you see Nifty 50 gains of almost 2% coming in there from a low of 22,270, we've gone up to almost 22,600, and that's where the markets are hovering at the moment. With that, let's quickly pull up a heat map in terms of the sectoral indices and see where the strength is, because IT as a sector is going to be in focus, taking into consideration TCS will be reporting numbers on Thursday, which is a holiday. But there you see a sea of green. Yesterday we were talking about a sea of red, and now you're seeing green. Metals has bounced back. Bank Nifty is seeing some good moves, but mainly the strength is coming in with regards to consumer durables, which is up nearly 3%. IT ahead of the numbers is seeing gains of almost 2.8%. Media in the positive, as well as if you talk about the PSU Bank Index, Pharma and oil and gas, which are seeing some smart moves. Let's also pull up the broader markets. I'll take the liberty to do that, and before going to the guest, because we have the management of Deep Industries that will be joining us shortly. But you have the mid-cap index, which is up almost to 2.5%. And if you look at the small-cap index as well, there you go, nearly at the day's highest levels with gains of 2.2% coming in there. Let's look at the heat map in terms of the benchmarks and see what's happening on that front. But overall, the trend is on the positive side. There you go. It's just a trend which is slightly under pressure today, but apart from that, Infosys, Reliance Industries, Bharti Airtel, as well as the HDFC Bank that are contributing to the kind of gains that we are seeing in the markets. In terms of broader markets as well, let's quickly look at a few of the names which are strong. Vijaya Diagnostics, Sequence Scientific, 5-star. These are a few of the names which are seeing some smart moves in trade today. And on the losing end, you have names like a Delivery, which is down nearly 6.5%, J Corp under pressure, Thomas Cook, 361, Sarda Energy. These are a few of the names, Varsha, that have been ruling under pressure. But very quickly, we're going to talk to the management of Deep Industries. What's the highlight there?
So, basically they have entered into an agreement wherein they're going to lease one of the barge. Now this is for 3 years for almost 200 plus crore. And, so this is actually the highlight. But, let's see what this agreement is. Let's hear it from the management itself. We have Rohan Shah, who is the Director, Finance and Group CFO of Deep Industries. Welcome to the show, sir.
Hello.
Hello. So, I just wanted to have an update on the press release that you have shared. So, if you can, just give us the details of the agreement.
Sure. So we are delighted to inform that Beluga International DMCC, the wholly owned subsidiary of Dolphin Offshore Enterprise India Limited, has entered into a lease agreement with a Mexican company called Balash Shipping for leasing its barge, which is Prabha, DP2 accommodation barge, for a period of 3 years. And the total estimated value of this entire lease agreement is almost $32.85 million, which is equivalent to around 280 plus crore Indian rupees.
Right. So, Rohan, overall, if you see in terms of the annual revenue potential from this deal, how does that pan out? Because again, this is with a subsidiary. So, if you have to look at the books of Deep Industries, how will it impact?
So Dolphin Offshore Enterprise is our subsidiary where Deep Industries is holding 75% stake. And with that 75%, it becomes our major subsidiary. So annual revenue from this particular contract, we are expecting somewhere above 90 crore per year with a good bottom line of almost 70 crore a year. and this would be giving a great amount of boost not only to Dolphin but also to Deep Industries as well.
Right. Also, Mr. Shah, so does the company is expecting previously mentioned 60% margin from the contract?
Yes, so this time, this particular contract is net of operating expense. So this rate which we are calculating as of now is net of OPEX. And so post this, there will be very minimal expenses to be deducted. So margins would be higher in this case.
Okay, and so you're saying margins will be higher. So will they be above 60% or will they be at 60%?
They will be above 60%.
Okay. And what is the life of the Prabha asset? I mean, how long can this barge keep generating revenues for the company?
So this particular barge can work for more than 20 years. So it has a useful life of more than 20 years. And post our acquisition of Dolphin from insolvency, we were trying to put this asset into operation since last 1 year. And finally, we have got this asset deployed, and it will start generating revenue immediately in this month itself, starting from this month. Yeah.
Also, Mr. Shah, so I do agree that, because of this contract or this agreement by the subsidiary company, Deep Industries will have an edge over it. But just wanted to understand, considering the oil and natural gas prices going down, how this will impact Deep Industry as a whole?
So in Deep Industries, we are into onshore oil and gas support services. And in Dolphin, we are into offshore oil and gas support services. When we talk about the prices of oil and gas and its impact in our revenue or our potential, our services are more of fixed price kind of services, and we generally operate through fixed price contracts. So once we are into contract, it has no impact on our revenue. Majorly, our service focus is more on gas and less on oil. So again, with that element, we are least impacted with prices fluctuation of oil or gas.
Okay, so even if it's the most minimalistic impact, how much of your revenues are dependent on prices of oil and gas, and to what extent does the profitability then get impacted?
See, our majority of services are critical and inevitable services for oil and gas operations. And these services are such that whether crude is at 100 or crude is at 30, these services are required anyhow. And so in our more than 30 years of experience in this industry, we have seen so many cycles of crude and gas going up and down. But we are not impacted at all, as I said, because our services are fixed price contract services. And so majority of our contracts are of 3 years. So once you are into a contract of 3 years with X price, it will not change for 3 years. And so it has not any major impact on our revenue.
Okay. And with all of this, where does your current order book stand, and what's the executionable part of it in terms of FY26?
See, we were sitting on order book of more than 2,700, and with this order, we would be touching 3,000 crore.
Okay.
So the executable timeline of this particular order book is almost 2.5 to 3 years. Barring one contract, which is a longer tenure contract. So if we exclude that 1,400 crore contract, which is of longer tenure, the rest of order book is executable over 3 years, 2.5 to 3 years.
Also, Mr. Shah, so with the existing order book and the newer ones that you'll have, I remember you saying that you are expecting 30% of annual growth. So are you on track?
Yes, we are absolutely on track, and signing of these lease agreement is a testimony that we are right there on track, and we are continuing our focus on growth of more than 25% year on year for at least next 3 years.
Okay. And overall, to achieve this kind of growth and to execute an order book of almost around 3,000 odd crores over the next 2 to 3 years, what is the kind of capex that you will need in the next 2 years, and what's the funding plan?
So majority of capex is already been done with existing order book. Of course, we'll have to do capex of around 350 to 400 crore in current financial year, and that we would be doing it through internal accruals, debt, and of course we may think of raising some equity as well.
Rohan, one quick clarification. The FY26 capex was initially pegged at around 500 odd crores. So are you saying now you will require only 250 to 300 odd crores and not 500 crores?
No, so 500 crore capex is inclusive of one acquisition opportunity. So when I am saying capex for plant and machinery is around 350 crore. Overall capex is around 500 crore, including some acquisition opportunity.
Okay, so I mean, 150 odd crores is where you will be looking at an acquisition, and where would this be, if you could give us some details and the timelines?
So we are in active discussion with few targets where we believe will be able to acquire them during current financial year, and this can give us a great amount of opportunity of inorganic growth, and this can give us our capacity enhancement and revenue boost immediately. So we are working on it still. It is not on finalization stage, so I cannot share much of details, but yeah, we are on active discussion.
Rohan, just wanted to ask about the production sharing contract that you recently won, and you were expecting this segment to grow going ahead. So by when can you expect these new kind of orders to start coming in? I mean, maybe in FY26, or can you expect more orders in 26 and 27? So if you can give some update around that.
Right. So it's a production enhancement contract, and the one which we have already been awarded, we have taken over the control on that particular field in last week itself, and we would be starting our operations immediately, and we are expecting to have good amount of revenue from that particular contract in second half of current financial year. With regards to additional opportunities of similar contracts, we are expecting few more rounds of such contracts in FY26 itself, and we are quite bullish in bidding those contracts.
So recently you did a QIP for 350 crores. What was the specific intent of this QIP? So will you be using this considering the capex plan that you have of 500 crores?
Yeah, we are planning for it, and this would be definitely used for the 500 crore which we were just discussing.
All right, and also you actually had entered in JV with Eurogas Systems, if I'm not wrong. Now, how this JV will contribute to the company's growth? I mean, if you can quantify how this will impact your top line.
Yeah, so JV with Eurogas system will give us an opportunity to bid in contracts where we can have some good amount of equipment supply orders, because as a deep we are into services business, and with the JV of Eurogas we can also capture opportunities of supplying equipments to producers. So we are exploring that opportunity, but as on today, we have not yet received any such award.
Rohan, two questions. I mean, firstly, if I'm seeing the trajectory as well in terms of your quarterly growth, year-on-year basis, December you've seen a 47-48% kind of a growth, and that I think has been the highest since September of 2023. And if I have to look at the margins as well, you've been in that range of around say 32 to almost around 43-44%. So when you talk about above 60% margins, is that only for this contract, or on a blended basis as well you will be able to maintain above 60% kind of a margin profile? And secondly, on the top line, is this 45-50% growth expected to be consistent, or it's going to be one-off?
See, margin, when I said 60% plus is for Dolphin, not as a group, because in offshore business you tend to have higher margins than onshore business. So overall at group level, we are quite optimistic to maintain margin in range of 42 to 45% year on year. And this type of margins we are maintaining since so many years, and probably we would be improving on it year on year. So yes, at group level, we would be maintaining EBITDA in range of 45%.
Okay. And your return on capital employed, I mean, there was a point in time where you were at 33, 34% as well back then in 2019 and 2020. I mean, it's come down to single digits and high, I mean, just start point of double digit of 10% in FY24. What is it that could lead you to come back to that high double digit kind of a ROCE, or you think it's going to be an impossible task?
No, we are gunning for it, and we believe in the current financial year or maximum by FY27, we would be on higher double digit, probably near to 17-18% ROCE. And see, at the end of the day, we are into a business where the services are capital intensive, and our services are backed by heavy equipments. And for us, the mobilization time for any particular contract is at least 6 months. So at any particular balance sheet date, if you look from capital employed perspective, you have employed your capital, but that capital has not necessarily earned in that particular year because it has taken time of 6 or 8 months to mobilize it. So in our business, when you are growing continuously, the ROCE can appear little low. But once you are there with the entire equipments mobilized and fully operational, this ROCE can go high as 18 to 19% as well.
Rohan, last question coming to you is on the cash flows. I mean, if I look at your net cash flows, they have been on the lower side. I mean, not something which could be, I mean, I don't know how the street would read it, but one aspect is your cash from investing activity, something which is taking your cash from operating and financing activity lower, right? If you could explain to us what is that and what is your stance in terms of maintaining a strong cash flow?
See, for us, cash flow is largely used in business expansion only. But for the time being, if that particular cash is not utilized in business expansion, then we would be investing it as a part of treasury, because at the end of day, we believe that having liquidity on hand can give you an opportunity of good target acquisitions. And Dolphin is one of the example where we could acquire that because of having liquidity in hand. And so we would continue to maintain some good amount of liquidity in hand. And when that liquidity is not deployed in business, it would be there in treasury for the time being.
Right. Well, on that, thank you so much, Mr. Shah, for joining this conversation, and all the best.
Thank you. Thank you so much.
So this was Deep Industries targeting 25 to 30% of growth. Well, on that note, let me just invite Vinit Bolinchkar, who is Head of Research at Ventura Securities. Vinit, welcome to the show. And just wanted to have your view on Deep Industries. Do you track this counter?
Yeah, we track this company and we believe that a very, very good franchise to have in your portfolio. I think it's got exposure to India's energy needs. And in these times when the world is putting walls around itself, I think it provides you a very insulated, exposure to very predictable cash flow business. Valuations are also very reasonable, and we think that this stock can do well going ahead.
Strong view coming in with regards to where Deep Industries go. The stock is seeing gains of nearly 12% in trade as we speak. But moving on, the government yesterday went ahead and hiked excise duty on petrol and diesel, but the Petroleum Minister Hardeep Singh Puri has clarified that the hike will not be passed on to consumers. Meanwhile, the cost of LPG cylinder was increased by 50 rupees for all consumers. Let me head across to Somit to understand how these events will impact the oil marketing companies and the gas distributors. Somit, over to you.
Well, yes, all in all, it's a positive announcement that has come in from the government side for the oil marketing companies. Yes, the excise duty hike will impact the gross marketing margins that the oil marketing companies earn on selling every liter of petrol and diesel. But do remember that the sudden drop that we have seen in crude oil prices, that alone would have hiked the marketing margins by around 2.5 rupees per liter. So the future earnings would get limited. But the current supernormal marketing margins that the oil marketing companies are earning, which is anywhere between 11 to 12 rupees per liter, that would continue for the oil marketing companies. Moreover, the oil minister also said that whatever earnings that the government will get from the excise duty hike will be passed on to the oil marketing companies for the LPG subsidy losses that they incurred in FY25. So they incurred a loss of close to 41,300 crore rupees, and with this excise duty hike, government might get around 33,000 crore rupees, which would be passed on to the oil marketing companies, while the remaining amount will come in from the LPG price hike that the government has done of around 50 rupees per cylinder. Now, apart from this LPG price hike that the government has done, there's also a possibility that LPG prices in the international market would come down, given the fact that crude prices have come off sharply. So both these factors, that is the LPG price hike and lower international LPG prices, will compensate for the remaining amount of LPG losses that the oil marketing companies had seen in the financial year FY25. So all in all, a positive announcement coming in for the oil marketing companies. Apart from that, they have also said that currently they are having a crude inventory of around 45 days, and that is valued at close to $75 per barrel. So some inventory losses could be seen in the first quarter of FY26 for the oil marketing companies.
Well, thank you, Somit, for all the details. In fact, we spoke to Yogesh Patil, who's the Director Research of Oil and Gas, Dolat Capital, about who said that HPCL is the outperformer in the sector. Do listen in.
First of all, the crude prices are near to $63, $64 per barrel. And the HPCL would be the biggest beneficiary out of that, mainly because of, firstly, the gross marketing margins of HPCL, looking into the petrol and diesel side, is in the range of rupees 17 per liter. Okay. But yesterday there was one development that the oil minister has announced that rupees 2 per liter increase in the excise duty of petrol and diesel. And that will be collected to fund the subsidies which the HPCL or the OMCs have incurred in the FY25. That same collection would be utilized to repay the under recoveries incurred by the OMCs or HPCL in FY25, and that amount was 41,000 crore, closer to that. However, the timing of that reimbursement to OMCs is unknown, or HPCL is unknown. And the OMCs, as per our understanding, they are still waiting for the official notification from the oil ministry. The only point that they will start accounting once they will receive the official notification. Secondly, there is one more development yesterday. Domestic LPG cylinder prices increased by 50 rupees per liter. And that is a positive for the HPCL. Under recoveries will decline rupees 3.5 per kg, or closer to 10,000 crore less under recoveries for FY26 period for the OMCs, and HPCL will be the beneficiary out of that. So they have also mentioned that the MOPNG will revise the LPG prices every fortnight or month based upon the international LPG prices. So all in all, these are the two positive developments for the HPCL. Looking into the falling crude oil prices, HPCL will be the beneficiary, biggest beneficiary among the OMCs, because the HPCL is having a higher marketing to refining ratio. What I mean to say, the marketing volumes of the oil products are much, much higher compared to the refining throughput of the HPCL.
Right. In fact, so that's the view coming in on an HPCL. Beneath, taking both the aspects into consideration for OMCs as well as gas distribution companies, what is your view on any topics?
So I would concur that HPCL looks to be one of the very good stocks. There is also some corporate action expected in the company. I think it is going to be, around the loops business. There could possibly be a demerger of that. So there could be some value unlocking going ahead also. And given the benign pricing of crude oil and the expected supply glut, which is going to happen in the market, I think that the low pricing regime will be quite stable for some time, and that will mean very, very reasonable margin expectations going ahead. So we like this stock both from the earnings accretive point of view as well as the point that there could be some corporate action happening in the group from value unlock.
Right, so positive view when it comes to HPCL. Well, moving on, BEL gains 5% after bagging 2,210 crore order from Defence Ministry. Anushi joins us now to tell us more.
Okay, so if you are looking at Bharat Electronics, again it's in focus on the back of a new order win, and this is a size of 2,210 crore that we are looking at for electronic warfare from the Indian Air Force that they have received this order. So taking this order in consideration, if you look at the total FY26 order inflows, that stands at roughly 2,803 crore. Now do note the FY25 picture, if we see in terms of where the inflows were concerned, they had recorded inflows worth about 18,715 crore. This was as against the guidance given of 25,000 crores. So we did see a miss of around 26% in terms of where the order inflow picture was concerned for the company. In Q3, the management had remained confident despite the 11,000 crore mark that they had achieved in Q3 for the order inflows, that they would expect to achieve 25,000 crore. But on the back of delays in some of the three key orders from the Defence Ministry, we did see a miss on the part of where the order inflows were concerned. Other than that, if you look at the revenue growth, that was majorly in line for FY25, seeing about a 16% of a growth here, while the order book stood at about 71,650 crore as of the March 24 figure that we are looking at. Now, FY26 is a year crucial for Bharat Electronics. A huge ticket order sizes are expected. This includes the likes of a QRSAM order, which is a quick reaction surface to air missile order, which is in the size of 25 to 30,000 crore. Along with that, there's also an expectation of a 14 to 15,000 crore of a next generation Corvette related order for FY26 also. What would be interesting to watch out for the Q4 management commentary is this order slippages that we have seen in the fourth quarter, and whether they would be expected in the first quarter of FY26. So that is one factor that we should be figuring out, that we should be watching out for. But other than that, BEL and focus on the back of this 2,000 crore plus of an order win that we are seeing.
Thank you so much, Anushi, for all the details. Vineet, so there is a miss when it comes to order inflow. So how are you seeing BEL? So do you recommend buy, or I mean, do you see problem when it comes to slippages in order book when it comes to Q4?
So the traction in BEL is going to be very positive, and we expect order bookings to continue to happen. But we are only consideration is the fact that execution might not keep pace with the order flow. So seeing a ramp up in execution and revenue generation is very important. So that needs to be key monitorable, and BEL therefore is definitely a stock to own in your portfolio. But the only thing, as I said, is that you need to track that growth. Revenue growth is there, which is in the high double digits.
Right, got it. Well, on that note, let's take a short break. Viewers, don't go anywhere and stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
welcome back. You're watching Profit Buzzers. Now, Realty Index has actually gone ahead and broken its 3-day losing streak, driven by broad-based buying that we've seen in the sector, as well as the business updates that have come in from few of them have been encouraging, while some have missed their estimates. Let's bring in Anushi to decode all of them for us. Anushi, Soba and Godrej Properties, both of these stocks that are in focus, what are the updates actually indicating?
Hey, so if we are looking at the real estate updates which have come so far, we are looking at a mixed picture overall in terms of where Soba Limited is concerned. If you look at the Q4 growth numbers, that's the total pre-sales number that stood at about 1,836 crore, which was a 22% of a growth. But Soba share in it, if we see, that stood at about 1,370 crore, which was a 7.5% of a growth that we are looking at. Average price realizations also saw about a 5% of a growth at 11,781 square feet. But it's the FY25 numbers which are a standout over here. If you look at FY25, pre-sales are down about 5.5% on the account of some of the launch delays which have taken place. In fact, it also missed the revised guidance of 6,644 crore, which is the FY24 figure that the company expected to achieve in FY24. So, miss on the pre-sales guidance is what we are seeing. Do note that the company had already revised its pre-sale guidance in the third quarter, which initially they had pegged it at 8,500 crore, but due to the delay in the launches, that was then revised downwards to the FY24 number, which was there last year of pre-sale. So, but coming back to what led to the Q4 growth was something like a Soba Madison Heights and Soba Hamptons, which aided in this Q4 growth that we are looking at. Combined saleable area stood at 3.67 million square feet. Along with that, if you are looking at another project, which was the Chartered Birdsong Plotted Development Project, also aided in the Q4 number. So it was the FY25 number, which was a miss for Soba Limited. But let's also talk about Godrej Properties. Now here, this is one stock which has been posting robust set of numbers from a quarter-to-quarter basis is what we are seeing. In fact, if you look at the Q4 pre-sales number, that stood at 10,163 crore, registering a 7% of a growth here. FY25 pre-sales, if we are looking at, that stood at 29,444 crore, which again showed about a 31% of a growth. So this Q4 was a culmination of a couple of new projects that the company launched, which included the likes of Godrej Riviera in Noida to the size of 2,000 crore of a booking value here, along with Godrej Astra in Gurugram and Godrej Madison Avenue in Hyderabad, seeing bookings of around 1,000 crore. But if we take the whole FY25 picture in consideration, the company has beat its FY25 pre-sales guidance of 27,000 crore, achieving about 109% of its overall pre-sales guidance that we are seeing. In fact, if you look at the business development, that stood at 26,450 crore. The company had already achieved its business development guidance in the third quarter period itself. So these two counters are in focus on the back of some couple of business updates. In fact, Axis Capital also had a note on Godrej Properties. They are seeing more than 90% of an upside here on the back of its pre-sales, beating the estimates on the strong sustained sales which are going on, and also expect the company is on track to deliver its best ever annual operating cash flow for the year itself. So strong update for Godrej Properties. On a Soba, if you are looking at the FY25, it was a miss in terms of where the pre-sales number was concerned.
Thanks you, Anushi, for getting us the details. Let me also welcome in Vinay Rajani. Vinay, good afternoon and welcome to the show. What are charts indicating for a Godrej Properties as well as a Soba?
Yeah, good afternoon. So Godrej Property has been into a downtrend. It is placed below the key moving averages, below 20, 50 and 200 days average. So entire real estate sector has been vulnerable and the trend has been down. Today, because of some news, it opened with a gap but did not sustain at higher level. So still it is into a downtrend. We need to see whether it is closing on a strong note or not. But existing trend is down, and I think unless it crosses 2150 on the upside, it will remain in a downtrend. So 2150, its 50 days exponential moving average is there. Unless that is surpassed, we should take it the negative view itself. So no doubt there has been a strong support around 1900 previously in the month of January, February also. We saw that it reversed from the 1900 level. So it is not far from the support also. So there has been a range of 1900 towards 2150. This is a range. On the downside, if it breaks 1900, then there will be a fresh breakdown on the charts. And on the upside, 2150 is a strong resistance above which we will change our view from bearish to bullish. But till then, we can say that it is trying to find support, and existing long position should be held with a stop loss of 1900.
Okay. Vineet, talking to you from a fundamental perspective, in fact, a recent report that was released by Magic Bricks was indicating that the overall demand from a pan-India residential perspective, that has moderated, and this is on the back of rising prices. In fact, their prop index for the first quarter shows that the demand is marginally growing by around 0.6% on a sequential basis, and the average prices have gone up by almost 21 to 22% on a year-on-year basis. Taking this into consideration, what would your call be? Because Delhi, there's a demand contraction of around 11 to 12%, Gurugram around 6%, Calcutta around 5%, and Noida around 12 to 13%.
So, I believe that Delhi is an overextended market, Gurugram especially, and markets, the micro markets like Bangalore, Hyderabad, Pune, these are all going to see a slowdown, which is going to be directly impacted by the IT related purchases. Because this sector is slowing down internationally, and that segment is going to be hit. Also, we've seen a very overextended rally. So, barring for these micro markets, I think the Mumbai market is very resilient, and we're going to see tier 2 players also emerge very well. So, Ashiana Housing, Godrej Properties, Suntec Realty, these are some of our top picks in this sector. We have to use a bottom-up approach and not entirely be dependent on the, taking a blanket approach to investing in the real estate sector.
Right. But moving on, VE Commercial Vehicles, Vinod Agrawal expects bus segment to continue its strong performance. And while speaking to NDTV Profit, he said that the commercial vehicle industry is performing as per the company's expectations. And he added that the bus segment led the 16% growth in the March sales. Let's hear it, the conversation.
I think overall commercial vehicle industry has done as per our earlier assessments. We have been assessing it over the year. So overall March was a good month for the commercial vehicle industry, where we had overall growth, including the buses. We had a growth of around, I think, 4.5% for the month. When the month 3.5 ton and above industry, it was around 61,000 as against 57,000 last year. Total industry 3.5 ton and above. Now within that, of course, there has been much better growth as far as buses are concerned, and heavy duty trucks also there was some growth as compared to March of last year, and light and medium duty trucks there was sort of flat or little bit drop. So overall, I would say the industry performed as per the expectations. If you look at for the full year, April to March, commercial vehicle industry 3.5 ton and above, there has been a growth of 0.3%. So you can say it is a marginal growth. So it's flat as compared to the previous year. However, if you break down this growth, it is largely dependent on growth of 16% in buses. So buses market has grown significantly. It is now 95,000, 3.5 ton and above.
Right, so that's the management of VC. Vineet, how would you look at the CV segment? Because the FADA data was also indicating that there is some bit of softness in terms of as CV sales are concerned. However, the government commentary that they might exceed their FY25 capex number, what they announced in the budget, that is telling you a different picture. How would you look at it, and what would your view be on Eicher VCV?
So Eicher VCV will continue to, belie the trend of a softening market. We expect Eicher VCV to continue to do well. And as such, we believe that Eicher will be one of the outlier performers in the, the transport auto segment.
Okay, so that's with regards to where Eicher goes. Vinay, Eicher, and along with the Eicher, if you have to look at the other auto majors as well, specifically a Tata Motors, which was beaten down on the back of the US tariff war. What are charts indicating? Any calls coming in on that front?
So obviously, Eicher Motor is the strongest amongst the pack, not only the commercial vehicles, but entire auto sector. If I were to compare the auto stocks, the Eicher Motor is the strongest, which is placed above all important moving averages, above 50, 100 and 200 days averages. It is not that far from its 52 and all-time high. So in that sense, clearly it is a winner and it is one of the outperformer. Relative strength is very high. So Eicher Motor looking very strong. And in this negative scenario also, it performed relatively better. While if you were to talk about Tata Motor, the before the negative news which came recently, the trend was already on the downside. So Tata Motor has been struggling. It might be a good opportunity for the long-term investor, but as far as technicals are concerned, Tata Motor no doubt showed some pullback, but registered some pullback, but it is looking still relatively weak and relative strength is relatively less. So better to, if somebody is looking for short-term trades or positional trade, then I would ask them to go for Eicher Motor kind of setups, which are looking relatively stronger on medium to long-term charts. So yes, Eicher Motor is preferred stock from the commercial vehicle space as compared to Tata Motors. Ashok Leyland is okay. It is relatively better than Tata Motor, but not as good as Eicher Motor.
Okay, so that's with regards to where Ashok Leyland as well as Eicher goes. But moving on to the consumption pack, FMCG giant Titan is in focus today on the back of the fourth quarter business update. The stock is seeing smart gains of around 4.5%. Mahima joins us to tell us more. Mahima, over to you.
Right, so Titan is shining today, and this is on the back of its strong Q4 update, and this is of course on the back of how gold prices have risen so far. The jewelry growth is strong, but studded mix has slightly declined. The company has reported a 25% growth in their overall revenues. Jewelry business saw a 24% growth. The growth is of course on the back of increase in gold prices. Plain jewelry saw a growth of around 27%, and gold coins saw a growth of around 65%. Elevated gold prices have led to a sluggish demand for consumer at lower price points and a single-digit bar growth. But on the higher end, the higher price bands have sustained the overall demand and have also led to a double-digit growth in ticket sizes as well. Studded jewelry mix has registered a low double-digit value growth. Solitaire segment has seen green shoots where they saw a turnaround and registered both buyer as well as value growth. In terms of like-for-like sales growth, that stands at around 15%. Tanishq has also expanded internationally. They've added new markets like Sharjah in UAE, in Atlanta and Seattle in USA, and they've added 16 new stores, of which 4 are Tanishq stores and 12 are Mia stores. In terms of watch and wearables, they've recorded a strong growth of around 20%. Analog watches clocked a growth of 18%, and they added 41 stores this quarter. Eye care saw a growth of around 18%, both in terms of revenue as well as buyers. E-commerce saw significant growth in this particular segment and added 2 new stores in UAE region. They closed around 11 net stores in India. Emerging business, fragrance saw a growth of 26%. Fashion accessories saw a growth of around 2%, but overall Taneira sales declined by around 4%. Lastly, CaratLane saw a revenue growth of 22%, driven by healthy studded portfolio, and buyer growth was in mid-single digits. The like-for-like growth for CaratLane was around 11% this period, and around 17 domestic stores were added this quarter. Now, in terms of what brokerages are penciling in for Titan in terms of its Q4 update, Citi has maintained neutral with a target price of 3550. They're saying that something to watch out for will be the margin trajectory once the results are announced. Macquarie has maintained outperform with the target price of 4,000. They're saying they expect 20% standalone EBITDA growth in Q4, and healthy growth in Q4 is encouraging and enhances their confidence in their EPS estimates. Lastly, Morgan Stanley has also maintained overweight with a target price of 3876, and they're saying that the headline is strong, but there are internal, that is the different segments are giving mixed signals. So this is the overall view as to how Q4 has panned out for the jewelry giant that is Titan.
Well, thank you, Mahima, for all the details. Vinay, let me come over to you. For Titan now, good Q4 updates. Now this is on the back of rising gold prices. So how are you viewing Titan, and also considering the concerns over the margins, whether they will maintain the margins in Q4? Is one of the concerns that all the brokerages have raised out. So how are you viewing this counter?
So definitely margins will be a concern because the price of gold has gone up. However, we need to see Titan more from a growth perspective in terms of absolute EBITDA rather than the margins, because the value of the business is going up and margins are obviously going to come down. It's a commodity ultimately. So we need to assess what the EBITDA growth is going to be. And to that extent, I don't think Titan will see a significant up move or even any concerns on the down move from my side.
Right. And Vinay, your view on Titan? How are the charts looking for it?
Yeah, so Titan is in formation of, it's look like that in a short term, it is forming a bottom and around 2985 to 3000 was a strong base for the Titan. It is trying to surpass the resistances, short term resistances. According to us, the strong resistance is there around 3200. Once that is taken out, then it will confirm the trend reversal on the upside. So it looks like that after falling and after showing some underperformance now, it is headed higher. We are waiting for 3200 to be taken out on the upside. Once that is taken out, then we can expect extension of the rally. So yes, no doubt it is in last 2 days has seen a nice recovery from the lower level. But from here, I would wait for some level to be taken out. That is 3200, above which it could extend the rally towards 3450, 3500. So overall, yes, it looks attractive. Wait for 3200 to be taken out. Then you can take a trading bet on the long side.
Right, so that's with regards to Titan. But moving on to the financials, three names that are in focus are Axis Bank, SBI and a PNB Housing Finance. Let's pull up all the stocks on the screens. Seeing some smart gains in today's session. You have a Goldman Sachs which has gone ahead and upgraded an Axis Bank to a buy, and they have a target price of 1,288. What they are saying is, clearly it's a mean reversion story as the profitability and the growth is expected to improve from here on. The valuation differential versus other peer banks is also widened. In fact, they've widened to 35% versus historical average of 23%. Talking about a PNB Housing Finance, they've hiked the target price to almost 1,184. They're confident in terms of the earnings outlook of the company. They've upgraded the stock to a buy as well. The profitability is expected to remain resilient. They're seeing improved visibility in terms of the growth profile of the company, which will mainly be driven by newer segments that the company is entering. The asset quality for a PNB Housing Finance is much better as compared to the peers, is what Goldman Sachs is highlighting. And if you talk about valuations, it is cheaper. So a re-rating on the back of an improved earnings profile is what should be on the cards. And very lastly, if you talk about SBI, they've upgraded the stock to a neutral from a sell, and the target price has been upgraded to a 823 from a 806. They're saying that the risk reward is absolutely favorable with regards to where SBI goes. The pressure in terms of the net interest margins, that could be now receding for a SBI. And if they are seeing the ROAs, that's the return on asset, that would settle lower than 1% over the next 2 years, and this is on the back of the normalization that could be happening in terms of the credit costs. Three stocks from the financial space. Vineet, your views, any picks?
So, I would like to provide you with a slightly different stock idea in the mid-cap space, which is Fino Payment Bank. We think that this bank has seen a dip of 50%, but nothing has changed in terms of fundamentals. And there are three things riding, where we think it's an outlier. One is the fact that its SFB license is near term. It could happen in the coming quarter or maybe the next. Second is the digital payment traction continues to remain very strong. In fact, it's going to double over the next 3 years. And the MDR settlement, whenever it happens, it's going to be revenue accretive and margin accretive for the company. So given all these three things and the benign valuations that the stock is quoting at, we believe there is very little downside on this stock, and we continue to expect to see a sizable gains happening in this counter. So this is one of the stocks. The other two that we like is HDFC Bank. We think that the worst is over. And we are very, very constructive on Canara Bank because, if the market settles down, you're getting a bank at very cheap valuations, having best-in-class ROEs and ROAs and good credit growth. Apart from that, you're going to see a number of IPOs hit the street from which this bank is going to benefit. So, this can give you the alpha that, everyone is struggling to get.
Yeah, that's an interesting one in terms of Fino, because I think MK also recently had a report where they initiated coverage in a Fino Payments Bank for a target price of around 400. In fact, what they are saying is that clearly, if you talk about the transition into the small finance bank as a business, along with the lending business, that is what is expected to support the business growth, is what the brokerage is maintaining as well. And clearly, valuations is something is on the cheaper side. Vinay, very quickly, Fino payment, what are charts indicating? Plus, if you have to look at a Canara Bank as well.
Yes, so Fino Payments Bank trend is still down. No doubt it could be a better opportunity for the investors going by the fundamentals, but technically I would wait for some confirmation. Those who are looking for generating alpha in the short term, there is a strong resistance around 240, but it is too far from this level. So there should be some good close with a good volumes. Then we will get a first sign of reversal. But as of now, I can't see that sign, so I will wait for that. Canara Bank, overall PSU banks have been trying to find the ground, and overall they have done well. So Canara Bank, yes, is relatively better and looks good. Market has to support for that. In that case, Canara Bank can participate. The immediate resistance is seen around 91, above which it will find more momentum. So yes, it is a market performer kind of setup on the technical charts for Canara Bank.
Right, so that's with regards to Canara Bank. But very quickly, let's just pull up the rupee. It's fallen past the levels of around 86. Now, what is happening over here is we opened around 3 paise lower at around 85.87 in terms of today's session against the dollar. And in terms of yesterday's closing, 85.84 is where the rupee ended at. The downward trend is something that has continued in terms of the rupee, and it is a day when the currency actually recorded the worst single day fall since February 6th, 2023. This is what I'm talking about yesterday, but clearly now it's fallen past that 86 mark against the US dollar. Vinay, anything that you could tell us in terms of the chart of the rupee? I mean, do you track that? Anything that you could give us?
Yeah, so recently we witnessed sharp appreciation. The rupee almost 3.5% appreciation was there. But as dollar index witnessed low around 101, recent low was around 101, and it has bounced back from that level. So recovery in the dollar index has led to some depreciation in the rupee. But overall, we feel that the downtrend which started and 3.5% correction which started, I think overall trend for rupee is bullish against the dollar, and we can see anytime soon we can see appreciation coming back and resumption of a uptrend in rupee against the dollar. So I think it is a temporary correction in the rupee, but overall scenario is suggesting that dollar should continue to depreciate against the rupee, and rupee will perform better than the Asian peers, as well as it will appreciate in the shorter term against the dollar.
I think there is an impact with regards to the weakness that we are seeing in the Chinese yuan as well, right? So that, along with the sustained dollar demand from importers and foreign investors, is what is actually dragging the Indian rupee. Because if you see in terms of the Chinese yuan, that has weakened, and the importer FPI dollar demand is something which is weighing on the Indian currency as well. In fact, former RBI Governor D. Subbarao said that the RBI is faced with a three-pronged challenge even as the Monetary Policy Committee meets. He told NDTV Profit that growth, financial stability and inflation are the three uncertainties that the RBI would have to balance and account for. Let's quickly listen in to that conversation.
Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that, because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do.
And this is what, the view of ex-RBI governor is that. But, Vinay, just a quick question to you. This is related to pharma. Now, Goldman Sachs has initiated buy on Suven Pharma and Piramal Pharma. Just wanted to have your view. How are the charts looking for that?
So compared, if we look at the chart patterns, the PPL, the Piramal Pharma looks better because it has recently outperformed and remained resilient. So comparatively, I feel that PPL, the Piramal Pharma can outperform because the relative setup has been good. Current price is 223. The resistance can be I can see resistance around 238. About 238, it could extend the rally towards 265 level. So I think this stock can outperform when pharma was falling on the back of negative cues from the global markets. At that time also, Piramal Pharma showed a strength. An existing long position, I think, should be held with the stop loss of 210. I'm talking about the trading long position. So 210 is a very strong support. About 238, it could move above to 265.
Right. Vinith, your quick view on Suven Pharma considering the CDMO growth prospects?
Which one you mentioned?
Suven Pharma.
Suven Pharma, very bullish. We believe that the CDMO business is going to unravel in a very big way in the next few years. And within that, we believe that Suven, which has got a established, credible practice, should do very well going ahead.
Well, thank you, Vinith and Vinay, for joining this conversation. And that's all the time we have on this edition of the show. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं।
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में।
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet. Well, Puneet, the Nifty continues its upward trend. In fact, from yesterday's lowest point, we have gained more than 850 points.
Well, definitely, it's been a strong session for the market today, and we've seen, this from the global cues as well. It's taken a positive stance from the Asian markets as well as what's happened in the Dow Jones yesterday as well. We're currently up almost 525 points. Let's look at some of the key constituents here for essentially the Nifty as well. First, top contributors, of course, almost everything is in the green today. Infosys, Reliance, HDFC Bank being the key one. Let's also look at the mid cap as well as the small cap space as well, because we have seen the broader market recovery as well, essentially from yesterday's lows. So mid cap 150 at 4, up almost 422 points. We're just like off about 80 points on the mid cap index from the highs, but doing pretty well as an index. The similar thing for small cap 250 as well. And finally, let's just look at the Nifty 500 as well, essentially, because it's been doing well. But Somit, there's been a positive trajectory in the market as well.
Well, yes, let's go across to my colleague Tushar, who is in conversation with Cyient Semiconductor's new CEO, Suman Narayan.
Yeah, hi. So Cyient has spun off its semiconductor business and appointed Suman Narayan as its CEO to talk to us what the diversification means. We have Suman with us right now. Suman, welcome to NDTV Profit.
Thank you for having me.
First questions. We have spun off the business. What does this spin-off mean for the company? Great focus on this particular part of the business?
Yes, I think the semiconductor business today represents about 600 billion. It is transforming to about a $2 trillion business in the next couple of years, maybe by 2032. So Cyient has decided to focus on this business, capitalize on Cyient Semiconductor with a real focus on providing custom chips for our clients.
Okay. But the India market, so to speak, or the India semiconductor industry, the chip industry, is still in its infancy, so to speak. Where do you see it going forward, and what role do you think you will play in growing this particular segment?
So if you look at India, even though the market is small, 20% of the world's semiconductor talent actually is from India. If you looked at overall from the world population, maybe 35 to 40% of the world's population for semiconductor is done by people of Indian origin. So I think there's a huge potential for us to capitalize the talent to build the right semiconductor solutions, both for India and for the global market as well.
What would your business entail at the get-go? Where do you see the starting point for Cyient Semiconductor?
So we see a huge growth for us in the industrial applications, especially if you looked at the power needs, power semiconductor needs for data center applications, where it's power hungry, and also to drive efficiency for that, and also in industrial automation as well, where it's also power hungry circuits.
Would you look at setting up a fab facility in India?
No, I think today we're not looking at a fab facility in India. Our primary focus is to do design and also the final test back into in India right now.
Okay, so what is the chip size that you're looking at immediately at the get-go?
So most of our chips will be north of 40 nanometers. So the sweet spot being about a 65 nanometer to 130 nanometer chips for us to do. As contrasted to what NVIDIA does in the 3 nanometer, we really provide the power chips that are needed to power up the NVIDIA chips. That's the goal for us in the custom silicon business.
So what is the application for these large chips? Do we have a ready market in India for such large nanometer chips?
Yeah, so the data center market in India it's at its infancy right now. It's expected to grow 4.5 times in the next couple of years. So we see that, and we also see the robotics and industrial automation market also growing. So those are really good market growths. In the long term, also we see the automotive segment, both in the two-wheeler and the four-wheeler segment, also growing, as you can see in India, with the consuming a lot of chips per car or chips per data center.
The initial investment capex requirements for your company at the get-go?
Yeah, so there's not a lot of capex requirement initially, because most of the capex needed is for the final test. The capex investments, the heavy investments are usually in the fab and in the OSAT, so that's not our focus area today. It's really primarily on the R&D and design and in the final test as well.
So what will be your R&D spend going ahead?
So, as you know, that Cyient has authorized for us to, 850 to 900 crores for us to kind of start this division. So we expect a high R&D burn initially on developing new products.
You mentioned Cyient. We have seen Cyient diversify earlier as well into DLM. We have seen Cyient do multiple acquisitions in the past. So what are the synergies that will come, so to speak, with the parent company?
So I think there's a lot of synergy. We are riding on a backbone of engineering that Cyient has developed over the many years. So I think for us, it's the question of can we partner with the aerospace defense companies in the future and also leverage Cyient DLM to do some of the manufacturing for us on the chip side of the business as well.
Okay. Last couple of questions for you. Where do you see the company scaling going ahead, and what is the role of AI that will come into play for you, especially in the semicon business?
Yeah, so I think the role of AI for us is that we will power chips that do AI. So that's kind of like the future, what we see in the semiconductor business. And our real focus is designing with our clients, partners, and third-party solution providers to kind of design tomorrow together with our silicon solutions.
Okay, so is it the bulk of your business going ahead, AI focus?
No, it's not the bulk of the business, but the bulk of the business is to power the chips that are using AI today. So that's our bulk of our focus today.
My final question to you would be on the supply chain. We already spoke about how if semiconductor space is in its infancy in India, it's growing. But how does the supply chain look at this point of time for you?
Yeah, so today we are partnered with all of the foundry manufacturers, both the TSMC and other foundry members, and also on the OSAT providers like ASC and Watian, for example, from the packaging side. But over time, as the indigenous fabs come up, especially we're looking at like the fabs from Tata, or if you look at the OSATs that are in India, we will capitalize on that when the time is right, and they're production worthy and process ready in the future as well.
Let's talk finally the latest development on the supply side. We know that the tariff wars have sort of started. There's a big, I think about 37% on Taiwan, so to speak. How are you assessing this tariff environment, especially at a time when actually starting off the company?
Mm-hmm. So we're paying close attention to what the tariff wars are going on right now. But I think for us initially, we don't see a huge impact on the tariff. But over time, we'll have to see how it plays out with the US markets and with the India markets.
Would you look to export as well? I mean, I know India is a big market to tap into, but would you look at exports going ahead?
So I think the exports is really from assembly and test. When the OSATs come in at that point, then we'll look at the export market. So that will take some time.
All right. Thank you, Suman. Thank you so much
for having me.
Yeah. So.
Well, shifting focus from semiconductors to the city gas distribution space, IGL continues to remain in focus, and this is largely on the back of the new EV policy, and analysts believe that this could have serious EPS impact if it gets implemented. Now, what is the policy suggesting here? The policy is suggesting that the two-wheelers that are running on petrol, diesel and CNG will not be allowed to run from August of 15, 2026. It also says that all garbage collection vehicles leased to be transitioned to EV by December 31st, 2027, and all public transport buses operated by DRC and DIMTS will be converted into e-buses. They're also saying that private car owners will have to buy electric cars only if they have already two vehicles or more than that. Now, what could be the impact of this on IGL? Now, analysts believe that the new EV policy aims to transition Delhi's transport to electric vehicles with aggressive timelines. It believes that the auto and the three-wheeler volumes alone form nearly 5% of the CNG volumes, and this implies that nearly 0.3 MMSCMD of volumes could exit from IGL's volume portfolio by FY27. Now, because of this, there could be an EPS impact of less than 5%, but the impact of other measures, if implemented, would be much more material on IGL's overall volumes, is what the analysts believe, and this could also lead to serious EPS cut going forward, and hence keep an eye out for IGL in trade.
Got that view, Samit. So it's definitely a stock that's currently in focus as well. But the other ones, of course, that is in focus is also the OMC stocks, right?
Right. Well, yes, oil marketing companies also continue to remain in focus given the fact that the government yesterday announced an excise duty hike of around 2 rupees per litre. Now, oil marketing companies will be bearing the brunt of this, which means that the gross marketing margins of these OMCs will come down or will take a hit of around 2 rupees per litre. But do remember that given the fact that oil prices have come down so sharply, the gross marketing margin would actually would take a hit of the future earnings of oil marketing companies. Now, this $5 per barrel drop that we had seen in the oil prices, that alone would have increased the gross marketing margin by around 2.5 rupees per litre. So that moves out for oil marketing companies. But the current supernormal profits that they're earning, or the supernormal gross marketing margins that they're earning, which is more than 11 to 12 rupees per litre, that will continue for the oil marketing companies. And the oil minister also said that the excise duty that they are collecting by increasing this, by making this increase of 2 rupees per litre, that could be around 33,000 crore rupees, and this will be given off to the oil marketing companies to make good for the subsidy losses that they incurred in FY25. Now in FY25, the total subsidy losses incurred were close to 41,300 crore rupees, and of this 33,000 crore might come in from this hike in excise duty. Now the remaining amount is expected to come in from the LPG hike that was also announced yesterday. Now yesterday they announced a 50 rupees per cylinder hike on LPG prices, and that will contribute around 6 to 9,000 crore in FY26 to the oil marketing company. So both these factors are expected to make good for the LPG losses that were incurred in FY25. However, on the flip side, the minister also said that the oil refiners are maintaining an inventory of nearly 45 days, and that is valued at close to $75 per barrel. Now if the current crude prices of $63 to $65 maintain or remain in the market, then for the first quarter, all the three oil marketing companies could see some serious inventory losses that could come in the first quarter of FY26. So keep an eye out for oil marketing companies in trade. All are right now buzzing, gaining anywhere between 3 to 4% in trade.
Got that view, Somit. Another set of stocks in focus, of course, the Realty Index as it breaks a 3-day losing streak, which is of course driven by broad-based buying and encouraging business updates as well from these companies. Now my colleague Anushi joins us with Q4 updates for Sobha as well as Godrej Properties. Anushi.
If we are looking at the real estate updates which have come so far, we are looking at a mixed picture overall in terms of where Sobha Limited is concerned. If you look at the Q4 growth numbers, that's the total pre-sales number that stood at about 1,836 crore, which was a 22% of a growth. But Sobha share in it, if we see, that stood at about 1,370 crore, which was a 7.5% of a growth that we are looking at. Average price realizations also saw about a 5% of a growth at 11,781 square feet. But it's the FY25 numbers which are a standout over here. If you look at FY25, pre-sales are down about 5.5% on the account of some of the launch delays which have taken place. In fact, it also missed the revised guidance of 6,644 crore, which is the FY24 figure that the company expected to achieve in FY24. So, miss on the pre-sales guidance is what we are seeing. Do note that the company had already revised its pre-sale guidance in the third quarter, which initially they had pegged it at 8,500 crore, but due to the delay in the launches, that was then revised downwards to the FY24 number, which was there last year of pre-sale. So, but coming back to what led to the Q4 growth was something like a Sobha Madison Heights and Sobha Hamptons, which aided in this Q4 growth that we are looking at. Combined saleable areas stood at 3.67 million square feet. Along with that, if you are looking at another project, which was the Chartered Birdsong Plotted Development Project, also aided in the Q4 number. So it was the FY25 number, which was a miss for Sobha Limited. But let's also talk about Godrej Properties. Now here, this is one stock which has been posting robust set of numbers from a quarter-to-quarter basis is what we are seeing. In fact, if you look at the Q4 pre-sales number, that stood at 10,163 crore, registering a 7% of a growth here. FY25 pre-sales, if we are looking at, that stood at 29,444 crore, which again showed about a 31% of a growth. So this Q4 was a culmination of a couple of new projects that the company launched, which included the likes of Godrej Riviera in Noida to the size of 2,000 crore for booking value here, along with Godrej Astra in Gurugram and Godrej Madison Avenue in Hyderabad, seeing bookings of around 1,000 crore. But if we take the whole FY25 picture in consideration, the company has beat its FY25 pre-sales guidance of 27,000 crore, achieving about 109% of its overall pre-sales guidance that we are seeing. In fact, if you look at the business development, that stood at 26,450 crore. The company had already achieved its business development guidance in the third quarter period itself. So these two counters are in focus on the back of some couple of business updates. In fact, Axis Capital also had a note on Godrej Properties. They are seeing more than 90% of an upside here on the back of its pre-sales, beating the estimates on the strong sustained sales which are going on, and also expect the company is on track to deliver its best ever annual operating cash flow for the year itself. So strong update for Godrej Properties. But on a Sobha, if you are looking at the FY25, it was a miss in terms of where the pre-sales number was concerned.
Got that view, Anushi. Thanks for that. But, we've seen the markets being in turmoil, of course, impacted because of global factors such as the Trump tariffs. And my colleague Vishwanath spoke to KK Mistry, the former VC and CEO of HDFC, who spoke about markets, tariffs, as well as the RBI. Listen into a slice of their conversation.
frankly, if I was an investor, and I do invest a lot, I would always look at a long-term view. Never get tempted by the short-term ups and downs in the market, because when you're investing in stock markets is a long-term story, and you have to stay invested. I think the market reaction over the last 2 days has been exaggerated significantly. If you look at our economy, you have to look at the economy, not look at market. Markets will go up and down, but you have to look at economy, because markets will ultimately follow what the economy is doing. And in my opinion, the Indian economy is strong. It's very robust at this point of time. The tariff war is going to hurt us less than it's going to hurt our competitors. We have to look at things not in absolute terms, but in relative terms. So, first of all, if you look at what is exports. Exports today is about 22 or 23% of our GDP. And then within that, exports to the US are about 17% of our total exports. So if we look at that picture and work out the arithmetic, by my reckoning, the impact on GDP should be about around 40 odd basis points. Not a very material number. Then we come to the benefits that come out of this. The first is the sharp fall in oil prices. You know, I've always said in many interviews that for us in India, the single or one of the most important criteria is oil, because we are such a large importer of oil. And when oil prices come down, it's a big benefit to us, whether it's in terms of current account deficit, fiscal deficit, GDP growth, and inflation, and so on and so forth. So with oil prices having come down so much because of the global uncertainty, we are clearly a beneficiary. And the second is the liquidity that, and first of all, let me first compliment RBI. I think RBI has done a fantastic job in the last 4 or 5 years, ever since we started COVID, to make sure that we did not get the kind of tearaway inflation that the Western world saw. And now we are seeing RBI easing, RBI infusing liquidity in the system. My expectation is that there is a credit policy tomorrow. We'll probably see a rate cut tomorrow. So liquidity, more liquidity will again enhance the GDP numbers by about 10 odd basis points. So net, in my view, the impact on GDP will be not more than 25 to 30 basis points, which is not a material number at all. And now if we are to compare ourselves with China, with Vietnam, with Bangladesh, which are some of the countries which compete with us for exports, we are so much better off. So let's look at it from the perspective that on a relative basis, we are far better off today being in India than being in any of these countries.
Let me also ask you this question. This view that India is better placed than a lot of other Southeast Asian economies is now becoming more prominent in discussions. But I wanted to get a sense. One of the economists who was speaking on our channel a little earlier had said that India might have the largest lifeboat, but they must remember that they're still in the ocean with the rest of the countries. So it's not like we've gone past the choppy waters yet. I mean, yes, we're relatively safe. But do you think those choppy waters have say, a second order impact at all?
So the primary effect is not going to be very material. Okay. I think a lot of people are worried about the second effect that can come because of tariff. Second effect coming because you see a big slowdown in the US. And if there is a slowdown in the US, what impact it'll have in terms of the IT industry, for example, that job creation will slow down in India. I don't buy that theory. I think, first of all, if there is pressure in the US and US economy starts slowing down, you may, contrary to IT spending slowing down, you may actually possibly see IT spending increasing, because companies want to then take advantage of better technology, better systems in order to cut down on manpower costs. So I don't think you're going to see that material and impact, a second impact, or at least that material, a second impact, in my opinion.
Okay. One of the other arguments was that there is a system that has been set, let's say, over the last 50 years, right? There's a way the world works and the way the world trades. And now you're upending it entirely. You're saying, okay, I don't want to trade with somebody who does X, Y, Z, so I will place reciprocal tariffs on them, and then let's see, and maybe bring back businesses into the US, and slightly more insular, inward-looking sort of an approach to global trade. I wanted to get a sense from you, is this even a realistic move? And forget US, for any country.
I think, first of all, there will be a lot of negotiation that will follow. It's not that what has been announced today is Cyclostrand is going to happen like this. Yeah. Some amount of negotiation back and forth will take place. So let's wait for all of that to settle down. I don't think you're going to see trade, such a dramatic change in trade over the over a longer time frame. Let's give it a little time and let things settle down. You see, markets react whenever there is any kind of uncertainty. Yeah. And whenever there is uncertainty, markets sort of tend to fall sharply, which is what you saw the last couple of days where global markets have collapsed a lot. But I think now logical thinking should come into the picture, and you should see the markets getting a little better, unless there is some bad news which keeps coming every day.
Okay, you mentioned a 25 to 30 basis point impact to India GDP, right, because of the current uncertainty. This is also coming at a time when, in general, you're seeing GDP growth sort of taper off a little bit. Does that then add to any concerns?
No. So the way I see it is, if you take the period ahead, I am a lot more bullish and a lot more optimistic about the Indian economy in 25, 2026, because now we've come to a stage where inflation has largely been controlled. Even in fact, inflation was even controlled last year and controlled very well. It's just that food inflation spiked, and that caused the headline number to go up. But if you look at core inflation, which is excluding food and excluding fuel, core inflation throughout the year was somewhere in the 3.2, 3.3% range, which is not material. So I think now, with the slight change in stance of RBI, more liquidity being injected, we've seen one rate cut happening a couple of months ago. Probably we'll see another rate cut happening tomorrow. So given all of these facts, I would today be a lot more bullish in terms of government spending happening. I would be a lot more bullish in terms of economic growth next year. So I think for us in India, the only real thing we need to ensure, and full compliments to the government for doing it so long, is to make sure that we are creating enough jobs for all the young people who are passing out from schools and colleges every year. And if we can do that, I honestly believe that there is no reason why the Indian economy should not be on a roll for the next many, many years.
The government is estimating about 6.6, 6.8% roughly growth for FY26. There is also a developed nation target. Yes, it is 22 odd years later, but is that 6.8 enough to drive India?
I think so. Historically, if you look at it, look at what's happening to the rest of the world. Again, let's not look at it in isolation. First of all, a 6% growth is not a bad growth at all. We are comparing the 6.4 or 6.5 of this year, March 25, with the 8.2 or the revised 9.2 we had last year, but that was an exception. Yeah. Anything upwards of 6, 6.5 is a very good number to have. Global economy is growing at around 3%, less than 3%. The advanced economies are growing at an even lesser pace. So in that sense, India stands out as a shining star in the global world.
How do you take benefit of this ecosystem? If you were an advisor to somebody who's probably creating rules, how would you say that, okay, these are areas that we should focus on and ensure that we fill the global supply chain?
Well, I think you have to understand where is the demand going to come from, and what is our capability, what is our strength in terms of being able to meet the demand. So it's going to be very industry specific. So I can't give you a very general comment, but within industries, a lot of things will happen. You take, for example, the IT industry. There is so much of innovation and so many changes that are happening. Almost every month you are seeing something new development on the IT front, whether it's in terms of artificial intelligence or what artificial intelligence will do. So there is so much of scope for growth in services itself, let alone manufacturing. Manufacturing, yes, but even in services. You go to hotels today, any hotel you go to, you see the hotel occupancy rates are booming. The restaurants are all running full. So on one side you are saying that the economic growth is slower at 6.4 or 6.5%. On the other side, we are seeing that at the ground level, consumption is beginning to pick up again. We did see a slowdown in consumption for some period of time, but that is beginning to pick up. And again, last thing, which is that we are a domestic economy. Let's not forget that. We may take advantage of all the challenges which some of the other countries are having in terms of tariffs and improve our exports or increase our exports. But at the end of the day, domestic demand can sustain India. We were not so badly affected during the COVID period, apart from all the great work, and honestly great work that the government and RBI did. I think we also benefited from the fact that we are a domestic economy. And so long as the domestic economy continues to grow, India's growth rate will be there irrespective of what happens.
I want to ask you last couple of questions. The first one is the question about the domestic consumption, right? And yes, it's true that the domestic consumption is what drives India's growth story. We've had a period of a little bit of a slowdown, at least on the urban consumption side. Hopefully that is going to turn around this year. But I wanted to also get your view. Are we missing something on the urban consumption side that maybe, because one view was that the current metrics that we use to measure urban consumption may not completely measure everything. On one end, the data suggests that consumption is slowing. On the other end, you're seeing, large houses being bought, cars being bought. Your luxury cars are showing large number of sales. Yes, smaller cars are not. Anything that you think maybe the data is missing?
So, in my opinion, what happened last year is that, as I said, inflation was very well controlled. But food inflation spiked for a large part of the year, or for some part of the year. Fortunately, that has also come down, and the outlook looks good because we should be getting good monsoons this year. Now, for a lower middle income or a middle income person, more the lower middle income, which is the bulk of where bank deposits come from and consumption comes from, food is the single biggest item of consumption for them. So with food prices being higher than what they were last year by whatever 7-8% at some point of time during the year, out of that total amount of money that they earned, a larger portion went into paying for the food that they were buying, and therefore a lesser amount was available for consumption. I think that will change. I think that was a temporary phenomenon. That will change. I would also expect that deposits in the banking system will also, which has seen a bit of a slowdown for some time, will also start seeing a pickup in the current year.
All right. That was actually going to be my last question. I want to understand bank deposits because it seems that rates as a tool to motivate depositors is not really working.
So that is, you're talking of fixed deposits. When you're talking of bank deposits, you're looking more at the CASA deposits, which is your current accounts and your savings accounts. And that is not so rate dependent. It is not dependent on rates at all. Yeah. It is dependent on the fact that how much money does the average person have today and how much money is going to leave in his bank account. So again, it goes back to this item of food, that if food expense is higher, you're spending more on food, you're having lesser amount to put in your bank account. People say that stock market's affected, people started putting money into the stock market and therefore deposits did not grow. That's a flawed theory. It's a completely flawed theory. Because for example, if you are buying a share from me and you pay me money, you will pay me money from your bank account. So it moves from your bank account to my bank account. The total deposits in the banking system don't change. What may change is that retail deposits may become wholesale deposits, which may have a lesser lendable value. But apart from that, nothing changes. So that's not the explanation.
That's huge. That is a biggie. It's on the
Gold Class Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, सिंपल लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita and with me is Neeraj Shah. We've somewhere brushed off some of the fears that have come with regard to tariffs over the weekend as well as at the start of this week. We're up 2% now on the Nifty, just off the day's highs. If you can pull up the intraday chart, that's what will signal. And it's largely in line with the way global markets are behaving as well. When you're seeing US futures, they're also in the green. So propped up in that sense, largely in line with how global markets are doing. We came off those highs and now we're seeing a bit of a bounce back. But overall, we're net 2% higher on the Nifty 50 index, which is a key positive. Let's look at the heat map. Of course, certain pockets doing well, something like a Titan, something like a Shriram Finance, Zomato are leading the pack. IT, and within that Infosys doing very, very well and leading again the top IT stocks as well. Pretty much all stocks in the green. Not been a while since we saw that, and it's also a bit of a relief. But it's also a bit of a reversal to what happened yesterday, and therefore that also to be kept in mind and contextualized, that we're just seeing a bit of a rebound versus yesterday. And mind you, from the lows of yesterday, we've definitely seen a larger rebound than the 2% we're seeing in trade today. Let's also quickly look at the advanced decline, because the breadth yesterday was extremely weak, and that's the one thing which is standing out today. Look at the market breadth, extremely strong in that sense. And that's really standing out as well in a week which was going to be marred with uncertainty. And the last piece is with regard to sectors. If you can quickly pull that one up, and it's largely the same shift that we've seen. Yesterday we saw the Nifty Metal under pressure. Last couple of trading sessions, in fact, that one is up 1.4 odd%. You're seeing a jump across the board, of course, and you can see that on your screen. Everything in the green. But IT is standing out as one sector, despite it being export facing, is up 2.5%. That's the one thing that's very heartening to see. Outside of that, you've got oil and gas, realty, as well as to a certain extent PSU banks, which are more inward facing, and therefore that bounce that we're seeing today may be more justified. Nifty Auto is up 1.7 as well, and the Bank Nifty is up around 1.3. So underperforming the Nifty, the Bank Nifty today, but broader markets is where a lot of the action continues to be. Both was yesterday and continues to be today. Neeraj, broader markets.
Thanks, Harsh. Well, firstly, the VIX should come up on your screen because it is a bit tempered. It was down maybe 14 or 15%, currently down just about 8%. So volatility isn't exactly sinking. So bear that in mind. Look at that chart also. Then in terms of stocks which are losing out in trade today, I think that is an interesting mix while we talk about the gainers, because the small cap index is still up about a couple of percentage points, but 361 WAM is certainly, or 361 is certainly under pressure in the session today, despite the fact that the markets have looked good. That is one. Delivery is down about 7%, so that has not looked all that great either. There is weakness in Welspun Corp, Vodafone, Astral are amongst the other names which have looked slightly wobbly in the session today, but the key loser is Delivery, which is down about 7%. I don't know if it's got to do with the valuations of the business that it's acquired. What's doing well today, some of the pharmaceutical related names are doing okay. Diagnostic companies, Vijaya Diagnostic is up 10%, Rainbow Children is up about 6.5%, so that's a bucket that is okay. PG Electroplast and Keynes Tech bring up the EMS players which are doing well. Lloyds Metal, from the broader end of the spectrum, metal companies is also doing okay. And some gains in tech, the likes of KPIT Tech, which is up in trade. So that too is not doing too badly. But the standout performer, as I hand it back to Harsh, has to be the oil marketing companies. And HPCL leading the way, 4.5%. So yesterday's losses have been recouped. But the likes of BP, IOC also should be in the green. So decent showing for the oil marketing companies. What are the key factors, Harsh?
Well, interesting, because it's a day where actually, Neeraj, there's been no news on the global front, but markets globally seem to be brushing off the tariff fears to a certain extent, right? And that is the big headline, at least today. IT also in recovery mode to a large extent. Question is, have we really priced in a lot? We've seen a 30+% correction. Has risk reward suddenly started turning favorable even in the current environment is the question. PSU banking index leading sectorally in that sense, and that may not be a big surprise in terms of how broader markets are playing out. They're outperforming marginally. We did see that. And last off, the market breadth is extremely strong. And given the kind of week that we were bracing for on Sunday, and given the way the Dow had reacted and US markets had reacted on Friday, as well as futures were reacting Monday, in that sense, we've not had that bad of a couple of trading days if I were to combine the two. Market breadth today, strong. Neeraj, quick question as editor. What's the sense like at this point? You believe market has started to brush off fears, and therefore what should participants, investors, viewers do?
Play it slowly and steadily, but the longer term picture is still unclear. For the short term, I think we've got some of the best men and the best experts on the show today, so let's try and do that. Kush Bora, the reason why Kush kudos, because you got it right yesterday in morning. Kush had mentioned that if we close above 22,000, then that will be the win for the day. And it was tantalizingly down and up, and then closed about 22, and currently about 1.7%. So Kush, with the presumption that you initiated some longs in closing yesterday because it closed above 22, are you taking money off the table if you were long yesterday in today's session?
Hi, Neeraj. First up, a very good afternoon. Thank you so much for remembering that and highlighting and all the kind words. Yes, I mean, the market did take heart from the fact that the closing was above the 22,000 mark. Also, just to answer one question that Harsh posed to you, how do you read this? What happened today, at least on the global front? I think this is more like a round one of the boxing match where one fighter has thrown punches and the other one sort of given them back, and now we're on a break. So I think this is more of the interim break, before the next round of the boxing match begins. But either way, I think right now we are on a good footing. The way markets reacted yesterday and the follow through that's coming today, that is very healthy. If I did have long positions, yes, I would take them off the table, but only partially, because now the momentum starting to pick up in very strongly beaten down names like IT. I think banking is what I would call a little muted, although it is still about 1.5%, but I would call it muted, and that's largely ahead of the RBI policy. I think once that is out of the way, and if the rate cut is in line or better with market expectations, that you'll see a rally here also. So take some money off the table. But if you bought it yesterday, if you had the courage, to buy it yesterday and you're holding it today as well, then with that extremely favorable risk reward ratio, you should continue holding on to the rest of the position. Resistance do come in at 22,650 and then the 22,900 mark, but that's still some distance away. So you might want to ride that wave. So my view at the moment is that if you have an existing position, continue to ride. If you don't, you could still enter. You could still buy with a stop loss around the 22,300 on the Nifty.
And what's the likelihood of that, Kosh? Do you believe, and what would the factors be like? What would you watch out for to expect further highs in this environment? Because it's a risky, it's a risk-off trade which is currently at play, and now suddenly we've seen a reversal and a very sharp one globally.
Absolutely, Harsh. I'm not saying we're out of the woods in the sense that yesterday we did speak of 21,500, that number that keeps popping up, at least on my on my analysis time and again. And if the volatility were to extend 21,000 as well, I am not taking that scenario out of the picture. Don't get that wrong. This is, as you rightly said, a sharp pullback, a sharp bounce back after a much sharper cut. So that number still stays. That is still my base case scenario, given the kind of volatility that the world has witnessed in the recent past and might witness going forward. The factors that are play right now, two things. One, no news is good news. We've not heard anything for yesterday and today, and hence the markets are perhaps taking this as a calm. As I said, this is the break between the two rounds of a boxing match. So that is one factor. No news is good news right now. Secondly, look at the sectors that are at play here. As I just mentioned, IT is seeing a rebound. Again, I don't think even IT is out of the woods. Most of these stocks like the TCS, NCs, and HCL stocks of the world are rebounding from deeply oversold territories, and you would have never seen such oversold levels on some of these names. Banking also rebounding, holding ground. That's a healthy sign. So I think the sectoral participation and the buying interest at lower levels is something that will give support to the rally that we're currently witnessing.
Point taken. Coach picks for this afternoon.
Still going with two buys given the optimism that I'm sharing on the index at least. Apollo Hospital has done rather well over the last 10-15 odd sessions, knocking at the doors of the 200-day moving average. So for targets of 68.25, 69.40 with a stop loss around the 6600 mark, you could consider a long. Also Nazara Tech, very interesting moves on this one, where it's almost completed the recovery of Friday. Yesterday's fall obviously recovered almost the Friday move also. Friday lows also being touched here. Also, there's a very good move on this one in terms of the 200-day moving average and the 50-day moving average converging, and the stock comfortably trading above that. So for targets of 980 and 1000 with a stop loss around the 940 mark, Nazara Tech is a.
Got it. Okay, Kush, stay on. We will probably talk about the banks at some point of time too, simply because the most important event in the next 20 hours is the RBI policy. And to talk about the policy, Anudeep Nandi, India economist and executive director, Nomura India, joins us right now on the show. Anudeep, thanks much for taking the time out and being with us today. What are you penciling in? A 25 a given, and could it be more, or would you be happy with a 25 and dovish commentary around liquidity?
Dovish 25 basis points is our baseline case. So I think 25 should be guaranteed, because this is the second rate cut that would happen. RBI has already delivered one. The question is, so there are two issues that where there is uncertainty. One is, will they do 50 basis points? It can happen. We've attached around a 25-30% probability of that happening. And the other question is, what do they do on stance, right? Does the stance change from neutral to accommodative? Actually, RBI has already played its card, so to speak, there, because there's been a sort of tsunami of liquidity that it's injected into the market, and so you can really see the pivot that's happened with Governor Malhotra taking charge, where it's a different RBI, an RBI that believes that liquidity needs to be in surplus, and so in that mode, for all intents and purposes, we are already sitting in accommodative. So maybe in terms of a signal, that would be that would say something. But I think currently we have neutral stance, 25 basis points cut, dovish commentary.
Okay, and so the RBI has done quite a bit, as you said, a different RBI around liquidity already. Do you expect more measures to take place in order to presumably support the uptick in capex that the government says that they have seen, and they will beat the FY25 number in some fashion? And we hear some strokes, some management conversations that we've done in select sectors talking about capex coming into play as well.
So the RBI doesn't have to, wait on occasion out here. It doesn't have to wait for an MPC meeting to deliver more liquidity, which it's already shown so far. So yes, of course, they can inject more liquidity on the policy day itself, or announce some measures then, but it doesn't stop them. I think the bigger issue is sort of the verbal communication that goes out, right? So if the RBI comes out and says that, look, we believe that we want liquidity to remain in surplus. We want it at, say, 1% of net demand and time liabilities. So it's sort of, if they give that, then the message that goes to markets is really strong, which is that clearly there is a pivot in policy. There's no guesswork. They can take the guesswork out of it, and I think that helps. So in terms of liquidity, I guess sort of the bigger step can be in terms of just communicating what the RBI sees and wants. Because if you look at the February policy, right, it seemed like a very conservative policy. And the reason why markets were surprised by all this liquidity is that none of this was really discussed and mentioned as much in the policy meeting. I think this is a really good time for the RBI to say, look, this is the regime that we are looking at. We want interest rates to go down. We want liquidity to remain in surplus durably over the medium term. And I think that is a pretty strong message too.
Right. Aradeep, this is Harsh also joining in. Given everything that's happening globally with regard to tariffs and otherwise, is there enough of a case for a 50 basis point cut tomorrow? And in your view, I know your view is 25 bips, but in your view, do you believe that there is a strong enough case for a 50 bips as well?
So here's the thing. If a central bank delivers a 50 basis points cut, it means, it's panicking, right? That situation has gotten bad. People are standing at their desks saying, oh my God, we need to do something. Now, of course, one rationale could be that if I am easing, I might as well just ease quickly and get interest rates down. But I think, look, there's a lot of uncertainty around this tariff business because, yes, the headlines look scary, right? But we really don't know how this will play out. We don't know if some of these tariffs countries negotiated down. We don't know if there's going to be winners or losers. It's really an uncertain world. We don't know what impact it will be on exports, on consumption, on investment. I mean, currently we just forecast that things are going to go worse. But how bad would it go? I think there are a lot of open questions at this stage. Given the fact that the RBI is already easing, right? I think it can still afford to wait to sort of see how the macros play out before committing to a larger cut, as opposed to just sort of hitting the panic button right now. Yes, the RBI has been late to the rate cut game. We've been arguing for a rate cut just based on cyclical growth drivers going down domestically. We've been saying this since October. We've been calling for a rate cut even in December. So it's not like the domestic side has been doing great and suddenly there is a global crisis and you've got to spring to action. Rather that yes, we are through a cyclical growth slowdown which is accentuated by global shocks. Let's see how that plays out. You have space. So, you can deliver 25 now, and if need be later in the cycle, you can deliver 50. So that's sort of the rationale we have for sticking to 25 as a base case. But again, that is 50 is also a distinct possibility. It's just not our baseline case.
And Auradeep, I wonder what your view is with regard to the risk of trade at this point. So US bond yields have again started to inch higher. There's of course a large level of uncertainty in the global environment. So would be unfair of me not to take your view with regard to how the global macro will likely play out according to you.
So I think the world is going to react differently to this shock. In the case of the US, our belief is that the shock will first hit inflation before it hits growth, right? And I mean, growth will eventually slow. We are not penciling in a recession right now, but our 2025 growth, for instance, from 2%, we are bringing it down to 1.4%. 2026 from 1.8 to 1%. But the first shock is actually going to be on core PC inflation going up on a 3-month annualized basis. In fact, we see it even crossing around 6% in the near term. So what will the Fed do in this situation? The Fed will be on hold. Right. And so we still have our a rate cut in December for the Fed. But in the case of Europe, in the case of the rest of the world, the growth shock happens first, right? Country, be it India, China, Vietnam. For these countries, the first shock will happen in terms of lower exports, lower consumption, lower investments. And so policymakers here will actually have a sense that let's ease in order to counter this shock. So I think on the policy response is going to be different. I think in the US, it's going to be more of tackle the inflation issue. In the case of emerging markets, it will be tackle the growth issue. And I mean, on inflation side for India, for instance, we think that for most of the months in the year, inflation will be below 4%. And let's not forget, in all of this, there is a distinct risk of China dumping its goods in countries like India, which is going to be, again, disinflationary. So when you put all of that together, I think there is the inflation we don't think is going to be the first victim of this growth is. And sort of that's going to shape out the macros. Just one thing, I mean, even if you look at past crisis, right, it's never a linear pattern, be it for macros or markets, right? So there will be phases where the markets really bleed. And then there will be phases of recovery, things sort of going back a little bit. And then again, there is some bleeding that happens. So this is typical of any crisis. It's rarely that, it's sort of a linear one-way street.
Point taken. Auradeep, I come from a standpoint that RBI's policy will largely also be driven with the way the Fed will respond to everything that's unwinding. And therefore, do you expect that, of course, you're expecting that inflation will continue to remain elevated, but growth will come off sharply. You'll likely slip into a recession. That's at least what currently the consensus seems to be. And you might also see some issues with regard to labor as well. Unemployment data will start to look negative. Do you believe that there is a large case for the Fed to cut in a big fashion in this year? Do you probably anticipate that, and therefore India also may see larger cuts?
Okay, so India seeing larger cuts is something that can very well happen. Our baseline case is cumulatively 100 basis points, and it could be more, right? Because there is a serious growth concern. When it comes to the Fed, I think the question that one needs to ask is, what does a central bank do? And a central bank's first and foremost job is to tackle inflation. And I think, Fed Chair Powell has said as much that, what we want is that the tariff shock is a one-time shock and it doesn't sort of transmit through the system. So the worst case scenario for Fed, so if you look at Fed's objective function, the worst case scenario for Fed is that, yes, prices go up, so inflation goes up across the board, and then it remains sticky and it stays on. And now you are in a point where you can't cut because it's just that you've got to tackle inflation first. So again, I think in terms of Fed delivering a rate cut at this point, the risk is that you are yet to see the inflation side of things, right? So your inflation is going to be above target. And if you're cutting rates, then your risk is that inflation, the sort of horses bolt out of the stables, and growth will obviously get hit. It won't be solved just by a rate cut. So I think the way the Fed is likely to play it, in our view, is that it can afford to wait. It can see, okay, let's see how much this inflation problem, how big this inflation problem is, right? So let's hold our nerves till then. And meanwhile, let's not forget that, so far, US fundamentals have been strong, right? So US consumers so far have have surprised us on the positive side. It is a service-driven economy. So you need to still see if a recession happens or not. It's not a given. It's certainly not our base case as of now. So given that you have a responsibility towards inflation, A. Two, you're going to see the inflation risk come out first. Better for a central bank then to take care of inflation. And once you're okay with inflation, then you start focusing on the fact that growth is slowing.
Point taken. Thank you so much, Auradeep, for this very detailed perspective, but crucial at this point to get your views with regard to everything that's happening. So thanks so much for coming and speaking with us.
Thank you for having me.
Right, with that completely out of time, what we're going to do is slip into a short break. On the other side, we'll have heard on the street, of course, and we'll talk stocks. But before we slip into that break, here's a view coming from banking veteran K.K. Mistry, as well as former RBI Governor D. Subbarao, talking about the key challenges for the RBI and their expectation from tomorrow's MPC meet. Listen in.
A lot more bullish and a lot more optimistic about the Indian economy in 25, 2026, because now we've come to a stage where inflation has largely been controlled. Even in fact, inflation was even controlled last year and controlled very well. It's just that food inflation spiked.
Right.
And that caused the headline number to go up. But if you look at core inflation, which is excluding food and excluding fuel, core inflation throughout the year was somewhere in the 3.2, 3.3% range, which is not material. So I think now with the slight change in stance of RBI, more liquidity being injected, we've seen one rate cut happening a couple of months ago. Probably we'll see another rate cut happening tomorrow. So given all of these facts, I would today be a lot more bullish in terms of government spending happening. I would be a lot more bullish in terms of economic growth next year.
Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that, because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these?
Slightly past 2:30, but great time to get in my colleague Sumit Sarkar, who joins in with all the chatter from the dealing rooms with the herd on the street segment. Sumit, what is being heard on the street? More bullish tones than bearish tones?
Well, yes, somewhat bullish tones is what the street is indicating. Firstly, what I'm hearing is on Max Healthcare. The potential buzz on the street is that there could be a block deal by an FII very soon. So keep an eye out for Max Healthcare in trade. The second stock that is in focus is Delivery. Now, a couple of days back, they announced an acquisition. Today, we are seeing strong sell flows on that counter. Now, what I'm picking up is that a foreign emerging market investor has been selling his stake today. There were multiple block deals as well today, and this selling is likely to get over soon for Delivery. So keep an eye out for Delivery. Trent is another interesting stock that was down around 17% in trade yesterday. Today, it opened higher, but currently it's just trading 0.5% up. It has fallen nearly 4% from day's high. Smart investors are indicating, or in fact fearing, that there could be some inventory issues when it comes to Trent, and that's one of the reasons why there has been selling pressure when it comes to Trent. Yesterday, now I had clearly mentioned that there was buy flows when it comes to IT. In fact, IT was the top sectoral gainer from a day's low yesterday, and today also it's one of the top sectoral gainers in trade. A couple of stocks that stand out in IT sectors, Emphasis and Coforge. What I'm picking up from dealers is that large HNIs have been buying into this counter. This could well be a positional trade, a buy trade as well from their side. So keep an eye out for Emphasis and Coforge. And lastly, it's Suprajit Engineering. Now, yesterday the company announced entry into ABS manufacturing, and what dealers are indicating is that in fact they have signed up deals with two potential customers. They have expressed interest for the company. Obviously, this will not generate revenue over the next couple of quarters, but the entry into this segment was largely because a couple of customers, their existing customers, have shown interest, and there could be potential clients for Suprajit Engineering. So it could generate a good amount of revenue, at least after the next couple of quarters for Suprajit Engineering. So keep an eye out for Suprajit Engineering as well.
Okay. Well, a clutch of names to certainly watch out for. Now, this is, of course, what is heard on the street, and keep an eye out over the next few days as some of these might turn out to be true. But as a part of a larger strategy to curb Delhi's air pollution, the draft EV Policy 2.0 proposes a complete ban on fossil fuel powered two-wheelers from August 15, 2026. No renewals for the CNG vehicles as well, clearly out there. Sumit, how does this impact IGL? Because the stock is taking it on its chin.
Well, yes, if you see, IGL is the only supplier of gas in the Delhi region, and obviously Delhi contributes nearly 70% of the total volume, and this could lead to serious EPS downgrades for IGL if the rule is implemented. Now, what the rule is saying is that two-wheelers running on petrol, diesel and CNG will not be allowed from August 15, 2026. In fact, not only two-wheelers, three-wheelers as well. All garbage collection vehicles will be leased to be transitioned to EV from December 31st, 2027. Public transportation buses will be converted into e-buses, and private car owners who already have two vehicles will have to buy an electric vehicle, is what the policy is saying. Now, what analysts are saying about this impact on IGL for this, now they're saying that the new EV policy is aiming to transition Delhi's transport to electric vehicles with aggressive timelines. Aggressive is the key word to focus here, and they're saying that the autos and three-wheeler volumes alone contribute more than 5% of the total volumes for the company, and the EPS impact could be around could be less than 5% on IGL, but it will happen from FY27 if this new policy is implemented. But what is more worrying is the other contours which have been proposed in the policy, and that could have a much bigger impact on the EPS of IGL. So there could be EPS downgrades coming in for IGL, given the fact that the volume growth story would slow down, and hence we are seeing this kind of a selling pressure when it comes to IGL in trade on the back of this policy. But do remember, this policy is yet to be implemented. It is just proposed.
So IGL under pressure. The new EV policy anyway interesting in terms of the kind of opportunities it will take forward for all segments, and autos also in focus today. Dharmesh Kant joining in he's head equity research of Chola Securities. Dharmesh, very good afternoon to you and great to have you on. Since we're talking about the new EV policy and the auto pack, let's start with your views there.
Yeah, good afternoon, Tavanna. I mean, again, it's a clear push from the government for the EV vehicles, and they have been very vocal about that EV is the way to future. So, having seen everything in the context and the type of EV, I mean, the automobile slowdown is going into the sector. This will again have a tapering effect because vehicles, not every company is ready with their EV portfolios for the public, and it's a forced kind of a environment, especially in Delhi. If you're owning two four-wheelers, then the third one has to be an EV. So it's a mandate by the government. I think again, automobiles as a place will undergo more of a consolidation till the time the entire portfolio of EV, be it two-wheelers, three-wheelers, or four-wheelers are there for the people to decide on their picks. So transition period. I don't see it as a cyclical buy trend as of now.
Okay, Bajaj Auto in focus. Kush, very good afternoon to you. Anything looking interesting to you in the auto or the auto Ank pack as an opportunity? And I'm wondering if you're going to say I told you so at any point. Is any of the recovery that we're seeing today something that you think that you had seen in advance?
No, I'm gonna let Neeraj do it for me. He already did it at the start of the show, so yeah.
Oh, wow.
We could rewind that.
Okay. So tell me about autos and auto Anks.
Very tricky play here. The leaders at least are not on a strong footing. Be it the four-wheelers or even some of the two-wheelers. While we did like some of the names on on the auto Ank side, again, we've not seen that kind of participation. See something like a JBM Auto or a Lumax Auto, or Lumax Tech. Some of these names did actually start to show signs, but they didn't have fizzled out because of everything that's happening around the auto space in general. So I would sort of put this on a wait and watch list. Not very encouraging move. The recoveries also have been there, but not something that would warrant a trade just yet. But that said, JBM Auto, Lumax Auto, some of these names I will keep on my radar, but nothing, as I said, strong enough to keep put out a buy call on.
Do you have any buy call or except for JBM Auto? Kush, any buy call apart from JBM Auto? Anything in the pack?
No, not yet. The auto pack is very much on a wait and watch list at the moment.
Okay. What about some of your movers today, like a Keynes Tech, for example? Some of your auto Anks, ER&D space, they're looking interesting, especially as some of those fears are easing. Kush, what are you making on Keynes Tech? Let's talk about Keynes Tech specifically. 7% up.
So even if I take out what happened yesterday, Keynes, Dixon, some of these names, they have been reeling under pressure. The recovery was actually sold into even before yesterday, mind you. So for example, a Keynes Tech specifically that you've asked for, 51.50, 51.75 thereabouts was a 200-day moving average. That's the best it could do, and we saw 2 days of attempts of breaking beyond that level, and that was about 10 sessions ago, and then it kind of slipped from there on. So I wouldn't be too excited about these names. Even Dixon, I'm including in the same list until some of these key resistances are taken out. So I'll push that resistance level for Keynes a little higher to a 5,200. If that is taken out, perhaps a new rally could come in. For Dixon, that level comes in about 14,000. If that is taken out, you could see some selling pressure evade, and then some buying interest kick in. Up until that happens, I think this downturn that began late last year, has been continuing. There are bouts of recovery, but nothing so meaningful that would say that the trend has turned for some of them.
Okay, let's focus on the stock of the day. Titan is in focus on the back of their fourth quarter business updates. Mahima is joining us to talk about why Titan is turning out to be the stock of the day. Mahima, off its highs, definitely, but it's gold prices that is boosting Titan more than anything else, isn't it?
Right, absolutely. You're right, Tamanna. So the Titan stock has been shining on the back of its Q4 business update, and of course this is on the back of how gold prices have risen over the quarter. The gold jewelry growth has remained strong this quarter, but overall studded mix has slightly gone down. In terms of how segment-wise performance has been, well, in terms of jewelry business has seen a growth of 24%. The growth is on the back of high gold prices, plus there is buyer growth also coming in single digits. Plain gold has grown over 27% and coins has shown a growth of around 65 odd percent. Overall Q4 has reported a growth of 25 odd percent. In terms of elevated gold prices, that has led to a sluggish consumer demand in the lower price ends, and this has also led to a single digit buyer growth there. But overall demand for higher price bands has sustained, and this has resulted in high double digit growth in ticket size as well. Studded jewelry growth has shown green shoots and has seen some so studded jewelry mix has kind of recorded a low double-digit growth, but overall solitaire has shown green shoots and it has gone up this particular quarter, both in terms of buyer as well as value growth. In terms of like-for-like sales growth, that has come at 15% for the jewelry business this quarter. Overall, Tanishq has also expanded its network in the international markets in Sharjah as well as in Atlanta and Seattle in the US, and they've opened 16 new stores this quarter. 4 for Tanishq and 12 for Mia. In terms of watch and wearables segment, the growth has come out at 20%. Out of this, 18% of growth has come from the analog segment. They've opened around 41 stores this quarter for watches and wearables. For eye care, the growth for this particular quarter is 18% year on year, and this is driven by both the revenue growth as well as the buyer growth. E-commerce has been the new segment that has augured growth for eye care. They've added 2 new stores in UAE region this quarter and closed around 11 net stores in India this particular quarter. So for eye care, their focus now is driven towards the e-commerce. In terms of the emerging business, fragrances has done well. The growth has come at around 26%. Fashion accessories has shown a growth of around 2 odd percent, but Taneira has shown a decline in sales of around 4 odd percent. And lastly, CaratLane has also registered a good growth of around 22% this quarter, and this was also driven by the overall studded mix portfolio. Buyer growth was in mid-single digits, and like-for-like growth for CaratLane was at 11%. Total 70 new domestic stores for CaratLane were opened this particular quarter. Lastly, what are brokerages making of this? Citi has maintained a neutral stance with a target price of 3,550. They are saying that margin trajectory will be something to watch out for once the results are in. Macquarie has maintained and outperformed with a target price of 4,000. They're expecting a 20% standalone EBITDA growth in Q4. And what they're saying is that healthy growth in Q4 is encouraging and enhancing their confidence in the EPS growth as well. Lastly, Morgan Stanley has maintained overweight with a target price of 3,876. And they're saying that overall Q4, the headline is strong, but the internals, that is different segments of Titan, are showing mixed cues. So this is the overall view as to how the Q4 has panned out for Titan and why it's buzzing in today.
Mahima, very quick 20 seconds. Volume growth numbers aren't out, but if gold prices had gained so much and if Titan sales are 22%, suffice to say volume growth would have been tepid?
Definitely, because studded mix, they've already said that it's in low single digits, so volume growth might not be as good as what it has been in the past quarters as well. So this rise in revenue will be on the back of rising gold prices only.
Gold price alone. Okay, thanks for that, Mahima. And Dharmesh, now put that into perspective. Are Titan's numbers therefore as good? If gold prices were to be stagnant, then are we looking at a stagnant quarter up ahead based on the past trend? I know it's not easy, not wise to say what's happened in the previous quarter will happen, and this is probably a busy quarter from a wedding perspective too, but still.
I doubt, Neeraj. I mean, the volume growth is low, and it was seen in the Q4 numbers itself. The revenue growth was primarily led by the gold prices growth, and people have been consuming less. And seeing the year ahead, I think the disposable income in the hands of people will be far less than what it was last year. So that incremental disposable income growth is also going to come down. Putting everything into light, if gold prices stay where they are, I don't see a very good year for Titan FY26. It can be maybe, see, this is the revenue growth. We haven't seen the PAT growth or the operating profit growth. So that is critical to see how the operating profit growth or the PAT growth materializes. And that I think will be 12 or 13% at best. Keeping in light with 86, 87 kind of a PE multiple, it's difficult for Titan price to appreciate a bit. It may languish here, maybe 2-3% more, but I don't see the stock climbing up from here.
Margins will be something which need to be watched very, very closely when it comes to Titan. What about the view on its charts, Kush, on Titan?
It's come at a level where you could perhaps consider, accumulation in the sense that you could start accumulating. The stock is at a 2-year low. If you take the retracement level, on the weekly setup, it's at a 61.8% retracement, which is a very strong support zone. 3,000 level, also psychologically acting as a support. So it's got a few points going for it. But as Dharmesh mentioned, the confidence in terms of a sharp up move, is missing even on the chart, even in the volumes, even on the price action. But given that it's got a few technical parameters going for it in terms of support, it will not be a bad idea to perhaps consider start accumulation. I wouldn't go big on it just yet, but yeah, this is a place where you could start consider accumulation on Titan with a stop loss just under the 3,000 mark, perhaps 2950, 2900 thereabouts.
Okay. Well, stay on, gentlemen. Let's get in a special voice to try and understand how the trend of the market looks like. Dr. C.K. Narayan, a couple of columns ago, had written about some timelines around April 22nd, and of course these get thwarted as a result of the tariffs. But Dr. Narayan, I wonder, and thanks for joining in firstly, but I wonder if the structures have become a bit fuzzy because of all that's happened in the last, let's say, 4 or 5 days.
Well, you see, the event is large enough to create a problem in any kind of analysis, fundamental, technical, whichever you use. Because I think the entire world order is being changed right now. One man has been able to create that. But as far as time cycles are concerned, I think they are inexorable, right? So they will play out. Now, they may play out differently from the way we envisaged it before this major event. But I think when those cycles are due, some turns will happen. Now, whether those turns will be larger ones or minor ones, that is the only thing which remains to be seen. So the March bottom was right on cue. From there, the rally came up. It finished at a level of expected resistance, which was somewhere around 23,800. What was not expected was that this whole rise of about 1,900 points would get smashed in a matter of about 3-4 days. But the event was such, and then it has become a global event. Now for April, the major turning point in the time cycle is the 22nd. And I will be looking for some price nexus to happen along with that. Now, when we say price nexus, the prices could be down to support or the prices could be up into resistance. Along with that, I would also be looking at the general thing that we look at for a turn. It should generally be an amalgam of price, pattern, sentiment, momentum and stuff like that. So typically larger turns happen when all of these things come together. If just one or two things are there, then that time cycle turning point produces only a minor turn. So let's wait and see. I have the things mapped for 22nd. We'll wait and see how all these things come together or just a couple of things come. Depending upon that, we shall actually map out the next move up or down.
Okay. All right. Mr. Narayan, Harsh also joining in. I also want to try and get your view with regard to, therefore, how should one play this as an investor? There's just so much uncertainty. What would you advise at this point? How should you play it?
Well, I think the first point, speaking from an investor's point of view, is that we had a lot of headwinds, before this event. This event itself was a headwind, right? Then we had the headwind of the FI selling, which kind of flipped over in the week before this, where they turned actually net buyers. They covered their shorts. They actually went long a bit in derivatives and all that. Then your dollar was a headwind because it was heading up and you had the DXY at about 110. That is retraced to around 100, 102 levels. Your 10-year bond yield was also a headwind because it was up there at about 4.5 or and all that. That is now down to 4%. So I think lots of headwinds which were there that have all moved away a bit. So I think there is something to be hopeful in the sense that if headwinds have either moved away or been blown away slightly, then the danger of further declines reduces. So that is point number one from an investor's point of view. Second, headwinds not being there is not good enough. Do we also get some tailwinds so that the prices will go up? For that, I think one will have to look at the fact that the RBI and the government itself has been trying to infuse liquidity into the market. That's always good news. The RBI policy coming up for tomorrow, I think that seems to be a shoe-in for a 25 bips cut. There is also a lot of talk for more than 25 bips cut that we'll see. Now that should be sentiment positive. And of course, then you have Q4 results, which are also starting from the day after tomorrow. So I think these are 2-3 things, and these are all in the short term, right? And then in the longer term would be whatever deal we can strike with the Trump administration in terms of these tariffs. Now, we are not in a position to dictate terms to America like China could, or China has, or Canada, or France. All of these fellows have stood up and said, okay, here it is, buddy, right back at you. But we are not in a position because our economy is not large enough, or it is too dependent on so many things for us to do something like that. So we will have to try the rapprochement way, the dialogue way. And so maybe if something good comes out of it, that will be something a little slightly longer. And even longer term from investor's point of view, if India it can really take advantage of something which gets thrown up here. So in that context, what is the investor to latch on to? I think that is only one major one and two minor ones. The major one would be the Q4 results. So the Q4 results will put up candidates, and then he keeps watching what happens to the 10-year yield and the dollar.
Agreed. But Dr. Narayan, so while that happens, just now purely from what can a person do now from a tactical positional trade perspective as well? We were just talking yesterday, IT index down 31%. Is IT a good enough index or specific stocks within that bucket to start trading? Any other set of stocks or sectors which look interesting to you for a trade, be it long or short?
See, for a trade, I think I would confine myself to day trades right now.
Okay.
Because there is no clarity and there is too much confusion. And who knows what will happen overnight. So I would confine myself to day trades. Then it doesn't matter whether it is IT or it is any other pack, whatever moves you have to trade. From a sectoral perspective, I think it is too early to call it. Now let some results come and let there be some sort of a pattern, or let there be some show of consistency. Then we can latch on to sectors. IT is beaten down and the mood in that is also bad. Whether that should be bought or not will be shown by the initial set of results. And I think the leaders will come out first and that will set the trend. So sectoral pick will be after some bunch of results have flown. Subsequent to that, wherever there is some amount of good OI build-up in the stocks, which last post the results, etc., I think those would be the other ones to build your position on in futures.
Okay. Dr. Narayan, appreciate and keep some of these points in mind. Maybe look at day trades as well, as opposed to really taking large positional trades, but bear all of these in mind. And when I think of some short-term trades, guys, I think one bucket that is standing out right now is oil marketing companies. That's a bucket that's doing really well for itself. So a quick question to both our experts, Kush and Dharmesh, before we thank them as well. Kush, after this 4.5% uptick, would you trade BPHP IOC at all?
No. One-word answer is no.
One-word answer is no. You don't want to trade them on the long or the short side. Okay. Dharmesh, oil being so low, is it worth going out and investing into HPCL where marketing margins are clearly doing well?
It is doing well as of now, but the answer is no, because it's not a long-term wealth creator.
Okay, fair point. Okay, that's succinct, and thank you so much, both of you, for joining in today on the show and giving us your thoughts as well. I must say, viewers, you look at today's chart, HP BPRC look very good. HP over the last 6 months, YTD, whenever you look at those timelines, the stock has actually not created wealth. So maybe there is a point here. Take a quick break. Back with more market opinion.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day. Welcome back. It's turning out to be a good afternoon, and what's very clear is that as far as policy maneuvers are concerned, Government of India is on top of it. Very important story from my colleague Rishabh that we're going to highlight now. India is setting up an import monitoring group for certain products to check diversions from countries which face US reciprocal tariffs that are higher than India, such as China and Vietnam. So let me just explain this. As US increases tariffs on China and Vietnam, there is a fear that they may end up dumping all of those goods in markets like India, because the US, of course, will have much higher tariffs. That is a huge problem for our domestic for our domestic manufacturers. Rishabh, what is the policy plan to tackle this?
Right, Tamanna, what we're hearing from our sources is the fact that this will be an interministerial working group that will be reviewing any potential surge in imports that might be coming in as a result of the sweeping US tariffs that we've seen come in from this Trump administration. What we're seeing is that members from the Commerce Department, from the Department of Revenue, as well as Department of Investment and Trade will also be joining in. What we're seeing is that the focus is on 4 core product groups. Number 1 being consumer goods. Number 2 being electronics. Electronics is very important given that China, Vietnam, Thailand, Indonesia, Cambodia, all of them are competing nations with us with regards to a lot of low as well as high value electronics manufacturing. Apart from that, there is a potential surge expected in goods such as chemical as well as iron and steel products. So these 4 products will be kept under review by this group. Also, what's very interesting is that these products will be reviewed starting June and July. So still a couple of months left before this working group starts to monitor the data that's coming in. The June-July period is because in a couple of months is when the full operationalization of these tariffs will come through on all countries, and that's when the data that will come in, the import data that will come in, will be more reliable, and we'll more be able to understand the impact of these tariffs on exports as well as imports. Back to you.
Okay, thanks a lot for that. By the way, so thanks for that, Rishabh. Now, some numbers out on the screen in transformers and rectifiers, big bump up on margins, as a result of which that stock also likely could be doing okay. Let's just pull that stock up. I would reckon that such a sharp bump up should probably lead to the stock doing well. Yes, indeed, 4.99, so 5% higher, and just locked on a circuit now simply because of the kind of numbers that have come in. Avinash Gorakshekar, Director of Research at Profit Mart Securities, as well as on the fundamentals. Aditya Agarwala, Head of Research and Investments at Invest4EDU. Gentlemen, both of you, thanks for joining in. Avinash, I'm coming to you with a specific first. Transformers and rectifiers, a pocket that continues to show growth, 500 basis points expansion in margins. Is it something that interests you enough, whether Trill or some other transformer company?
No, I think my sense is, transformer companies will continue to do well, Neeraj, because clearly, the demand from the power sector has been growing quite rapidly. And I think once the, December quarter numbers had come out, the management was quite positive on the order book, on the execution. So I think these numbers would definitely be quite, reassuring, considering the fact that they also have a further order book which has got to be implemented in FY26. So I think even at the current odd level, to bet on these companies, one could definitely expect a decent compounding return of at least 15-20%, because margins are pretty intact. The order book continues to grow. And I think with the kind of supply crunch we have seen on the power generation side, plus a lot of industrial users, now are opting for, transformers, I would suggest that, this could be a good kind of, bet to put your money on, at least if one were to look at the fact that it comes from the mid and the small cap category. And I think this is one area where possibly the returns could be much better than the broader market. But I think you'll have to live with the volatility, because today the markets have been good. So, good news has been welcomed by good upside. We'll have to wait how the market performs. But otherwise, I think it's definitely a good investment bet if you look at the next 12 to 15 months.
Okay. Let me just go quickly to Aditya Agarwala joining us this afternoon. Aditya, very good afternoon to you. Let's get an index view very quickly.
Hi, Tamanna, good afternoon. Index is going to remain choppy. Let's talk about Nifty first. I think it will try to cover up the gap that we had witnessed in trade yesterday, somewhere around 23,000, 22,900. Index will make an attempt to touch that level and close up the gap area. But I don't see a significant upside in the index. It should continue to consolidate in a range. We've seen a lot of price correction. It needs to enter into a time correction now. So my sense is between 23,000, 23,200 on the upside and 22,000 on the downside. Nifty should continue to oscillate in this zone, while you will see pockets of sectors outperform. And same holds true for Bank Nifty. If anything, I think Bank Nifty is something that can outperform from here on. So on the upside, 51,000, about 51,500 is what I'm eyeing on the Bank Nifty. On the downside, I think 49,900 should be a good, decent support area for the Bank Nifty. So one should clearly look at more of, and we are seeing that also, Tamanna, a shift towards consumption and domestic stocks rather than export-oriented stocks. So I think focus on Bank Nifty somewhat, and then consumer durables.
Okay. Any stock calls at this point? We have about 20 odd minutes of trade to go.
I've got a couple of buy recommendations, Tamanna. Indus Tower is looking very interesting to me. Despite all the mayhem, stock has actually stuck its neck out and it's on the verge of a breakout from a narrow consolidation phase. So Index Tower for me is a buy or a BTSP candidate for a target of 410 on the upside, with the stop loss at 345 on the downside. The second is insurance play. It's looking very interesting to me. And again, focusing on the domestic consumption story, I think insurance is going to do really well. ICICI Prudential is looking interesting to me for a target of 600 with a stop loss at 540 on the downside. This can also be bought.
Okay. Stay on with us. Let's go across to bull versus bear segment. Today we are putting the focus on PNB Housing. Stock has been on a rise today after a positive note from Goldman Sachs as well. Let me go across to Harsh, who's breaking it down. Harsh, what's the bull case and what's the bear case for PNB Housing?
Well, plenty of zing on the stock today and an upgrade coming through. But yes, I'll try to kind of outline the bear case along with everything that's coming, which is largely bullish, at least on a day like this. First off, with regard to growth guidance, they're guiding for a 17 to 18% retail loan growth on the book. But what we've seen is that the last 5 years, the growth has been absolutely sluggish. And therefore, there will have to be a big reversal in loan growth if this were to start to come through. The bull case is, of course, that retail loan growth will be 17 to 18%. Now, in terms of where that growth will come from, one of the spaces is affordable housing, and that's my second case. Affordable housing, in that sense, is going to be one big component of the book. Currently at around 5,000 crore on a 70,000 crore book size, is expected to grow fairly rapidly. But mind you, the book size of 72,000 crore in the larger scheme of things is quite large for a housing financier. We've seen other housing financiers growing at a far sharper clip. So in terms of compete, can they be able to grow on a 72,000 crore size only with the help of affordable housing? I'm not so sure. There are a couple of other levers which they will have to use to kind of ensure that that loan growth comes through. And there are other players in the market which are growing faster because the size is larger here. Let's talk about asset quality, because that has been the big overhang. They're expecting credit costs at 30 to 35 bips, largely driven by recoveries, is what they've said. That's the bull case. Asset quality in the affordable housing book, as well as new businesses that they're doing, including retail, needs to be monitored more closely, because these are new ventures that the company has gone into. Whether they can continue that kind of a credit cost on the new book is really the big question, which will probably translate in a year or two as the cycle turns. Margins, they are expected to continue to improve since they're going into newer segments. Spoke about it. ROA target 2%. They're doing 2.2 roughly at this point. But margins, at least, they're banking on a turnaround in the business as a whole. And therefore, if they're able to turn around the business, then those margins are sustainable. So something you may want to really look for is whether it's sustaining or not. Valuations, cheaper than peers, currently at roughly 1.5 times 1 year forward. Or even sub 1.5 times 1 year forward, to be absolutely precise. But the real question on the bear side is growth and asset quality. They've seen difficulty in the past, and hence it's cheaper than peers. Also, the growth is slower than peers, and therefore something to be mindful about. It's a bit of a balance that you'll have to try and calibrate in terms of valuations. Growth plus good asset quality plus valuations, all three is the right way to look at it. And that's where this company has suffered, at least over the last few years.
Okay, interesting breakdown there as far as PNB Housing is concerned. Earlier in this year was on a lot of, let's see favorites for 2025 list. I wonder if it still makes the list for you, Avinash Gorakshikar. Any views on PNB Housing after that very elaborate breakup that Harsh has given us?
No, I think clearly, valuations seem to be attractive, Tamanna, but, as Harsh rightly pointed out, the track record in the last 3 to 4 years has been very sluggish. I think, the market would obviously look at re-rating the stock once we get a little bit of stronger growth, from the April to June quarter. Hopefully, if interest rates are cut and I think the affordable business segment grows significantly for the company, then I think one could definitely look at the stock. I think within the housing finance space, there's a lot of competition. We believe that, it's better to wait for a quarter or two to see what kind of growth trajectory the company actually records, because, the narrative seems to be very good, but I think deliverables have to be, delivered in terms of numbers. So I would prefer a hold, fresh buying, only after the Q1 numbers, according to me.
Okay, NBCC in focus as well. Order win news coming in. Let's just pull up the intraday very quickly for NBCC. As we speak, they've got 3 construction orders worth 121 crores. Stock close to the day's high. So, when some of that panic settles, and I'm not saying that we're out of the woods yet, but when some of that panic settles, you then see stocks beginning to react to news like order wins. Aditya Agarwala, is NBCC something that you've been tracking?
Yes, Tamanna, it's an interesting setup. I completely agree with that. More of a consolidation going on. 86 on the upside is a hurdle for the stock. Once that is taken out, I see a clear up move to levels of 95 on the upside. So definitely one should keep it on the radar. Immediate buy targets are 86. Beyond that, I'm looking at a target of 95, 96 on the upside.
I'm just wondering if you have any view on a delivery. Delivery getting slammed today was part of our Herd on the Street setup as well. But Aditya, any take on delivery at the levels that we're currently seeing at 248?
It's a one-way downward spiral, Tamanna. Stock continues to make lower lows, lower highs. I don't see any reason to go out there and buy the stock just yet. Till the time it crosses that hurdle of 280, 290 on the upside. So I'll stay away from the stock. If you already unfortunately entered into the stock, then I would suggest keep a stop loss somewhere around 230, 235. That happens to be an immediate support. If that is broken, I see a further decline on the downside. So as of now, stay clear of the stock. Don't look to venture immediately into it. Let the dust settle down. Let it start making higher highs, higher lows. There may be a better idea to get into the stock.
And what about Zomato? Since we're in the space and talking about it, and just to remind people what we've said on Herd on the Street today as far as delivery is concerned, Somit in his piece talked about sell flows by a foreign emerging market investor as well. What we're hearing is selling could get over likely too, but the charts show continued weakness. Aditya, my question to you on Zomato.
Oh, definitely. That I think that's a buy for me at current levels. As a disclosure, we have recommended the stock recently to our clients as well, so it would be there in the portfolios. At current levels, I would definitely stick my neck out and buy the stock. Clearly, because of the fact that despite all the mayhem that we've seen in the market, stock has stood tall. It has entered into consolidation, broken out of a narrow consolidation as we speak. So at current levels, yes, I will stick my neck out again and buy at support of 200. So that should be the stop. Look for a target of 260 on the upside. If that is taken out, I think 300 can also be doable in the stock. So that is one stock that we are gung-ho, and I think one should clearly look at adding the stock in your portfolio more from an investment perspective rather than just a trading bet.
Okay, Realty Index is also in focus. It's broken its 3-day losing streak driven by broad-based buying and encouraging business updates from several companies. Anushi is joining us with what the Q4 update is looking like for Sobha and Godrej Properties. Yes, Anushi?
Hey, so firstly I'll start off with Sobha Limited. Now if you are looking at the Q4 total pre-sales value, at the face of it we are seeing a 22% of a growth, which looks on the healthier side. But if you just take the Sobha share into consideration, we are looking at a 7.5% of a growth with average price realization standing at 11,781 per square feet, showcasing a 5% of a growth here. So overall Q4 update, while the total pre-sales is on a healthier note but the Sobha share is seeing a 7.5% growth, but more than that, it's the FY25 picture which is more in focus. If you look at what has happened, FY25 pre-sales were down about 5.5% on account of launch delays which have taken place. In fact, with this, the company has missed its revised revised pre-sales guidance as well, which was around the levels of 6,644 crore, which was the value that we have seen in FY24. Do note that the company had earlier guided for an initial 8,500 crore of pre-sales, which had revised downwards in the third quarter to the FY24 pre-sales value of 6,644 crore itself. Now on to the Q4 launches that we had seen for Sobha Limited. This included the likes of Sobha Madison Heights and Sobha Hamptons. Along with that, they also launched a chartered birdsong plotted development project as well. So this was in terms of where Sobha was headed. The company missing its FY25 guidance for the year. But if you look at Godrej Properties, it's the contrast scenario that we are looking at. In fact, the company beat its FY25 pre-sales guidance of 27,000 crore. This it did by achieving a total pre-sales of around 29,444 crore, which is a 31% of a jump from last year. And if you take the pre-sales guidance in consideration, it's about a 9% of a jump from those levels. Business development, which we see that stood at 26,450 crore, again beating the guidance in the third quarter itself, which stood at the roughly likes of around 20,000 crores. Now, in terms of how the Q4 shaped up for the business, Pre-sales stood at 10,163 crore, which was also its highest ever quarter sales, 7% of a growth here, while FY25 pre-sales, as we've discussed, saw about a 31% of a jump. A couple of projects which helped in this number that we are looking at. So firstly, higher sustenance sales is something that we are seeing. Other than that, Godrej Riverine in Noida clocked in about a 2,000 crore of a booking value, and Godrej Astra and Gurugram and Godrej Madison Avenue in Hyderabad saw about 1,000 crore of booking value. So this is the overall picture that we are looking at for Godrej Properties. Overall, a strong business update from here, while for Sobha, we are seeing an overall miss on its FY25 guidance that it had stated.
Okay, thanks a lot for that, Anushi. So clearly watch out for some of the real estate names. Any thoughts here, Aditya, on any of the realty plays for a trade?
I do like one stock, Neeraj, in this space. I'm not sure if fundamentally that's a good company or not. On charts, definitely this looks good. DB Realty is something that stands out for me. It's a very handful of stocks within the real estate space that I like. So at current levels, DB Realty for me is a buy with a stop loss somewhere around 150 on the downside. Go for a target of at least 210 to about 220 on the upside. So this is one stock which definitely stands out for me. I would clearly avoid Godrej Properties at current levels. That seems like still into a corrective phase. Until the time the correction is over, I'll not get into Godrej Properties at current levels.
Aditya, I want you to give me one more chart check, but couple that up with your closing strategy as well. The chart check that I want from you is Z. It's like a phoenix rising from the ashes after ages. I'm seeing Z make this move, 12% now. So word on Z and then your closing strategy.
A very good move, Neeraj, and an encouraging move, but I'll still wait for levels of 112 to be taken out, because that happens to be a major hurdle for the stock. Happens to come back from those levels. So if it crosses above 112 in trade tomorrow, yes, I will go ahead and buy the stock for a target of 124. Again, purely a trading bet, and put a stop loss just below 100 or maybe around 100 for a target of 123. But wait for it to cross 112 and then buy it. For me, a stock that I'm looking to go ahead and buy now is the GMR Airport. A very good up move, trading above its 200 DMA after 5 months. So at current levels, I'll be a buyer in the stock and look for a target of 95 to about 96 on the upside with a stop loss at 81 on the downside.
Okay. So that's the word GMR Airports, and watch out for that one. Was in the green even on a bad day yesterday, by the way. Avinash has recouped some of those losses quite strongly. GMR Airports up today as well. Is it an investment candidate?
Yeah, I think, Neeraj, it is a quasi-monopoly business, and I think, looking at the kind of growth in the airline sector and very few companies operating in this space, I think if the time frame is at least a couple of years, I think one could definitely expect that probably next year they could become profitable. The management has also guided for improved profitability from FY26 onwards, and I think considering the kind of growth in aviation traffic and the kind of opportunities going forward, definitely one could look at a long-term deep value kind of stock, because numbers are not very great as of now. They still are not profitable, but I think over the next couple of years, hopefully once they start making the bottom line positive, you could expect a decent amount of re-rating, because this business is like an annuity business and there are very few players who compete with the company.
Okay, GMR Airports in focus this afternoon. So is Vijaya Diagnostics. Now I'm wondering what's cooking over there. Vijaya Diagnostics has been an interesting take all day, actually, in about 19% up. I'm wondering, Avinash, if there is something that you're liking in this space or this stock specifically?
No, I think Tamanna, 19% upside. I think unless there is some corporate news or some corporate development, it's difficult to figure out what exactly has happened, because clearly, I think markets are in a good sentiment. So obviously, local companies which unlikely are going to be affected by the tariffs are being accumulated by investors. But specifically, some corporate news seems to be in the pipeline, because 18% move cannot happen without possibly either fundamental changes or basically some corporate development. So I think it's better to wait and watch here.
Wait and watch here. On the charts, Aditya, would you look at this counter or any in this space today?
I would not get into Vijaya Diagnostics after 19% up moves, Tamanna, but yes, I have a couple of names in this space which definitely stand out for me. Dr. Lal PathLab is something which I definitely like. I think offering an excellent risk to reward on the verge of a breakout from a channel. 2550 is the resistance. So I will go ahead and buy the stock at current levels, look for a target of 2800 on the upside with a good support on the downside at 2500. And the second stock in this space is Krishna Diagnostics. That is also looking interesting to me. I think a good support on the downside at around 700 at current levels. I'll go ahead and buy with a stop loss just around 720, 710. Look for a target of 850 and 900. So these are the two stocks which I like in this space and definitely can be looked at.
And Aditya, your picks for this, apologies, we just took your picks. Okay, Aditya, quickly on to how should one play metals at this point? We've seen deep gash in metals both on Friday as well as yesterday. The Nifty metal holding up well today, but your sense with regard to how one should play metals?
I think it's still early days to get into metal just yet. The few stocks are bouncing back from yesterday's low, but I will still wait it out to see how the stocks react tomorrow or maybe on Friday's trading session. Because I think the pain in metal stocks are not just over yet. It will take some time. Consolidation will be there. More than price correction, I think time consolidation should be there. So I would still avoid playing metal. If anything, I'm looking at within the space. I think NMDC is something that is looking interesting to me. So maybe once the dust settles down, NMDC is something that I look at. But again, at current levels, I'm not looking at any metal stocks going long.
Rainbow Children is the other one which has done well. So selectively, some of these healthcare names haven't done too badly. Keep an eye out for that. Marksons amongst other pharma names. Okay, call me besotted with Z, but such a move doesn't escape attention. Avinash Gorakshekar, are you a buyer into any media name, particularly Z?
No, I think, Neeraj, I would prefer to wait for the numbers to come out because, this company has a legacy of problems as far as its balance sheet is concerned. And I think unless and until we see some more cleaning of the balance sheet and the cash flows improving, although, historically, it's been one of the older players in terms of their media library, in terms of their digital assets. I would believe that today's move is definitely good enough, but I think it needs to be backed by good fundamental numbers in the Q4. I think once the Q4 numbers come out and we get a better sense from the management in terms of the outlook and commentary, I think I would prefer to enter at that level. Although at these levels it definitely looks attractive, it's been beaten down significantly. But I think for a better visibility, I think it's better to wait for the Q4 numbers, which should be out very soon.
Another stock on the radar is Axis Bank. I mean, some positive brokerage notes as well, but making smart moves. Among all of this love for private banks right now, Avinash, where would you rate an Axis?
No, definitely. I think in terms of the positioning, Axis looks attractive, Tamanna. I think, our favorite was ICICI Bank. But I think if you look at Axis Bank numbers, definitely it stands to benefit because of the large digitization kind of efforts it has put in, and more importantly we expect a strong Q4 number and plus a good FY26 outlook. And what has happened for banks like IndusInd has actually made a lot of investors reshuffle their portfolio. So it's better to get into the top 2-3 large private sector banks because the outlook also shared by IndusInd has been very disappointing. So I think to a large extent some amount of reshuffling in portfolios has also benefited Axis Bank.
And Avinash, I'll stick with you. Some of these power financiers, we've ignored them for a bit now, not spoken too much about them. What's your take at this point?
No, I think clearly, this is a business which is going to grow rapidly, and it is like an annuity business, huge demand, and a lot of runway for growth over the next, say, 2 to 3 years. So I think companies like REC, PFC, even companies like Irida, which was recently listed, I would believe that unless you got a year and a half kind of time frame in mind, these could be good opportunities because I believe that numbers in the Q4 and for FY26 should be significantly better. So I think good business, and I think in this kind of volatile market, these are domestic plays, Harsh, where there's hardly any dent or damage from the import tariffs. So I think definitely they should grow considerably well even in the coming year.
And Aditya, 3% on a Bajaj Finance. I know that there was a CLSA note on this one, and they compared a Bajaj Finance's form to a Sachin Tendulkar's form and said that you can't rule out class is permanent, right? So from a fundamental perspective, extremely bullish, and I'll be curious to know Avinash's views. But quickly, 30-second thoughts with regard to technicals on this one.
Oh, definitely one of the best stocks within the Nifty 50 space. I would completely agree with that. Class is permanent, form is temporary. Look for a target of 10,000 on the upside. Stick with Bajaj Finance. If you're still not bought the stock, maybe it's a good time to look at adding the stock in your portfolio.
Avinash, your views?
No, I think I would also like to second the view. See, Bajaj Finance is definitely a quality play in the in the financial space, and I think the kind of balance sheet they command, the kind of asset quality they have, I think there's no doubt that over the next couple of years, growth is definitely going to be rock solid. My sense is that I think investors should have moderate expectations of returns here, because the kind of money made in Bajaj Finance in the last, say, 4 to 5 years has been extraordinary. But I think going forward, one could expect compounding returns of 18-20% every year. That should satisfy investors, for investing in such a large cap name. But I think, yes, definitely long-term prospects are good.
I'm pretty sure that investors will take 18 to 20% any day of the week if they got it year after year. So that will be an interesting one. But thank you so much, Avinash, as well as Aditya, for joining us this afternoon and giving us all of those views. We'll let you go around half a minute or so to close now. Let's quickly look at how the Nifty is shaping up at close. We're just about 0.5% thereabouts, I believe, from the highs of the day. 22,697, so 22,700 is where we made the highs. We're around 150 points off that. It's a decentish recovery, and we had already seen some bit of that in trade yesterday, but today we are sitting in the green and largely in line with how global markets are responding as well. So a positive day of trade in that sense. Let's look at the heat map as well. A couple of pockets which have done well. Some of the Fin Nifty stocks and NBFC stocks in focus. Shriram Finance. Mind you, tomorrow is the big day where you might see a rate cut, and therefore you might see some zing in these stocks continue tomorrow. You want to watch out for that. But a Bajaj Finance up 3%, a Shriram Finance up 5% at close, and a Jio Finance up nearly 6% at close. So very interesting moves there. Otherwise, BEL on a big order win, Titan on the back of its Q4 update, keeping those stocks in focus, anything between 3 to 4% higher. But I'm interested in seeing this. Nearly 26 stocks have gained 2% plus in trade today, which is very, very solid. The breadth was extremely good. 40 stocks 1% plus higher. So really, really solid breadths where the Nifty 50 is concerned. Power Grid, the only loser, but frankly, it was just slight negative bias at close. But outside of that, some IT stocks also in focus, and let's pull up the contributors. That will give us some flavor on how IT has done, because some of the heavyweights, the contributors, please, on the Nifty 50. That's of course how IT has done well, but look at the contributors. Heavyweights dominating that, but Infi right at the top among those heavyweights. So in that sense, IT has done well. IT index, if we can look at it intraday as well, it's had a good day. It's been a bit of a good comeback, but off the day's highs, as you can well see. Let's look at sectors now. Let's look at the entire sectoral heat map. Pretty much all sectors closing in the green. The India VIX has cooled off, so that's the other positive. But you're looking at media, which has seen a spike 4.5% on the back of Z doing very well in trade today. Otherwise, it's the Nifty PSU Bank, which is the top sectoral gainer, along with the Nifty Realty Index. Even though the Nifty Bank has underperformed today, the advanced decline, if we can look at the intraday graph, has been very, very solid at the breadth in favor of the advances. A bit of a comeback that we are seeing, and therefore the broader markets have outperformed. 2% plus on both the Nifty mid cap as well as small cap indices. That's how we've closed in at just off the day's highs on both of them. So 2% plus, that's how we've done fairly well. Last off, the BSE 500 top gainers, top losers. Those are some names. Well, Z doing the best. In fact, the top gainer on the BSE 500, those those last hour spikes on Z aiding the stock higher. But a Chola holding was the other one, and you'll see NBFC stocks take focus. Chola Finance as well, up 6% in trade. Delivery was down nearly 8%, but outside of that, a few stocks which also saw a bit of a cool off on a day like this, but favorable breadth overall. Let's look at top factors that have played out in markets today. Nifty Bank have closed over 0.5% from the day's highs. The Nifty PSU Bank is the top sectoral gainer for the day. Broader markets have closed over 2% higher, so positive even on the breadth. All sectors closed in the green, breadth was positive. And last off, there's a sharp cool off on the India VIX. All positive, at least at this point. Now, quickly on to what we'll be looking out for. There's a crude stock change within the US which we'll look out for. Far and few in terms of details. Standard glass lining technology, 2% shares to exit lock-in. So not too many cues for tomorrow, but the one big one is the RBI MPC, which we'll have to wait and watch out for, and likely impact will last pretty much through the week. But with that, from Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, एक simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. Viewers, stellar rebound in Indian indices as value buying resumes in the market. Benchmarks rise over 350 points to end above 22,500 levels. The Sensex surges over 1,000 points to end above 74,200 levels. Broader markets outperform benchmarks. All sectoral indices rally to end higher. Nifty companies at 3.8 lakh crore media index jumps the most, followed by strong surge in FMCG, financials, PSU, banks, realty, pharma and auto. Tariff tensions hit India's rupee. The currency weakens to past 86 level against the dollar. The rise in the level of rupee versus dollar comes amid the ongoing global trade tensions and volatile market sentiment. The government announces a hike in excise duty of 2 rupees per litre. The oil marketing companies will be bearing the brunt of hike in excise duty. As a result, the gross marketing margins to take a hit of 2 rupees per litre. As crude oil prices fall, Government of India takes compensatory actions like increasing excise duty on oil imports to protect oil marketing companies. While this measure aims to offset losses, Citi Research still awaits clarity on the extent to which companies will be able to account for this redressal. The brokerage estimates that risk to FY26 earnings would increase if crude price goes back to $75 per barrel. Motilal Oswal reckons things are uncertain for India with many possibilities lying ahead. It also accounts India to be relatively less affected than its peers. While Q4 earnings stayed the same, India's policymakers are taking active measures to boost the economy. Morgan Stanley advises to remain calm amid the mayhem in the market to ride volatility. Rhythm Desai expects Indian equities to be closer to bear case in 2025 as domestic growth could be on the mend. Adds that India's trade deal with US is in a more likely than not scenario, but may take time and expect a favorable policy on April 9. Titan Stocks shines on a stellar Q4 business update. The company reports a strong growth in gold jewelry, but the studded mix slightly declines. The jewelry business mainly jumps on sharp rise in gold prices. Watches segment clocks in 20% growth with addition of 41 stores in the quarter. PNG Jewellers jumps on strong FY26 outlook. The jewelry company adds 5 new stores in Q4. Expects strong FY26 fueled by robust demand. Even aims to launch 20 to 25 new stores. CLSA maintains outperform on Bajaj Finance with a target of 11,000 rupees. Says the tough phase of earnings growth is over for the company. Says that bad form may be a temporary phase, but the class is permanent. The company has a pristine asset quality and deliver 20% plus returns in 10 years. Goldman Sachs upgrades Axis Banks to buy and hikes target to 1,288. Now says that mean reversion story begins as profitability and growth start to improve. Hails the valuations that have widened to 35% versus historical levels of 23%. Goldman hikes the target on PNB Housing to 1,184 rupees on back of confidence in earnings outlook. PNB Housing's profitability will remain resilient, whereas the lending spreads may expand. Additionally, there is improved visibility in growth profile driven by new segments and asset quality trends are better than peers. Sobha's FY25 pre-sales decline over 5% on launch delays. The company misses revised guidance of 6,644 crore rupees in FY25. Godrej Properties report a strong Q4 business update, beat FY25 pre-sales guidance of 27,000 crore rupees. The company achieves 109% of its pre-sales guidance and the business development stood at 26,450 crore rupees. Now, Axis Capital maintains buy with a target of 3,700 and says that the company is on track to deliver the best ever annual operating cash flow. Goldman Sachs is bullish on Suven Pharma, initiates buy on the stock with a target of 1,350. Goldman expects strong rebound and structural growth from FY26, expects potential approval of new drugs or indications. Goldman highlights product concentration and challenges to new management's integration as key risks. Bharat Electronics gets order of 2,210 crore rupees for electronic warfares from Indian Air Force. Now, this takes the orders to 2,803 crore so far in FY26. Goldman upgrades SBI to neutral and hikes the target to 823 rupees, says the risk-reward looks balanced post underperformance. Goldman believes that the pressure on net interest margins could recede as well. Petronet LNG signs Memorandum of Understanding, that is the MOU, to set up LNG terminal in Odisha. The government will invest about 6,500 crore rupees in Odisha LNG terminal. Shares of LIC-backed NBFC Paisalo Digital today surged after the company announced a fundraising planning. The company's board has given in-principle approval for raising funds by way of issuance of equity shares, foreign currency convertible bonds and/or other eligible securities in one or more tranches to eligible investors through preferential allotment, private placement, or including qualified institutional placements, that is the QIP, or any other permissible mode. Morgan Stanley maintains overweight on HPCL with a target of 506 rupees. Morgan Stanley believes that the share price will rise in absolute terms over the next 15 days. The brokerage is bullish on cooking fuel price hike, potential LPG recoveries. Delhi may soon say goodbye to petrol, diesel and CNG bikes if the draft EV policy 2.0 gets the green light. Now, in a bid to curb pollution, New Delhi's EV policy draft proposes a complete ban on fossil fuel-powered two-wheelers from August 15, 2026. The draft EV policy 2.0 also aims to phase out CNG-driven auto rickshaws and fossil fuel-powered vehicles used by civic bodies for solid waste collection. India is set to be a relative beneficiary of tariffs imposed by US President Donald Trump, according to market veteran and Helios Capital Singapore founder Samir Arora. He reckons that India's trade exposure is relatively less, and in many cases, India adds value to imports from other countries and exports the final goods. Now, this may prompt US officials to consider this factor in reconsidering tariffs. Among the sectors expected to power through the recent tariff-induced uncertainty, pharmaceuticals remain a top pick, says Vikas Khemani. Now, despite scenarios over the current global trade scenario, the founder of Carnelian Asset Management and Advisors believes pharma companies will stay resilient. Maharashtra has a whole new menu for investors, says the state's Chief Minister Devendra Fadnavis while addressing the India Global Forum. He also spoke about building a new port at Vadhavan Port and emphasized on the industrial parks of the state, which are well equipped with good infrastructure. Ashish Kumar Chauhan, the CEO of NSE, while speaking at the same event, highlights that India is slightly in a better position than China to tackle tariffs, believes retail investors will continue to put in more money. He hails India's IPO pipeline. India's gross domestic product may see a net impact of around 25 to 30 basis points due to the reciprocal tariffs announced by the US. Now, says K.K. Mistry, former vice chairman and CEO of erstwhile Housing Development and Finance Corporation. In an interview with NDTV Profit, Mistry said that the tariffs themselves might result in a 40 basis point hit to GDP. Keystone Realtors reports 34% rise in pre-sales to 3,028 crore in FY25. It further added that it has achieved the guidance of pre-sales given for financial year 2025. However, in the fourth quarter, the pre-sales rose 1% to 854 crore rupees in comparison to 843 crore rupees reported in the same period the previous fiscal. Godrej Consumers has now entered its arm in pet care. They will launch a new pet brand, Godrej Ninja, a pet food brand to compete with brands like Pedigree, Drools and more. A total of 500 crore rupees will be invested over a time frame of next 5 years. Currently, the Ninja is only available in Tamil Nadu, starting from price of 20 rupees. Maruti Suzuki has now updated their Grand Vitara, which prices starting from 11.24 lakh rupees. Now the brand enhances the safety features, adds new variant and equipment. Unilever announced setting up of a global capability center for their ice cream. The facility will be based in Pune. The announcement comes at the IGF event today. Arcade Developers has secured the rights for the cluster redevelopment of 4 housing societies in Borivali in the Mumbai metropolitan region, that is the MMR, with an estimated gross development value of 865 crore rupees. The company has registered the development agreement for the project, marking a significant step in cluster redevelopment activity. Natco Pharma clarifies on Risdiplam launch. Now, the company will launch the drug post clarity from the Delhi High Court. The company will price generic drug at 15,900 rupees in India. Bank of Maharashtra reports double-digit growth in loans and deposits in its March 2025 quarter business update. Now, during the March 2025 quarter, Bank of Maharashtra reported a 15.33% year-on-year rise in total business at 5.47 lakh crore rupees. Of this, gross advances were at 2.4 lakh crore rupees, which was up 17.84% year-on-year. Credit card usage has surged in India, driven by the rising popularity of digital payments and increased consumer spending. However, there is another worrying side to this trend, a growth in non-performing assets in the segment. Now, according to the latest data from the Reserve Bank of India, the NPAs in the credit card segment increased by 28.42% during 2024. Now, the total amount defaulted by credit card holders stood at 6,742 crore rupees during the period. The Apex Court of India has said that there will be no CBI inquiry in the Bengal government's creation of post to accommodate 25,000 teachers. Now, Chief Justice Sanjeev Khanna-led bench overruled the Calcutta High Court's, pointing out courts are barred from investigating cabinet decisions. The top court has also criticized the governors sitting on bills for a prolonged inaction as non-bona fide. They have set up a time frame of 3 months in which a governor has to either assent the bill or return the bill to the House or refer it to the President. The judgment was given as Tamil Nadu governor was sitting on 10 bills passed by the state legislature and was pending since then. The Commerce Ministry is setting up high-level team for import surge. Now, the potential import surge expected from China, Vietnam, Thailand between June and July. The group will have members from Commerce Department, Revenue and DPIIT. Consumer goods, electronics may see significant surge due to higher tariffs. Singapore PM Lawrence Wong has said that it does not look like 10% tariff is up for negotiation, as small countries have very limited bargaining power. He also said that Singapore is assessing the impact of the tariffs and will address the issue in WTO framework. Scientists have revived dire wolf, a species that went extinct nearly 12,500 years ago through genetic engineering. The 2 pups that have taken the scientific world by storm are named Romulus and Remus. Now, they're just 6 months old, but they already measure nearly 4 feet and weigh over 36 kg. The company behind their Resurrection, Texas-based Colossal Biosciences said that it created the dire wolf pups by using ancient DNA, cloning and gene editing, as per a report in CNN. The dire wolf was made popular by HBO series Game of Thrones. Leading contenders began to throw their hats in the ring on Tuesday as South Korea officially set June 3 for a snap presidential election triggered by last week's removal from office of impeached leader Yoon Suk-yeol. Yoon was removed on Friday over his short-lived declaration of martial law in December that plunged the key US ally into crisis, triggering a new election that could reshape its foreign and domestic policy. The US Supreme Court allows Donald Trump to pursue deportations of alleged Venezuelan gang members using a 1798 law that historically has been employed only in wartime as part of the Republican president's hardline approach to immigration, but with certain limits. Royal Challengers Bengaluru scripts history as they defeat Mumbai Indians at Wankhede. Batting first, RCB put up a score of 221 to be chased by Mumbai. Captain Rajat Patidar was awarded the man of the match as he scored 64 runs out of 32 balls, helping RCB past 200. Now, RCB bowlers defended the score and helped the team win by 12 runs. Well, with that, viewers, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead for you all.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Real estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Indian equities rebound as selling pressure retreats. The Nifty gains over 300 points to reclaim the 22,500 mark. The Sensex rallies over 1,000 points. Nifty 50 companies gain over 3 lakh crore rupees in market capitalization. Asian markets see a strong rebound with Japan's Nikkei 225 surging 5.5% after suffering a nearly 8% drop the previous day. Meanwhile, China refuses to back down in the face of Trump's additional tariff threat, calling it a mistake on top of a mistake. According to a report by the Washington Post, Doge chief Elon Musk attempts an intervention after Trump threatened to add 50% tariffs on imports from China to go along with the 34% taxes he announced last week. Jaguar Land Rover confirms NDTV Profit's news break that it is assessing strategies to mitigate the impact of tariffs. The company will pause US shipments in April as reciprocal trade measures come into effect. The rupee continues to weaken, crossing the 86.41 mark against the US dollar as tariff tensions and economic uncertainty weigh on investor sentiment. And the Reserve Bank of India's Monetary Policy Committee concludes its two-day meet. The MPC will determine the outcome of key lending rates for the central bank, scheduled to be announced tomorrow. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's take a look at how the Indian markets fared today. Benchmark indices traded with firm gains on track to snap a 3-day losing streak. Now this rebound follows a sharp sell-off on April the 7th that wiped out 16 lakh crore in market capitalization. In today's rebound, Nifty has gained 3.08 lakh crores. All 13 sectoral indices rose around 2%, with Nifty closing higher, up 370 points, whereas the Sensex closed with gains close to 1,100 points. My colleague Harsh now joining with a detailed market roundup of the day. Harsh, over to you.
Well, we saw a bit of a recovery from the lows yesterday, but today we saw much more pronounced bounce back in terms of how Indian markets as well as global markets did. Taking cues from global markets, we saw, at least we're seeing US futures trade in the green now. And what we're also seeing is Indian markets therefore do better, at least today. We saw the Nifty up nearly 2%, of course 0.5% down from the day's high, but up nearly 2%, for the day, and therefore very positive on that count. Broader markets, in fact, did much better, 2% plus higher. In terms of pockets, we did well where IT is concerned, with a few IT names doing very, very well. We had nearly 20 stocks doing 2% plus in trade, and that's the other key positive. A Trent was up on the back of its numbers, BEL on the back of order win, NBFCs in focus on the back of a rate cut later this week. So you're seeing some sectors doing much better on the back of anticipation of all of this. And then, of course, there were some sectors which were okay. The Nifty Bank largely underperformed the Nifty today, but was okay, was 1% plus in trade. So that pocket. The Nifty PSU Bank, though, did very, very well. Was the top sectoral gainer outside of the media index, which was skewed because Z did very, very well in trade today. But the Nifty PSU Bank especially did well, 2.5%+ in trade today. So that was one pocket. The breadth was extremely good. The advanced decline showed that the breadth was healthy, and broader markets also overall did fairly well for themselves. Last off, on to certain top gainers and losers on the BSE 500. You can see that on your screen. But overall, a very, very healthy day of trade. Can this sustain will be the real question. Have markets brushed off tariffs is the other big question. But we had Vikas Khemani, Sameer Arora, as well as KK Mistry, who are bullish with regard to India, specific to India, saying that India is relatively better placed versus peers. Listen into a slice of that.
Happening globally. India is one market. See, our exposure to the US global, so US exports is very, very less. We're less than 1%, so less than 2% of the total GDP. And our tariffs are lowest as compared to, most of our competition, right? Whether it's China, Vietnam, or any other place. So, if US, let's say that part escalates, India tends to benefit net. India does not tend to lose. And it is also impossible that US starts manufacturing everything overnight or even if they start manufacturing, the cost of US labor and cost of Indian labor or anywhere else can't be compared.
So India is a relative beneficiary. For India to be an absolute beneficiary in the sense that the market goes up, that it cannot go up so easily if the rest of the world is going to be down 20% or 25%. If the world is going to be down 10%, then we are okay. But as of now, I think that US will be down more, because you can't really do everything by completely sidelining China and trying to do a deal around them. It's not so straightforward.
I think the market reaction over the last 2 days has been exaggerated significantly. If you look at our economy, you have to look at the economy, not look at market. Markets will go up and down, but you have to look at economy, because markets will ultimately follow what the economy is doing. Okay. And in my opinion, the Indian economy is strong. It's very robust at this point of time. The tariff war is going to hurt us less than it's going to hurt our competitors. We have to look at things not in absolute terms, but in relative terms.
And after a turbulent day for Asian markets yesterday because of the uncertainty around the tariffs, we saw reassuringly today there was some relief as most indices staged a recovery. And to understand how Asian markets performed and where negotiations with the US currently stand, I'm going to turn to my colleague Malika. Malika, before diving into the market movements, we're seeing a strong and a defiant response from Beijing on Trump's latest tariff threats, because China now labeling it a mistake on top of a mistake, signaling its very firm stance. But over to you for the latest updates.
Yes, thank you so much for that, Sanjana. And of course, Asian markets across various regions in this continent have recovered from the kind of pain that we saw yesterday. But before I give you the picture, I'd like to take you through just a comparison of how Hang Seng performed yesterday. It dipped close to 13.22%, which was one of the sharpest falls that the index experienced in a long time, as compared to today, where it did recover. And as you were rightly mentioning, that China has called this move a mistake on a mistake, because China, in fact, has decried Trump's tariffs as a blackmail, and that's a headline. And this is because, mind you, when US imposed 34% tariffs on Chinese Chinese exports, China retaliated back and said, we're going to impose the same amount of tariffs, 34%. And to that, US said that, no, if you do that, we're going to impose further 50% tariffs. And that is what China felt is a blackmail. In fact, US has given China 24 hours to take back its retaliatory measures. In fact, the statement by the Chinese Commerce Ministry exactly says that the US threat to escalate tariffs against China is a mistake on top of a mistake, which once again exposes the US's blackmailing nature. Now let's shift focus to how Japan performed. Yesterday also, Japan, as you may see on the next screen, Japan sank close to 7.83%, but now today it recovered. So almost you can see the recovery, and it has recovered early morning in trade and has been maintaining that kind of recuperation that we saw in the index, Nikkei 225. And in fact, last night we also broke the story where Japan and US had a phone call to negotiate these tariffs, and this comes after Japan voiced serious concerns on the impact of tariffs on Japan's business, especially auto, because Japan now stands at 25%. Japan now currently faces 25% tariffs on auto imports, on top of the 24% reciprocal tariffs that were imposed by Donald Trump's administration on the country. Speaking of how India performed today, the Nifty and the Sensex also rose in trade. As you see, as compared to its global peers already, we did see a comparatively lesser pressure. We sank close to 3.9% yesterday, but today we have recovered. It's not been a bad day as compared to how yesterday fared. Sensex also recovered, the 30-pack Sensex and the Nifty did well as well. And plus, India has been keeping its cool because we're hell-bent on finalizing our bilateral trade agreement very, very soon. In fact, we're expecting the first leg of talks to conclude by November. And India's move will be more balanced in long term, and it is not going to join any other country like how we're seeing China retaliate. Canada is also sort of against this. India does not want to retaliate. It is hell-bent on negotiating. And quickly, as you may have heard experts just before this talk about how India could be a beneficiary from this situation, there are 3 pointers that I feel are conclusive to why India is in a better position. Firstly, less trade exposure to the US as compared to our peers. Like China has larger exposure to the US, our trade exposure to the US is relatively less. We have a strong economy, and also it does not want to retaliate. So these are the reasons why India is in a better position as compared to its peers.
Thanks, Malika, for that. But we're also seeing the Indian rupee weakening slightly against the US dollar, because the currency weakened 41 paise to close at 86.25 against the US dollar. It opened at 85.88 per dollar, down 4 paise from yesterday's close, but has now declined, clearly reflecting the pressure from Asian equity markets and broader currency fluctuations. Global trade tensions and volatile sentiment also continuing to weigh on investor confidence. But for more insights on this, Pallavi now joining us with the latest updates. Pallavi, the rupee has opened weaker today after a sharp decline in the previous session. Give us a sense of what's driving this pressure. How are traders reacting?
Right, in fact, not just a slight weakness. The rupee has weakened sharply against the US dollar. In today's day of trade, like you said, it's weakened 41 paise. It closed at 86.25 against the dollar, which means it had opened at 85.89 against the dollar earlier today morning. And this was also against a close of 84.84. The US dollar index, meanwhile, is at about 103. That's a amid the trade uncertainties, inflation concerns, the backdrop, of course, being Trump denying halting tariff measures, but at the same time showing openness to negotiations. Treasury Secretary Bessent has also said that multiple countries have sought tariff talks. Beyond that, in terms of developments, we've also seen Trump threaten a 50% tariff on China, prompting some strong backlash from Beijing. The EU, meanwhile, also has proposed counter tariffs to the extent of about 25%. Now, coming back to the rupee in all of this, Sanjana, you know, from last year, we've seen the rupee move from about 83.81 against the dollar, that's sometime at the start of October, to 87.4 around February end this year. Before the current levels, it's reached of 86.25. And let's remember that this volatility is against the backdrop of about 1 to 2% of depreciation that we are accustomed to seeing in terms of the rupee in the preceding 2 years at least. Going forward, most economists and traders do expect the rupee to continue to show a slight weakening sort of trend. But this, of course, depends on how the global situation evolves henceforth.
Thanks, Pallavi. And talking about the global situation, let's look at what's happening within the US system as well, because it appears that Donald Trump and his billionaire advisor Elon Musk don't seem to be on the same page about America's aggressive tariffs, because Musk reportedly made a personal appeal to the president to reverse the new levies that he announced on Chinese imports, but to no avail. Let me quickly go over to my colleague Malika once again. Malika, take us through what exactly this Washington Post report said, and understandably, this isn't the first time that we've seen trouble in paradise. Is that correct?
Yes, that's absolutely correct, Sanjana. In fact, we have collated some key points from that report to highlight what exactly does the report say. Now, the first point on your screen is the fact that DOE chief, that's Elon Musk, has attempted intervention after Trump threatened to add 50% tariffs on imports from China. Now, remember, this is where tensions between China and the US intensified. And the report, in fact, reveals that Musk went ahead and attempted an intervention with Trump. In fact, it also disclosed the fact that they had a private talk about, hoping to convince Trump to scale back these extensive measures. Plus, the talks have not brought success so far, because as we clearly see that the US has given China, time of 24 hours for it to respond back and take back its 34% retaliatory measures that it's currently imposing on US tariffs. Second, as you mentioned, that this is not the first time that Musk has indirectly or directly, expressed his disagreement to how Trump is reacting and Trump administration's policy. In fact, during Trump's first term, Musk had filed a lawsuit to overturn tax on Tesla's imports from China to the US. Remember, because Elon Musk is a businessman, and definitely when these import duties are levied, it hurts businesses across the world, and therefore maybe that's where he comes from. Second, DOE chief also lashed out Peter Navarro. He is basically the key advisor to Trump from the White House, who's responsible for Trump's aggressive tariff plan. And earlier, a spark of this could also be seen when he opposed other members of Trump's coalition on H-1B visas for skilled immigration and governing spending. Now remember, Musk's break with Trump over a key administration priority marks the highest profile disagreement between the president and one of his key advisors, and that's why it becomes really important.
Malika, thanks so much for that perspective. Clearly, trouble in paradise between Donald Trump and Elon Musk. Remains to be seen how this actually plays out for China. Let's take you through what's happening back home in India now, with the government establishing an import monitoring group to track potential trade diversion from countries facing higher US reciprocal tariffs such as China and Vietnam. Now, this group, or a panel if you may, will focus on consumer goods in key sectors, ensuring that imports do not surge unfairly because of all of these shifting global trade dynamics. So officials from multiple ministries will collaborate to assess trends and take necessary action. For more details, I have Rishabh joining with the latest updates. Rishabh, with India setting up an import monitoring group, what specific sectors or goods are likely to be closely tracked under this initiative?
What we're hearing from sources in the Commerce Ministry is that a high-level panel is in the works to prep for any potential surge in imports that might be coming in from countries like China, who are competitive manufacturing nations to India as a result of the sweeping tariffs that have been imposed by the US. What we're seeing is that there is a potential import surge that is expected from countries like China, Vietnam, Thailand, Indonesia, and the key product groups that will be kept under watch are consumer goods, electronics, chemicals, as well as steel and associated products. So these four will be keenly looked at, given the fact that these countries also have a higher tariff that has been slapped on them vis-a-vis India. So this might lead to some sort of dumping of these products towards India. What we're also seeing is that this is being looked at, the time period that is being looked at for review is June or July, which is when the full impact and the full operationalization of these tariffs is expected by. And what we're also seeing is that because of these tariffs, there was certain stock that was already rushed to the US from various countries. But now, given that the tariff has been imposed, stock surpluses may go out to the US only after May. So only after May is when some sort of a dumping fear is expected. Apart from that, the Commerce Ministry is already in touch with export promotion councils to understand what sort of needs they have, what sort of boost they require in times like these. We'll continue to track this story very, very closely.
Thanks, Rishabh, for that. Meanwhile, let's take a look at the sectoral impact, because now we're seeing Jaguar Land Rover announcing a temporary pause in shipments to the US in April as it assesses the impact of new auto tariffs imposed by the US government. Now, if you remember, this move follows an NDTV Profit news break. You heard it here first on April the 5th, where we clearly highlighted the challenges automakers face due to higher import duties. Now, today in a statement, a JLR spokesperson has confirmed that the company is working to develop new trading terms with the US partners. My colleague Tushar, who's been tracking the story very closely with Jaguar Land Rover, pausing US shipments in response to tariffs. Tushar, what are the key challenges that the company now faces in renegotiating trade terms with its US partners?
Good evening, Sanjana. The first port of call that JLR has to take is that how the tariff movement from UK to the US will happen. Remember, UK has already said or had that it is working towards easing the pain for its manufacturers. Remember, Jaguar Land Rover makes cars in the UK as well as in the Scandinavian, in Slovakia actually. They make their cars there. So where can some relief come from from those geographies towards the US? That is one thing to watch out for. Secondly, remember that JLR already has 1 to 2 months of inventory in the US at this point of time, and a shipment, if any, which has to go takes about fortnight. So they're cushioned in in some ways as far as sales in the US is concerned. Remember, JLR is also coming off big numbers, actually sales numbers. The first quarter of 2025, the numbers are the highest in about in the last 1 year, and has beat all automakers in comparable automakers in the US. So yes, the hit may be impactful in the month of April, but there is some cushion as far as inventory is concerned, and some breaks from Europe may be concerned.
Tushar, thank you so much for those updates. We'll continue tracking the story with the latest developments. Let's take you through what's happening with the RBI now. The RBI is beginning its bi-monthly policy meeting and has already begun it to review and decide on the country's benchmark interest rates, commonly referred to as repo rates. Now, this will be the first monetary policy review for the financial year 25-26, with the outcomes specifically regarding lending rates. According to Bloomberg, a poll of economists forecasts a 25 basis point cut rates at the meeting. My colleague Pallavi now joining us with more details on this. Pallavi, over to you.
Right. The RBI's MPC is expected to continue to cut the benchmark lending rate. It currently stands at 6.25%. And the consensus, like you mentioned, according to Bloomberg Economist's poll, is that we are likely to see another 25 basis points cut, bringing the benchmark lending rate to 6%. However, while that's the consensus, given the inflation growth trade-off and the global sort of economic background, economists are not ruling out a deeper rate cut, possibly of 35 basis points or even more than that. But let's remember that the consensus again remains that of a 25 basis points rate cut. Now, like you said, this is the first policy in the current financial year, and of course, more importantly, it is also the first policy meet post the announcement of retaliatory tariffs by US President Donald Trump at 27%. What else has changed from the last policy to this one? Let's take a very quick look. Domestically, CPI inflation has moderated to 3.61% in February. That's from about 4.3% we had seen in the month before that. And more importantly, even for the month of March, inflation is estimated to come below the 4% MPC target. GDP growth, meanwhile, did see some uptick in Q3, improving to 6.2%. But high-frequency indicators have shown sort of a mixed performance for Q4 as well. More importantly, post that, we have seen numerous developments on the tariff fronts, which means that downside risks to GDP growth persist domestically, but also in terms of indirect impact, which we can see if global growth slows and if the US is to go into recession. Meanwhile, bond yields have eased in anticipation again of the rate cut. What we're going to be watching out for predominantly from the policy meet is whether the RBI chooses to change its stance from neutral to accommodative. We've already seen the RBI inject liquidity on multiple occasions prior to this policy meet. We're also going to be watching out for any changes in terms of the growth or inflation forecasts.
Right, Pallavi, thank you so much for that. All eyes on what actually takes place tomorrow. Meanwhile, we also spoke with former RBI Governor D. Subba Rao, who said that the RBI is faced with a three-pronged challenge even as the Monetary Policy Committee meets. He told NDTV Profit that growth, financial stability and inflation are the three uncertainties that the RBI would have to balance and account for. For the full conversation, tune into The Big Question at 6 p.m. this evening, where he breaks down how the RBI may act amid Trump's tariff pressures. You don't want to miss that. Meanwhile, let's listen into this snippet.
Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that, because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do.
Now let's come to what's happening in the national capital, where Delhi is set for a major green transition with the draft Electric Vehicle Policy 2.0 aimed for a phased exit of CNG and fossil fuel vehicles. If approved, the policy takes effect from August the 15th, starting with a ban on new CNG auto rickshaw registrations and mandatory retrofits for older autos. Next, we're hopefully going to see fossil fuel two-wheelers be phased out by 2026, while three-wheeler goods carriers face a registration ban from this year itself. Even public buses and waste collection vehicles must go fully electric by 2027, with private car owners possibly restricted to EVs if they own two vehicles. However, still in draft form, the policy could see revisions before the cabinet approval. And now let's take a look at some of our other stories that are making headlines around India. Godrej Consumers has now entered its arm in pet care. They will launch a new pet brand, Godrej Ninja, a pet food brand to compete with brands like Pedigree, Drools and more. A total of 500 crore will be invested over a time frame of the next 5 years. Unilever announced setting up of a global capability center for their ice cream. The facility will be based in Pune, and the announcement came when multinational firms assembled at the Indian Global Forum event today. Rising mercury levels across North India have led to the rise in heat wave across the region. The IMD has issued a yellow alert with warnings of extreme temperatures across several northern states. From April to June, more heat wave days are expected across several states including Rajasthan, Gujarat and Maharashtra and West Bengal and parts of Karnataka and Tamil Nadu. The Supreme Court has said that there will be no CBI inquiry in the Bengal government's creation of posts to accommodate 25,000 teachers. A bench led by Chief Justice Sanjeev Khanna overruled the Calcutta High Court order saying courts are barred from investigating cabinet decisions. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also
Hello and welcome to Know Your Company. It's a show, of course, which gives investors hopefully powerful and actionable insights into the fundamentals of a single listed company daily. Today we're going to track HPCL, and with me is Mihika Barve. And of course, she tracks oil and gas quite closely, and therefore will help me break this one down. In terms of what the company does, you've seen petrol pumps of HPCL across the country. And we have those dotted even in the remotest of areas like Spiti, etc. as well. We find HPCL pumps, and therefore it's the third largest Indian refining company in total sales, but also one of the largest distributors of oil. In terms of refining though, it owns 2 refineries in Mumbai as well as in Vizag, and it has around a 22,000 plus strong nationwide retail outlet network. It distributes its oil across this retail network and thereafter retails it to the end customer. You'll find these dotted across the country, of course, from Leh all the way to Kanyakumari. You'll see that across the board. So HPCL very, very clear on what it does. It does oil and gas distribution. Now, in terms of what it is, let's dive deeper. It's an integrated company involved in the entire value chain. So it acquires oil, refines it, thereafter distributes it. So the acquisition of oil, if oil prices were to go up, therefore the profitability starts to get impacted. Currently, oil prices have sunk and therefore positive, and that's why the company is in focus, and hence we're doing a KYC on it. Now, in terms of markets and sells diverse range of petroleum products, not just your petrol and diesel. It also has a growing presence in oil and gas exploration as well as in the renewable space. It's ancillary to what it does, and therefore oil and gas distribution will oil and gas exploration will likely allow it some more leeway with regard to profitability, some more certainty with regard to profitability, because currently its profits depend on crude oil prices and refining margins, which Mihika will explain in better detail. So, Mihika.
You always have GRMs, the term GRMs thrown at you via the companies. It's in their financial results as well as analysts. This stands for gross refining margins. Now, refining margins is basically the value that a certain petroleum product has which is produced from 1 barrel of crude minus the actual crude oil cost. So this is when you have lower crude prices, it actually benefits the refining margins, and then this has a follow through effect to the marketing margins. Now these are not revealed by the company, but you do have analysts who closely track the company naming them. The revenue from selling your products, which is mainly your petrol and diesel, which is widely tracked, minus the refining production costs. And now, like we all know, you have petrol and diesel prices that are currently fixed right now. So lower the prices of crude, it kind of follows through. Now, in terms of the kind of risk that the company may be facing right now is, like I said, petrol and diesel prices are currently fixed at the pump. So the volatility in crude prices is what has an impact on their refining margins and thereby their marketing margins. And this could be hurt if crude prices rise. And it's also key to note that the government just yesterday has hiked the excise duty, which is a duty that the central government charges on a company like HPCL, and this excise duty is actually calculated and included in your petrol pump price. However,
this is for refiners.
Yeah, this is for refiners.
Just trying
to clarify that. It's a marketing company as well, right? So
Correct.
this actually has an impact on your petrol price.
Correct.
It has an impact on your marketing margins, but we as consumers will not have a price increase. It will actually be undertaken by HPCL. The second thing that's very key to understand is LPG losses. Now currently HPCL and the other OMCs have to sell their LPG cylinders at a subsidized rate, which is lower than the cost of making these LPG cylinders and what's inside them. And till now, in 9 months FY25, HPCL specifically has seen losses of 7,600 crores. However, yesterday the oil minister said that the same excise duty I currently talked about will be used for the compensation of such losses, and it's not new. OMCs have gotten compensation for their LPG losses back in FY23 as well, but it did not come through in FY25. It was expected in the budget, but the company does need this in order to insulate itself from the heavy LPG losses that it's currently facing and could face going in the future. But Harsh, it's time for the KYC ratings. Why don't you give the viewers of what we're going to analyze?
Absolutely. Let's do that. Let's quickly look at what we'll analyze on this one. We'll have the income statement, the balance sheet, the cash flow, return ratios as well that we'll analyze. We'll also look at shareholding, street cred and street coverage. But outside of that, we'll also have a look at the valuation picture. So we'll look at all of these when we're analyzing this one, HPCL, Mika, start off with the income
Let's start off with the income statement. It's a little trickier because it has seen volatility. Now, I want to go with just the revenue, EBITDA, and net profit numbers. EBITDA margins, while it's something you usually look at for a company, for something like an HPCL, that's not what you look at. So, revenue, in terms of the 9 months FY25, you've seen a growth 2.3% uptick. This is higher volumes and even a certain hike in petrol and diesel prices like you've seen during the financial year. However, EBITDA is what's taken the hit. You've seen volatility in the gross refining margins as well as marketing margins because your oil prices have been volatile this year. That's why on a 9-month FY25 basis, EBITDA is down 46% and even their net profit is down 66%.
How much of this is impacted by LPG as well? Because you suggested around 7,600 crores of losses.
Is losses. So it's kind of offset whatever profit it would have actually met. This is kept in a separate buffer.
But this would have been much better off.
Much better off if LPG compensation had come.
So likely if that LPG compensation were to come, Mika, this number will change.
Yeah, and it's widely expected to come because it's gotten that in the past. But from a 3-year basis, and it's key to know that FY23 was one of the years that all the OMCs faced heavy losses. Despite that kind of, a downtick in revenues then, you've seen over FY21 to 24, revenues growing at a 36% CAGR, EBITDA at 24% and net profit at 17%, and that's why we've given a neutral rating on this one, but it's key to know their integrated margins. Now, integrated margins are your refining as well as your marketing margins blended. Now, in Q3 FY24, 7.4 rupees per litre, Q4 you've seen 8.8, and you've always seen a kind of a volatility. Q3 FY25, it stood at 12.5, which is in the super normal range. Q4, you saw some correction. Prices have always been volatile for oil, 10.1, but it's actually Q1 of FY26 that the companies are again witnessing supernormal margins. So in terms of, while they do stand very high and, higher than what we've seen even a year ago, because of the volatility of, earnings throughout any quarter, we've given Hindustan Petroleum's income statement a neutral rating. But Harsh, what does the balance sheet?
Q1 FY26, you were suggesting that it will get better.
Yeah.
But also want to point out this excise hit that they will take. Will that knock off the possibly better margin they would have made in Q1?
It does have some impact that because they're going to absorb that ₹2 cost, so that increases.
Correct.
And furthermore, it all depends if prices sustain. Because if prices continue to trend lower, then you have inventory losses. Because in Q3, Q4, you've seen them buying oil at a much higher price because at that point that was a cheaper rate. But now we are hitting 4-year lows left and right.
So what I'm trying to say therefore is, should you keep higher hopes from Q1 FY26?
For now, the ₹2 excise duty does have an impact, but they're still so maybe a 13 rupee margin, they're going to an 11 margin, which is still an uptick sequential.
Sure. Point taken. Okay, let's go across to the balance sheet. Let's quickly look at how the balance sheet is stacking up. When you're looking at equity, largely flat. When you're looking at it from a 3-year perspective, that increase just seems to be an increase from a perspective of bonus shares, stock split, etc. So therefore, no real change per se from an equity standpoint. Let's look at reserves and surplus as well, and there you go, fairly steady in that sense, even where reserves is concerned. When you're looking at debt though, and this is where it starts to really become important. The debt picture, the borrowing number has increased by 1.5x. And is this the correct way or the best way to look at it? I'm not so sure. So the way we'd rather look at this number is EBITDA to borrowing. Whether my EBITDA growth is matching the borrowing growth. And we've seen a 50% roughly EBITDA growth from FY22 to FY24. The borrowing number also has gone up in the same kind of clip, and therefore we've given this a neutral. This is the real key number to look at, Mihika.
And it's key to know that why borrowings have gone up, because they had a capex. They're building a Barmer refinery, which has over around 53,000 crores of capex spending that has been put in. So that's something you need to realize. But that's why you've seen that borrowing number seen an uptick. But you need to see how EBITDA and borrowing have grown, like you said.
And borrowing is also because of subsidies, right, Mihika, to a certain extent. When you have those large subsidies which are pending, you'll park some of that within the short-term borrowings on the liabilities side. Those assets will get parked, and that's the other piece. But let's look at cash flows, and cash flows, we'll just look at the 3-year CAGR, and the most important metric here is the cash from operations which are coming through. Everything else will likely not be the most important, and therefore when you're looking at cash flow from operations, and we'll focus in on only this one number, it's around a 11% CAGR growth that we've seen from March of 2021 to March of 2024. So that number looking okay-ish on a 3-year CAGR basis, not bad. Of course, there's been some capex, some fundraising due to various activities, and therefore your net cash flow is negative currently. But this is the key number that we'll want to focus in on, the cash flow from operations, which has grown fairly okay for a PSU in a price-regulated environment where your prices are fixed. And therefore profits are largely going to be capped.
And we've not seen,
not a bad
since
number.
2022, we've not seen prices change every day. And
Correct.
even your operating cash flows, net on net, they stand higher than what they're investing as well.
Correct, absolutely. Let's therefore look at return ratios.
Yeah, let's look at your return ratios. Now there is volatility even there, and that we've seemed to establish that. FY22, let's see, your return on common equity stood at 18%. It took a dip in FY23. Like I said, there were losses experienced by the entire space, but we did see supernormal growth in FY24 because there was a high recovery in terms of your losses at 41%. Return on assets, they stood at 5% in FY22, dipped to -4% in FY23, 9% in FY24. And then return on capital employed, you had 13% in FY22, FY23 does not come into consideration in this space because of the losses, FY24 28%. So there's been a lot of volatility, and it's also key to, you also have to take into consideration what the picture will look at as the FY25 numbers come in place. So you've given a neutral rating in terms of return ratios, while they are healthy return ratio metrics when they are positive, but because of the volatility over the years, it's a neutral rating on this one.
And will this always be volatile, Mika? That's really the key question.
Yeah, but that depends on if they are in a capex cycle, how are crude prices playing. There's so many moving factors, as well as demand when you have renewable energy coming in, but demand doesn't seem to be as huge. They're seeing volume uptake. But I think we should go to the shareholding. Well,
one piece here, Mika. So on return ratios, why are we ignoring the FY23 number? And I'm covering this only because we've not flashed it anywhere as part of our graphics, but the FY23 number has a loss. So there's a 9,000 crore loss on a standalone basis which SPCL has made in FY23, which is why you will have a negative return ratio, or therefore return ratio ROC not applicable. But otherwise you'll see these fluctuating return ratios because there'll be bouts of profitability followed by losses. So this is par for course for a company like this. If you're looking to invest in a company like this is something you should expect and anticipate in any case.
That's right.
But yes. Mika, quick check with regard to shareholding. 55% government ownership, that remains quite solid. The DII is held around 15%, now hold 22% nearly. FI holding has gone down, as is always the case when DIIs increase their holding. And the retail participation has gone down slightly. So largely, this is why we are giving this a thumbs up, because there's fairly steady government holding. No divestment expected either. And therefore, you're going to see a steady state on the shareholding front, and hence a thumbs up. Let's look at how the stock has moved actually. And in terms of the way it's moved, we've had a very muted sort of performance on the counter. 1 month, of course, we've had very good move given the way in which crude has moved. And a lot of the movement in the stock price will depend on crude. Mika, please correct me if I'm wrong. But 11% in the last month. The year-to-date number, though, is more muted, a negative 12% number. The 1-year returns are 17% and the 5-year returns are around 162%. So it's been a 2.5 bagger in that sense in the last 5 years. Now, in that sense, it's a neutral, because when you're looking at the way in which the stock price moves, it largely moves in line with crude, and it's been a fairly flattish kind of move, at least on the year-to-date period, rather negative 12% year-to-date and just about 17% on the last 12 months. So given the volatility, we'll give this a neutral on that count. Mika, street coverage.
Very widely tracked. You have over 30 analysts tracking the stock. You have 64% of the analysts that actually track the counter have a buy call. So 22 analysts recommend a buy, 5 recommend a hold, and only 7 recommend a sell rating on this counter. In terms of the return potential, you do have a 14% return potential for HPCL. So it's a thumbs up on this one. It's widely tracked. You do have the street more bullish on the counter. And lastly, Harsh, I'll give it to you for valuations.
Okay, let's have a look at those. Let's quickly pull those up if we can. When you're looking at the price to earnings ratio, the current price to earnings is around 8 times. We won't look at this 1 year forward because it's more difficult to gauge, and therefore let's look at it on the current price to earnings basis, around 7.5 odd times. Its peers, BPCL, IOCL, slightly more expensive, nothing material per se, but maybe 10 to 20% more expensive. But when you're looking at 5-year averages, the 5-year average valuation is at least 20% lower for an HPCL to what it is currently, and it has always traded at a discount to a BPCL and IOCL. And therefore, we're going to give this a neutral because you're largely in line in that sense with both 5-year averages as well as with history.
And Harsh, I want to point out that we've seen, OMCs have always known for single-digit valuations. We've seen periods in FY 23-24 that the stocks were trading at 3 to 4 times. And a reason why HPCL has always gotten, discount in terms of valuations is because it is the biggest beneficiary when oil prices go lower because it markets more products than it refines. So that's one of the key aspects I want to highlight. But a neutral picture.
We're arriving at around 5.5 on 8 on our KYC ratings on this one. But, we spoke with Yogesh Patil, who's the Director Research and tracks oil and gas at Daulat Capital, with regard to HPCL, his views and how he views this from an investment perspective. Listen in to that conversation.
First of all, the crude prices are near to $63-64 per barrel. And the HPCL would be the biggest beneficiary out of that, mainly because of, firstly, the gross marketing margins of HPCL, looking into the petrol and diesel side, is in the range of rupees 17 per litre. Okay. But yesterday, there was one development that the oil minister has announced that rupees 2 per litre increase in the excise duty of petrol and diesel. And that will be collected to fund the subsidies which the HPCL or the OMCs have incurred in the FY25. That same collection would be utilized to repay the under recoveries incurred by the OMCs or HPCL in FY25. And that amount was 41,000 crore, closer to that. However, the timing of that reimbursement to OMCs is unknown or HPCL is unknown. And the OMCs, as per our understanding, they are still waiting for the official notification from the oil ministry. The only point that they will start accounting once they will receive the official notification. Secondly, there is one more development yesterday. Domestic LPG cylinder prices increased by 50 rupees per litre. And that is a positive for the HPCL. Under recoveries will decline rupees 3.5 per kg or closer to 10,000 crore less under recoveries for FY26 period for the OMCs, and HPCL will be the beneficiary out of that. So they have also mentioned that the MOPNG will revise the LPG prices every fortnight or month based upon the international LPG prices. So all in all, these are the two positive developments for the HPCL. Looking into the falling crude oil prices, HPCL will be the beneficiary, biggest beneficiary among the OMCs because the HPCL is having a higher marketing to refining ratio. What I mean to say, the marketing volumes of the oil products are much, much higher compared to the refining throughput of the HPCL.
Yogesh, but the latest excise duty hike, it's not going to be passed on to the consumers. So it's going to be absorbed by the OMC. So does this kind of offset any benefit it would get from the lower crude prices?
Yeah. So in the last 3 to 4 trading sessions, what we have seen the crude decline from $75 to $64 per barrel. That indirectly implies that the gross marketing margins or the integrated margins of the OMCs or HPCL has improved by 5 rupees per litre. In general, what we calculate $1 per barrel decline in oil prices implies a 50 to 60 paisa per liter improvement into the integrated margins of the HPCL or OMCs. That's one benefit. Secondly, as you mentioned rightly, that whenever there is an excise duty increase, and as of now, that has been absorbed by the OMCs. But sitting today, considering the today's crude prices, the HPCL and the OMCs are earning a super normal gross marketing margins on the sale of petrol and diesel. So still there is enough cushion for the HPCL for the better earnings prospectus of the company.
Got it. And now we know that, this excise duty revenue accretion for the government will be going for LPG, compensation. So what's the kind of compensation that HPCL needs for FY25? And could this be the same cycle that we see, for years coming by? They see losses for the first 9 months, it's reported, and then they just keep on getting compensation.
So good question. So your question was quite straightforward. The 2 rupees per liter kind of excise duty increase will collect approximately 35,000 crore in FY26. Now coming back to the HPCL portion or the share, in FY25, as per our calculations, the HPCL has incurred the closer to 11,000 crore kind of under recoveries on the sale of domestic LPG. What we believe out of this 35,000 collection in FY26, the HPCL will receive closer to 9,500 crore. And that would be a net cash inflow to the HPCL. Net cash inflow will lead to the increase in equity value of HPCL. And what we expect, that would be in the range of 30 rupees per share for the HPCL.
Got it. So amid all of this, how do you expect HPCL to perform in Q4 and FY26? What kind of integrated margins are you building in?
FY24, FY25 or quarter 4, FY25 is already over. We have released our preview report also. In that we have mentioned the OMCs and the HPCL will post the weaker set of number, mainly because of 3 reasons. First of all, during the Q4 FY25, Singapore benchmark GRM was a weaker $3 per barrel compared to the long-term average of $6 per barrel. That's one reason. Secondly, gross marketing margins were lower compared to the quarter 3rd FY25, which were lower around 3.5 rupees per liter. And thirdly, looking into the inventory losses, there will be a slight inventory losses on the crude and the product side, which will again hurt or impact at the EBITDA level. Lastly, touching to the subsidy, exactly looking into the last year FY24 compared to the Q4 FY25, in FY24, we haven't seen any kind of LPG under recoveries. So that will also impact in a Q4 FY25, considering HPCL will have a closer to 3,000 crore kind of LPG under recoveries during the quarter 4 FY25. So the numbers for the Q4 FY25, HPCL would be a weaker on Q1Q and YOY side. But what we expect in Q1 FY26 and Q2 FY26, sitting today, gross marketing margins are super normal level, even despite an increase in excise duty 2 rupees per liter, that are in the range of 15 rupees per liter. That will definitely boost up the Q1 FY25 earnings. Secondly, GRM is on a recovery mode. Yesterday's closing Singapore benchmark GRM was a $4 per barrel. And yeah, there would be some gains because this excise duty has increased. That will also lead some gains on the oil products. Definitely, it would be a positive result as compared to the Q4 FY25.
Got it.
With that, completely out of time on this edition of KYC. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, a lot of you will move to the new tax regime, and that will change the way that your first investment, in all probability, is going to be treated. Now, a lot of you, as salaried employees, the first investment that you ever made was probably the Employee Provident Fund, and that amount that went from your first salary was matched by your employer, and through the years, this is something that builds and builds and builds. Still, at some point over the course of the last few years, when you were still using the old tax regime, possibly it accounted for a very large portion of the ATC, which is 1.5 lakhs of deductions that were allowed for the old tax regime. Now that is going out of the window. Should you change the way that you approach this investment? You can actually limit your contribution to the Provident Fund, but should you do that? And should you take advantage of the deduction that is available under the new tax regime for National Pension Scheme? I'm going to talk to Nitesh Buddhadev, who is the founder of Nimit consultancy about that and some more aspects with regard to your taxes. Nitesh, thanks so much for taking the time.
Thanks for having me, Matthew.
So let's talk about this, right? First of all, what is the option that exists to limit your contribution to the EPF?
So, Alex, whenever we contribute to EPF, we have a two choice. We can make 12% of basic.
Yeah.
So whatever my basic salary, I can contribute 12% of that, and my employer will match the same.
Yes.
The other option that, like you are saying, we can limit that to 1,800 per month, which is roughly 21,600 my contribution, and same my employer will contribute. That doesn't mean that I'll not get the extra money. That money would be maybe received in hand. So my in hand salary would increase because of that. So that's the two choice I have. Either take a 12% of basic or 1,800 per month, which is the minimum possible.
Why is it 1,800?
So the choice is that 15,000 would be considered as your basic.
Right.
That's the other rule. When I'm going for EPF, either I opt for 12% of my basic, or the minimum I consider as 15,000 and 12% of that. That comes the 1,800. So these are the two provisions.
That 15,000 number is basis the law that says a minimum of 15,000 needs to be calculated for the contribution by the employer into the Provident Fund, right?
Right. Yeah. And that's why that 1,800 per month comes, and that's total to 21,600.
21,600. Okay. So, in fact, in years past, even 2 years back, when the old tax regime was still preferable, the government had to come in and say that 5 lakhs would be the limit under which you have exempt.
True.
For the...
That's 2.5 lakh rupees of employee contribution.
Yeah.
The moment my contribution as an employee crosses 2.5 lakh rupees, that would be taxed. The interest I get, that would be taxed.
Right.
So, but still that's, Alex, that's quite a big limit.
Yeah.
Consider that somebody is having a 40 lakh rupees of a salary.
Yeah.
And 20 lakh rupees of a basic. Normally 50% of your CTs is a basic, right? And still 20 lakhs, 12% is 2,40,000.
Sure.
So it's a good limit, but yeah, government came and...
because a lot of people were pushing their entire basic into VPF.
Even the VPF, yeah, that was there.
Into the voluntary provident fund, to spell that out. So the reason I'm asking this is that the option exists, right? Because let's face it, the employee provident fund, it's like that secret investment that nobody pays attention to. It's a good old, back in the day there used to be a motorcycle ad, fill it, shut it, forget it. And that's so true here because it just keeps going, and before you know it, it's a few lakhs. That few lakhs then becomes much larger, and you end up with a very nice nest egg at the end. But the thing is that for a lot of people, that benefit of deduction, which is anywhere between, let's talk about, very basic amounts. For somebody who's contributing even a 10 or 20,000 rupees, you're talking about 6,000 rupees that would now be taxed, that is paid. To someone who's contributing even a lakh or a lakh plus, that's 30,000 rupees of tax that you're paying on your contribution to your EPF. Is that the right interpretation? Since it's not available for deduction.
Yeah, since it's not available for deduction, that's true, because see, anyway, if I'm going for a new regime, there are hardly two benefit of two deduction I can claim it, and none of else I can claim it. But even if you consider that, one aspect of EPF many people are not aware, it's still exempt under new regime, is that the employer's contribution. And many people are not aware, Alex. When I talk to a client or a prospect, they are saying, okay, so sometimes we have to tell that you increase the contribution because you don't have any fixed instrument in your overall portfolio. And this is something like risk-free 8.25% GOI is giving, Government of India is giving you. So if you see that, it's quite a huge benefit. And like you rightly said, it's fill it, shut it and forget it.
So, but even if you increase it via VPF, your employer's contribution remains at 12%, right? Or
right. No, that would remain at 12% only. I'm just saying that if I'm just going for a basic, which is 1,800, instead of just keeping at 12% of basic, forget about, of course, deduction under ATC, which I will not get under the new regime. I'm saying still, I think it makes still makes sense.
So, okay, but we'll come to that in a bit. What I want to ask is, since the option exists to limit your contribution to 1,800 per month, what is the available option for deduction? Because it's one of two, right? You have the standard deduction, which is available to everybody, and the second deduction that is available is NPS.
True.
How does that work, first of all?
Right. So NPS, you get a deduction under two different sections.
Okay.
So 80 CCD 2 Okay. That is like EPF, you might have a contribution setup of NPS at your organization level. So if my employer is giving the NPS benefit, and if I contribute up to 14% of my basic salary under the new regime, then I get a deduction in the new regime as well. Okay. If I want
for your contribution,
for my contribution, only that, because in NPS there is no option like employer-employee both will contribute. So as an employee, if I contribute to NPS from the employer side in the organization, whichever NPS I have, and why I'm emphasizing on that, because there is other section which is 80 CCD 1B that says even if I am a professional, I can go and contribute up to 50,000 and I can get a tax break. But that's only available under the old
tax regime, right?
So these are the two ways I can contribute. In old regime, I only get the 50,000 benefit.
Yeah.
In new regime, I can contribute up to 14% of my basic, and in old regime also, I can contribute 10% of basic. So even for old regime, these two sections available. In new regime, only the one section is available, which is 14% of basic.
Okay, so now the question arises, and you already kind of gave the answer, but I want you to tell me why you're saying that. Since the option exists to reduce your contribution to the EPF to the extent of 1,800, you would technically, if your contribution, especially if your contribution is upwards of 1 lakh, and there are, I know that that would mean that you have a higher salary.
True.
But if your contribution is upwards of 1 lakh, then notionally you would save tax by contributing 14% to the NPS instead of the EPF. But when you have the redemption at the age of 60, you would then have only 60% currently that is available to you tax-free. So does that set off the benefit that you would have?
I agree, and that's one of the reason, Alex, we don't recommend to invest in NPS.
Okay.
In many cases, of course. Okay. So because I never encourage anyone to just invest based on the tax benefit. Right. That's we always saying, right? And you also believe in that. So that's one of the reasons that I just don't need to invest into NPS because it's giving me either a 50,000 or a 14% of basic as a tax break. My logic here is that when I'm entering into a product, I should be knowing that how the exit is planned, at least at this juncture, right? So first limitation is that only the 60% of the corpus at the age of 60, I can withdraw without any tax.
Right.
The rest 40%, I have to compulsory opt as an annuity.
Yes.
The current annuity rate is in the range of 5.5%.
Right.
So the poor return. Also, the limitation that now I have to opt that as an annuity, and whatever pension, Alex, I receive as an annuity, that's also taxable
at slab rate.
At slab rate at that point of time. Right. And I'm considering we would be having some tax payable at that point of time also. So I'm not in favor of this. Along with that, I want to add one more reason. I can't control the allocation, even in the active choice. Even if I'm 35, the maximum I can put in the NPS in equity is only 75%. And that also keep reducing.
Right.
So that's one of the reason, or two of this reason, that I'm not in favor of much of NPS.
And the other thing is also flexibility, right? Because I'm talking about when you need the money. Not everybody wants to work till they're 60.
True.
And so from that perspective, you want the flexibility to say, I'm investing in equity through a mutual fund or directly into equity. You can pull that out when you want to. Okay, so points well made. I do want to ask you about something, because this is a working that you've put together, and I keep getting questions from my viewers about what is that break-even point for old tax regime versus new tax regime. At what point do I see that my deductions need to be beyond this point, and only then it makes sense for old tax regime? How does that work?
For sure, Alex. And I'm glad that we were the one who founded this concept a few years back, when this whole concept of new and old came in, because this single chart can make a lot of sense. And see, people already started getting email from HR that select your regime. And if I don't select, new regime is by default.
And we'll pull that up while you're speaking about it. Let's pull that up on the chart. Yeah.
So if I go through the chart, Alex, if there are, as we can see that on the left hand side is my CTC.
Yes.
If my CTC is that amount, and on the right hand side in the chart, as we can see, the amount of deduction and exemption if I can claim, because you know your CTC, you know what are the deduction and exemption you can claim. And what I mean by deduction and exemptions, your ATC, your ATD, your flexi benefits, your HRA, your LTA, you put all together.
Section 24.
Yeah, Section 24 of housing loan, interest. You cover anything available which is more than 50 of the deduction and exemption available under old regime, including the 50,000 of standard deduction.
Okay.
Right? If I put all this together, and let's say my salary is, for example, 15 lakh, as we can see in the chart. If 15 lakh is my salary and 5,93,000 is the amount of deduction and exemption, that's a break-even point, which means the tax I pay under old regime and new regime is same.
So there is no benefit to shift over, which means that your deduction, even at 15 lakhs, needs to be sizably more than that.
5,93,000. And once it crosses 5,93,000 Alex, which means old is beneficial or otherwise new. So by looking at this chart, if I just go forward and tell one more example, which is 24,75,000 and above. Anyone who has salary of 24,75,000 and above, they need 8,50,000 of deduction and exemptions to break even as per the current taxation system.
Wow, that's a lot.
Now, yeah, that's a lot. But see, your HRA, your LTA and few of the flexi benefits, and like you rightly said, 80% now it makes sense to go to new.
Yeah.
But my appeal is here is that just analyze once, and now you have this chart available. Just see through it. Does this make sense?
So, but then the other thing also is you would be able to do the math and see this, right? So if your threshold is crossing by a few thousand rupees, or even if it is crossing by 20,000 rupees, the incremental would be to the extent of what 6,000 rupees of tax that you're paying. But at the same time, the kind of headaches that you've had to go through to put all of that documentation together, of course, 6,000 is a big amount. Don't get me wrong.
No, of course.
But a lot of people might say, hey, you know what? That's not necessarily worth the effort that I'm putting in. I'm actually putting an effort maybe more than 3,000 rupees.
I completely agree. You need to see that how much amount it is crossing, and does this make sense or not.
Yeah.
But Alex, sometimes what happens? Let's say you and your spouse both are working.
Yes.
So one of can go for old, and the other can go for new. Now you claim all the HR and all the other things, and let her or him claim the new.
Oh,
so
that
this
makes
is what
sense.
so that's what I'm saying, that tax planning you need to be go into the detail, then it makes sense or not, and then it would make a lot of sense, because if just have HR in my name instead of both of us name.
Okay, so there's one last aspect that I want to cover here, because senior citizens are going to benefit in a very big way this year, right? Because first of all, you have the 12 lakh rupee rebate that is available. Actually, it goes to 12.75, because you're talking about interest income, which a lot of them get. Up to 12.75 lakh rupees, they don't pay tax. So that's basically interest, tax-free interest that they're claiming over the course.
That's only 12 lakh, not 12 lakh 75.
Oh, it's not 75.
No, because 75,000 only the salaried gets a standard.
Oh,
deduction.
that's a standard deduction, right.
If I'm let's say anyone, I'm getting just the interest income, which is taxed as income from other source. That's only the 12 lakh rupees.
Okay, thanks for that clarification. Now, what are the advantages in terms of the TDS? Because there's also a change, right?
That's a change.
So there's less of a headache or a hassle. Explain that.
So Alex, practically up to 1.5 crore of FD any senior citizen has. That's at 8%, roughly 12 lakh rupees of interest.
Yes.
So practically up to 1.5 crore if you have in a debt, when it's fixed deposit or this kind of a product, you don't need to do anything because you have tax-free income.
Yes.
So that's the biggest change you said. And also now government don't want to levy TDS up to the 1 lakh rupees of interest. This is typically for a senior citizen who are having a lesser income. Earlier this limit was up to 50,000. That has been extended to 1 lakh rupees. So if your total interest income is less than 1 lakh rupees, then there would be no TDS.
Okay.
So
that's a great clarification. One last thing that I want to talk about, and we'd spoken about this very briefly when you came in last time, and I didn't get to ask you about this, right? Is that if somebody is not earning any income, but only has capital gains, and there's not a conditionality that is often seen, there is a 4 lakh threshold that they hit, at which point they don't pay tax, right? Anything below that, explain that.
Yeah. So Alex, many people are not aware that up to 0 to 4 lakh, that's a slab in the new regime, right? So in 0 to 4 lakh rupees, it can be any income. Specifically this short-term capital gain, long-term capital gain, you don't need to pay any tax. So assume that, like you're saying, if any person has only capital gain income of 5,25,000.
Yes.
Long-term capital gain of 5,25,000. So on 4 lakh, no tax. On 1,25,000 is exempt. So practically a person who is not having any income and only long-term capital gain up to 5,25,000, no tax.
Okay, so that's great to plan. And also if you have to plan your tax over the course of several years and you intend to withdraw from equity, then that's something that you can use to plan your tax efficiently as well. But Nitesh, thanks so much for joining me today. Absolute pleasure having you on the program.
My pleasure. Thank you so much.
All right, it's now time for Tech Tuesday. This is that segment of the show that we talk about consumer tech and everything that we spend money on. Now, when it comes to buying a phone, a lot of times people break the bank buying the best tech out there. But you don't always have to do that. You get very good phones on a budget
And there could be various reasons for you to do that. Either you simply think that it's not worth it, or you feel like you can't afford that kind of a phone, at least for now. So what are the options available for you below 25,000 rupees? Smartphones, of course. Join me to talk about the options that you have is Dhruv Bhutani, who's a tech expert. Dhruv, it's an interesting topic, I think, because there are a lot of people out there that maybe they're just starting out and they don't want to spend that kind of money, 70, 80, 90,000 rupees on a new phone. But there are several good options out there. What stands out to you?
Absolutely. And like you said, you don't necessarily even need to spend 70, 80,000 rupees to get a good phone anymore. That's the trickle down economics version of technology, where all the great specs have trickled down to the budget, or I would say the mid-range segment. And around 25,000 rupees, I think one of the best options right now is the Nothing Phone 3A. And this company has been hitting it out of the park with a great balance of specs and user experience, and that's exactly what you get with the Nothing Phone 3A as well. And in particular, this phone stands out because it's got an exceptional zoom camera. Now, that's one area where a lot of mid-range phones skimp out on, and Nothing hasn't. Of course, you also get the distinctive design that Nothing is known for, including the fancy lights at the back and the unique transparent look of the back panel. Additionally, it's got a great user experience, very light, no ads, no bloatware, and all of that comes together to create a phone that's delivering a lot of bang for your buck.
And we'll talk about some of the specifications here, but there are a few more options that you've named as well, and some that have a specific thing that is working for them. Let's run through the list.
Right. Yeah, another option that I would highly recommend is the Vivo T3 Pro. Now, Vivo's kind of built its reputation around exceptional selfie cameras and overall imaging, to be honest. What you get with this phone is maybe you might compromise in a few areas. Maybe you're not getting a design which is going to stand out as much as the Nothing Phone 3A. But in return, you get a camera which does deliver the goods. Especially the selfie camera. They've got excellent camera processing, very natural. Even the portrait effects are very natural to look at. It does not look like a Photoshop cutout. So if pure photography is something that you're looking at, the Vivo is something that the Vivo T3 Pro is a phone that I would rank a little higher than the Nothing Phone 3A. Another option is the Poco X7 Pro. Now, this phone is will lean a little more towards the gaming side of things. In fact, the entire design language is also very enthusiast focused. You get a great processor, lots of RAM, or ample storage, all the goods that make for a great gaming experience. But with the Poco, you again compromise on the imaging experience. Additionally, it's got some bloatware on board, which might not be to everyone's taste, but if great performance and great gaming is something that is a key priority for you, the Poco X7 Pro, as well as another option that I'm going to get to, would rank a little higher than the Nothing Phone 3A.
Okay, there's also the Vivo. So you've spoken about the Vivo. There's also the Motorola Edge 50 Neo. What stands out about this one?
The Motorola stands out for its interface and user experience. Now, I mentioned that the Nothing Phone 3A does have a very clean and bloatware-free experience, but Nothing is still doing its own thing with the interface. It's got a fully customized, stack of icons. The fonts are unique to them, so it's not quite stock Android. Motorola, on the other hand, takes a page out of Google's playbook, and it's a very pixel-like software experience. You might not get all the same AI features as that you get on the Pixel series, but it's as close to stock Android as you can get. Still, it does have some Motorola-specific embellishments, but they're all pretty handy additions. We're talking gestures to accomplish certain actions, simple things like, you flip your phone, it'll silence a call. A lot of things that we take for granted, but it's all there. And the overall build quality is also pretty good. And it's a very understated looking phone, which is something that I appreciate, and I think a lot of people do look for. Not everybody's looking for for a phone that's going to stand out in a crowd. So if that's you, maybe an office goer, somebody who just wants a normal looking phone, the Motorola Edge 50 Neo is certainly a good option.
Okay. Now, like you said, a lot of these phones tick some boxes, but they leave some unchecked. When you're looking for a phone, sometimes what you're looking for is great battery life, because you don't necessarily use all of the functionality of a smartphone, but you still need, you want some of that available to you when you need it. But you want a hassle-free experience, and you want a long life of battery. Is there something that ticks that box?
Absolutely. So most of these phones are going to have pretty good battery life, because generally battery technology has advanced. You're getting 5000 mAh batteries pretty much across the board. But there is one phone, the iQOO Neo. But there is one phone, the iQOO Neo 10R. It's a bit of a mouthful, but it has a 6400 mAh battery. Now that's you can't beat physics and chemistry, and that's an absolutely massive battery, which is going to get you through 2 days of use. If you're an average user. But again, this phone is also designed for gaming. It has a Snapdragon 8S Gen 3 processor, which is basically like a flagship from last year, a flagship chipset. So you're also going to get great gaming potential. And basically that is why iQOO has also given it a big battery, so that you can game all day long. But if whatever be your reasoning behind requiring a big battery, you can't beat the 6400 mAh battery on the iQOO Neo 10R.
And this is also a phone that is an alternative to the gaming phone that you spoke about. Why is that?
Indeed. Well, iQOO's software is not to everyone's liking. They do tend to go a little overboard on the preloaded software. There will be a few ads. And certain ways of approaching the software interface, which is not to everyone's liking. So it's a good alternative, I think, to the Poco, which takes a slightly different approach. Poco software is a little more Xiaomi inspired. I think both of them are great phones. It just comes down to your preference.
Let's round this off, because you've given several options, but one stands out, and the one that you spoke about right at the start, it seems, is your pick. And why is that?
I think it's all about balance. Like at the end of the day, unless you're a college-going kid who's playing a lot of games, most people are looking for a well-rounded, well-balanced phone, and the Nothing Phone 3A strikes that. The design is premium enough, even though it's pretty distinctive, but you can always put a case on it. The performance is good enough. The cameras are also very good. It's not lacking in any way, even if it doesn't stand out in any one specific way, well, other than design. So I think if you're looking for a well-rounded package, reliable software, clean software, no ads, no bloatware, I think the Nothing Phone 3A is the one that ticks most of those boxes.
Of course. And a lot of people actually go in for that kind of design. Dhruv, thanks so much for joining me today. Pleasure having you on the program as always.
Absolutely. Thanks.
All right, that brings us to the end of this edition of Your Money Matters. Tell us what phone you like in that list that we spoke about, and what you think about when you're going out to buy a phone. That brings us, as I said, to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Founder, Carnelian Asset Management and Advisors. Vikas, what a great day to have you on, especially because I know that smile is going to come. We're getting you on a good morning where, that resilience and faith, what we're seeing is a testament of the Indian investor right now in the markets, isn't it?
I think, of course, Indian investor, and also more importantly, even Indian economy. We all know that, of course, there's a lot of chaos happening around the globe, led by the tariff war, lots of uncertainty. We all know that, and at the same time, it's also a matter of fact that India is relatively insulated from what's going all over the world. And I think it's, in my opinion, testament to that fact But yeah, I mean, you can't remain unscathed when there's a fire all over the place. I mean, you are bound to get some amount of heat. But when the dust settles down, when the fire settles down, obviously, one knows that, which countries or which economies will stand tall. And India is surely one of them.
So, okay, hi Vikas. I think we were talking about this as a bit of a theme, right? Because in this chaos that is playing out globally, ultimately, everybody seems to be focusing inwards. And various economies are already starting to have measures announced to bolster the domestic economy. We're speaking on the cusp of the RBI monetary policy outcome, where in all probability we're going to see another rate cut or measures at least to bolster growth. How much of a factor is that going to play, in your opinion, in further adding to what the government has already announced on the fiscal side?
We must understand right now what's going on at a global stage is very unprecedented. One does not know what will happen when you wake up in the morning, what kind of announcements will come, what kind of, and whenever these kind of announcements come with a far-reaching implications for the global economy, it is natural that investors will get worried and tentative, and especially the short-term investors tend to act and react. And that's what creates volatility. In that volatility, any short-term measures boosting growth for economy can be ignored. I mean, RBI did a major policy pivot, in last 2 months, and markets kind of ignored that. Already RBI, gave a growth stance, accommodative stance with a rate cut in the previous policy also. So I think that has been ignored. So that can be ignored. I think RBI has a lot more room to sort of accommodate Indian economy, boost Indian growth, which I am sure they will follow. But don't assume that will be kind of cheered by the market in the short term. But having said that, whatever is happening globally, India is one market. See, our exposure to the US so US exports is very, very less. We're less than 1%, less than 2% of the total GDP. And our tariffs are lowest as compared to, most of our competition, and whether it's China, Vietnam, or any other place. So, if US, let's say, that part escalates, India tends to benefit net. India does not tend to lose. And it is also impossible that US starts manufacturing everything overnight or even if they start manufacturing, the cost of US labor and cost of Indian labor or anywhere else can't be compared. So, manufacturing, high-end manufacturing to some extent might move back, but that's not changing game overnight, for India at least. It might have negative implications for China. So in whatever chaos is going on, if you dispassionately, objectively observe, I think India stands very, very, net beneficiary of all this chaos. Of course, in shorter term, it also creates market volatility like anything else. But if you just cut the clutter, I think India is far, far better placed. And as we navigate through this volatility, India will come quite solid out.
Because the question might be that, could it be that while Indian companies and the economy might be a net beneficiary, because of, let's say, the higher trade war rhetoric, plus maybe some currency moves if they were to happen from China's side or otherwise on the devaluation side, that multiples could stay compressed? I mean, we might be trading at circa 18, 19 times. Maybe the earnings still stay stable, but the multiples go down, and therefore the markets correct a bit more. Could that happen?
It's already happening, Neeraj. I think if you see, it's already happened to some extent. In a shorter term, that's what happens, right? Uncertainty reduces the multiples. Uncertainty increases the risk premium, and thereby, sort of reducing the multiples. It's a very natural formula, which is what we have seen. And like I was saying, let's say whether it is 6 months, 12 months, whatever the time frame is, as the uncertainty settles down and more and more people realize that India has done very well, India is standing very well in this whole thing, that same multiples might come back and will come back. And I want to, here one very, very important point I think people should not miss is our ability of our leadership to navigate through these kind of crises very well. I mean, we did very well in Ukraine war crisis, where we managed Indian inflation superbly well by importing Russian oil And same thing, I do believe that our leadership will have a fairly mature approach in terms of managing through this crisis. And we are not seeing any loose statement coming from India's side. We are having very mature sort of approach. And I do believe that India will have a bilateral trade agreement with the US very soon in terms of there will be some give or take away, but it will be win-win outcome. And hence, I feel it will be a lot less disruptive as compared to any other place in the world as far as India is concerned or India and US trade is concerned. So net, I feel that as the volatility or chaos or confusion settles down, which could be 1 month, 2 months, 3 months, I don't know, or nobody knows for that matter, but it will surely settle down. And once that settles down, I am sure India will come out very, very strong and solid.
Vikas, what is the strategy that people who are watching us right now should adopt? Focus on domestic consumer-facing companies, or where demand is not too impacted by global headwinds? What would you suggest? What are the sectors you're liking?
Today, our banking sector is one of the best, in the world in terms of asset quality, capitalization. How does our banking sector's lives change because of ongoing US war or whatever, tariff war, right? That's very solid. And most of our, banking sector is lending domestically. It has no exposure, almost zilch exposure abroad, right? Now, if those same stocks you are getting 10, 15, 20% cheaper than what you were getting a few months ago, isn't it a great opportunity? So that's the point I'm saying. So, because of elsewhere, you are getting same companies, same business, same growth profile at a lower price. And these are the kind of opportunity which comes once in a while. So I would say stay focused on some of these companies which are very good domestic, entire banking pack we like. We think that pharma will continue to do well. Whatever correction is happening in the pharma, US cannot afford to have aggressive tariff in pharma. Even if they have, I think it will have to be passed on, because the margins which pharma companies make are huge. We had recently US regulator came here, FDA regulator came here to woo Indian companies when they were facing medicine shortage post-COVID, because Indian companies stopped investing for US business. So there's no way, in my opinion, pharma companies will get impacted. CDMO, again, a great opportunity, does not get impacted. Many domestic consumption-based stories, how would they get impacted with the ongoing this thing? On the top of it, we're talking about interest rates coming down, inflation coming down, with the oil prices, being where it is, or commodity softening. So all those things, if you, again, I'm saying, think with a peaceful mind, they are all, once the dust settles down, when the noise settles down, they are all positive, pointing towards one direction, which is positive.
Got it. Well, this is music to the ears, and viewers, while we thank Vikas Khemani today, I urge you all to hear the podcast that we did with him, wherein he's spoken at length about some of these things, and they hold true right now because it's not a very old one. But Vikas, take a moment to thank you for joining in today. We expected it to be a very dramatically different day than what it is right now, but great to have your opinion this morning.
Thank you. It's always good to chat with you.
Yeah.
Samir Arora, founder and fund manager, Helios Capital, joining us this morning. Samir, very good morning to you. These are interesting times where, and I say this, we're in times where everyone becomes part economist, part geopolitical expert, and of course, market expert, so everyone is. Trying to understand what Mr. Trump is doing and saying. What is your take? Is he maybe holding out for negotiations? Will we see some calm before April 9th?
No. So the good thing about Trump is, and this whole his cabinet or whatever, is that they all directly speak to the public. There is no need to read reports by Goldman Sachs and Morgan Stanley's, because you can directly hear what President Trump is saying, what Peter Navarro is saying, what that Besant is saying, what Ludwig is saying. And all of them I have heard out of interest, but I didn't realize it will be profitable for me. But for the last 4-5 months, I have literally heard every line that these guys said in every press conference that Trump did. And if you see, President Trump has been saying these things for the last 25 years. There was an article in Wall Street Journal which also had these videos, which are also available separately on Twitter and all, that in 1987, he was talking about how Japan and I forget, Korea are taking advantage of the fact that they sell their auto into US, and when you try to sell it back, it's very difficult and all that. He believes in it. There's nothing that is going to happen till 9th, and every line that these commentators have said is so obviously wrong. Just let me give you one example. So when this Federal Reserve, had its whatever press conference, they said that we are treating tariffs as transient. And then somebody asked them, that, what do you mean by transient? So he said that the tariffs will remain for 1 month. So even at that point, which is like maybe 20 days ago, for somebody to think that this was all a gimmick and then to be surprised, percentages obviously nobody could get right, but to be surprised that there'll be tariff across the board, that there's an auto tariff coming, all that they have said 5, 10, 20, 30 times. And yesterday only, that means I heard it in the morning, there's this big interview of Peter Navarro with one of your global channels, which is your competitor in India also. And you just listen to it and you know that unless he's being thrown out tonight, he's saying that countries offering zero tariff is not enough. That is just a starting point.
No, so the long and short of it, Sameer, is then what is going to happen? Are we heading into? Are we heading into a Bill Ackman, kind of picture of a nuclear economic winter?
See, that depends on what you mean. We are used to high volatility, and because we do India and the US, these hedge funds in US, people, somebody wrote to me saying, oh, these guys are blowing up. I said they are blowing up because they consider 5% down as blowing up. So then they are blowing up. So the point is that the uncertainty is very high, but please let us not take that Donald Trump till today is just trying to bargain. He is serious about it. Yesterday, he was sitting with Netanyahu and they asked him, oh, Israel is your friend, but you have put the 17% tariff on them. At that time only started, Israel has taken advantage of us. We are sending, I think, $4 billion a year or something and more. And so what I mean is, in front of the president, who's president of Israel, or prime minister, whatever, he's saying separately that he's my friend and he's a great partner. And then in 1 minute he says, but they are taking advantage. Same thing he says for India and for Mr. Modi, that he's my friend, but we have to charge. So he's serious. Now the question is, it was okay till now, but when China responded, that is where the uncertainty has gone to a high level, because you can't do deals. You tell me, we get excited, and I'll tell you about India later, but we get excited that because the electronics tariff for India as of today will be 27% or 23%, let's say, or whatever. And for you, China, something else. So therefore, Apple will suddenly move to India. Because for now, temporarily, without knowing the final negotiation, without knowing whether Trump will remain or the policies will remain after 4 years, they will suddenly move things to India in 1 minute. I'm saying this is high uncertainty. Do not do things which are related to US. And also separately pray every day that US does not fall a lot, that China also does not fall a lot, because if they all fall a lot, we may fall little, but we will then fall. So please, let's not every time look only at relative beneficiary. You want the world to somehow muddle along. Little lower is great, but much lower reminds me of bad days when every market gets connected.
Yeah, that's true. Sameer, good morning, and very well put, by the way. Thank you for doing that. And maybe the simplest way to understand what Trump is saying is to ask you, because if you're hearing everything that he says, I don't know if too many people were doing that, to be honest. But therefore,
I actually enjoyed. I enjoyed because he's so hilarious, so humorous, so funny, and also there are some points which you can. So please, everybody should listen to all these press conferences that he does, because half of them are quite funny otherwise.
Okay, well, maybe I'll start doing that too if sleep permits.
On YouTube, next morning, so you don't have to be up in the night doing it.
Yeah, well, but maybe early morning, I repeat. But nevertheless, Sameer, the question therefore is that did this incoming downtick in world markets come as a surprise to you, part one, or were you kind of prepared for it? And do you reckon there is more to go? Because as you said, there is uncertainty. China and EU too has responded that they are going to be pretty serious about this. And if those two blocs react and retaliate, then uncertainty does stay high. So does it impact risk assets further?
Yes. So the thing is, I got one part right that in Feb only I sold off my US stocks. So we have a global fund which was 99% invested on Jan end, and everybody was bullish on all these same old stocks. But there was so much talk and so serious talk, and that's what I'm saying. If you hear it a few times, at least you believe it. I believed it, and it turned out to be right, that there'll be too much uncertainty. For India, what we thought was, and still think a little bit, that India is a relative beneficiary. There is not even 1% doubt on it. Okay. And it's a relative beneficiary, because the scale of our imports, exports is so little that really no economy will be affected by that. Just look at the numbers for a minute, that our deficit is about $40 odd billion. That's how they got to 40 divided by 90 something. They got to that 45 divided by that, they got that 52% number or something, and then 46, and then they made it 23, 26, whatever they made. In that also, what is counted as our exports, I don't know exactly how much, but maybe 5, 7, 10 billion would be just the mobile phone exports to US from Apple. But literally that we are not exporting 10 billion. We must be importing 8.5 billion from China, adding 1.5 billion value and sending 10 billion to US. So the US guys say, hey, you sent us 10 billion of your exports. All these things in a normal discussion, I'm sure they will understand. But the point is that the difference, to bring it down to a 10% rate, which will remain forever according to me, even if Trump is not there, you have to bring it down by $25-30 billion. That you can easily do by, maybe 10 billion of oil. I think it's not easy to say, we can import $25 billion of oil and it is done. Because I think US is no longer accepting these simple sort of superficial changes to bring down these numbers. That's why this Peter Navarro's thing is important to understand that even a zero tariff is not enough. They want real change across industries and non-tariff barrier, blah, blah, blah.
I'm joined with Mr. K.K. Mistry. Mr. Mistry, welcome to this conversation. Thank you so much for taking time out and coming to our studio for this.
Thank you for having me.
Mr. Mistry, I want to first touch upon the fear and greed concept, right? Because that's something that motivated a lot of movement in the market over the last 2 days. Today, finally, there seems to be some sanity returning. I wanted to get your view as to what should an investor look forward to at a time when globally there's so much uncertainty.
Well, frankly, if I was an investor, and I do invest a lot, I would always look at a long-term view. Never get tempted by the short-term ups and downs in the market, because when you're investing in stock markets is a long-term story and you have to stay invested. I think the market reaction over the last 2 days has been exaggerated significantly. If you look at our economy, you have to look at the economy, not look at market. Markets will go up and down, but you have to look at economy, because markets will ultimately follow what the economy is doing. And in my opinion, the Indian economy is strong. It's very robust at this point of time. The tariff war is going to hurt us less than it's going to hurt our competitors. We have to look at things not in absolute terms, but in relative terms. So, first of all, if you look at what is exports. Exports today is about 22 or 23% of our GDP. And then within that, exports to the US are about 17% of our total exports. So if we look at that picture and work out the arithmetic, by my reckoning, the impact on GDP should be about around 40 odd basis points. Not a very material number. Then we come to the benefits that come out of this. The first is the sharp fall in oil prices. I've always said in many interviews that for us in India, the single or one of the most important criteria is oil, because we are such a large importer of oil. And when oil prices come down, it's a big benefit to us, whether it's in terms of current account deficit, fiscal deficit, GDP growth, and inflation, and so on and so forth. So with oil prices having come down so much because of the global uncertainty, we are clearly a beneficiary. And the second is the liquidity and first of all, let me first compliment RBI. I think RBI has done a fantastic job in the last 4 or 5 years, ever since we started COVID, to make sure that we did not get the kind of tearaway inflation that the Western world saw. And now we are seeing RBI easing, RBI infusing liquidity in the system. My expectation is that there is a credit policy tomorrow. We'll probably see a rate cut tomorrow. So more liquidity will again enhance the GDP numbers by about 10 odd basis points. So net, in my view, the impact on GDP will be not more than 25 to 30 basis points, which is not a material number at all. And now if we are to compare ourselves with China, with Vietnam, with Bangladesh, which are some of the countries which compete with us for exports, we are so much better off. So let's look at it from the perspective that on a relative basis, we are far better off today being in India than being in any of these countries.
Let me also ask you this question. This view that India is better placed than a lot of other Southeast Asian economies is now becoming more prominent in discussions. But I wanted to get a sense. One of the economists who was speaking on our channel a little earlier had said that India might have the largest lifeboat, but they must remember that they're still in the ocean with the rest of the countries. So it's not like we've gone past the choppy waters yet. I mean, yes, we are relatively safe. But do you think those choppy waters have say, a second order impact at all?
So the primary effect is not going to be very material. Okay. I think a lot of people are worried about the second effect that can come because of tariff. Second effect coming because you see a big slowdown in the US, and if there is a slowdown in the US, what impact it'll have in terms of the IT industry, for example, that job creation will slow down in India. I don't buy that theory. I think first of all, if there is pressure in the US and US economy starts slowing down, you may, contrary to IT spending slowing down, you may actually possibly see IT spending increasing, because companies want to then take advantage of better technology, better systems in order to cut down on manpower costs. So I don't think you're going to see that material and impact, a second impact, or at least that material, a second impact in my opinion.
Okay. One of the other arguments was that there is a system that has been set, let's say over the last 50 years, right? There's a way the world works and the way the world trades. And now you're upending it entirely. You're saying, okay, I don't want to trade with somebody who does XYZ, so I will place reciprocal tariffs on them, and then let's see, and maybe bring back businesses into the US and slightly more insular, inward-looking sort of an approach to global trade. I wanted to get a sense from you, is this even a realistic move? And forget US, for any country.
I think first of all, there will be a lot of negotiation that will follow. It's not that what has been announced today is Cyclostrand is going to happen like this. Some amount of negotiation back and forth will take place. So let's wait for all of that to settle down. I don't think you're going to see trade, such a dramatic change in trade over a longer time frame. Let's give it a little time and let things settle down. You see, markets react whenever there is any kind of uncertainty. And whenever there is uncertainty, markets sort of tend to fall sharply, which is what you saw the last couple of days, where global markets have collapsed a lot. But I think now logical thinking should come into the picture, and you should see the markets getting a little better, unless there is some bad news which keeps coming every day.
Okay, you mentioned a 25 to 30 basis point impact to India GDP, right, because of the current uncertainty. This is also coming at a time when, in general, you're seeing GDP growth sort of taper off a little bit. Does that then add to any concerns?
No. So the way I see it is, if you take the period ahead, I am a lot more bullish and a lot more optimistic about the Indian economy in 25, 2026, because now we've come to a stage where inflation has largely been controlled. Even in fact, inflation was even controlled last year, and controlled very well. It's just that food inflation spiked, and that caused the headline number to go up. But if you look at core inflation, which is excluding food and excluding fuel, core inflation throughout the year was somewhere in the 3.2, 3.3% range, which is not material. So I think now, with the slight change in stance of RBI, more liquidity being injected, we've seen one rate cut happening a couple of months ago. Probably we'll see another rate cut happening tomorrow. So given all of these facts, I would today be a lot more bullish in terms of government spending happening. I would be a lot more bullish in terms of economic growth next year.
personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ.